So, in our previous session, we completed the discussion related to section 9 subsection 3, that is a list of services which are covered under RCM, that Sir, CG, got salads. And you can see one illustration related to the discussion in page number 54. You please take page number 54 and have a look into that. Arpan Singhania is a director in Narayan Limited. The company paid him the sitting fee amounting to 25,000 for the month of January. Further, salary was paid to Arpan Singhania amounting to 1.5 lakhs for the month of January, on which TDS was also deducted as per the applicable provisions under income tax law. Tapasya and Associates, in which Arpan Singhania is a partner, supplied certain professional service to Narayan Limited in the month of January for an amount of 2 lakhs. Discuss the person liable to pay tax in each of the supplies involved in the given case. So, in this background, if you see, so what are the three amounts that you can identify? First, sitting fees 25,000. Okay, so whether this sitting fees 25,000 will be coming under TDS 192 or 194J of Income Tax Act, we need to see. Why? Because if the remuneration which is given by the company to the director is deductible for TDS under 192 of Income Tax Act, then whatever money that is received by the director will be coming under income from salaries. Suppose if the remuneration which is paid to the director by the company is deductible for TDS under 194, either J or any other section, usually it will be J, then in that case, so much of the amount received by the director will be covered under either income from other sources or it will be coming under PGBP. So, whenever the director's income is covered under salaries, which means salary income is not covered under GST, there is no GST on that. Now, in this background, tell me whether sitting fees which is paid by the company to the director is deductible for TDS under 192 or 194, definitely 194. It's not a salary. Sitting fees will be payable to the director only when the board of directors meeting happens. Otherwise, it will not be paid. So, due to that reason, this 25,000 is not treated as salary. Consequently, it will become supply and chargeable to GST. So, first you need to check that. And wherever it is chargeable to GST, director services to company or body corporate will be coming under RCM, where liability to pay GST is on the company. Then next amount you see, further salary was paid to Arpan Singhania amounting to 1.5 lakhs for the month of January, on which TDS was also deducted as per the applicable provisions under income tax law. So 1.5 lakhs is the salary actually. Why? Because it was salary and applicable TDS, means TDS would have been deducted under which section of Income Tax Act? 192. So, this salary will not be treated as supply, it is excluded from supply. Consequently, GST is not applicable in this case. Tapasya and Associates, in which Arpan Singhania is a partner, supplied certain professional service to Narayan Limited in the month of January for an amount of 2 lakh rupees. So, what about this 2 lakh rupees? So, this is actually not paid to the director. This amount is paid to Tapasya and Associates, in which Arpan Singhania is a partner. Okay, so it is not paid to the director. It is paid to a firm in which he is a director. So, in which he is a partner, which means this is not, first of all, director services to company or body corporate. So, because who is providing service here? One firm in which this director is a partner, okay, but the firm providing services to the company, we don't have anywhere under RCM. In that Sir, CG, got salads, nowhere it is. Consequently, it will be taxable under FCM. So, who will pay GST? Tapasya and Associates only will pay GST under FCM, but it is not the company which will pay. Whereas in the 25,000 case, who will pay? The company will pay, Narayan Limited will pay. So, like that, we need to explain and write. And remember, if it is not RCM, the balancing figure is FCM. Then there is one exception to section 9 subsection 3, which you can see in page number 55. At present, this point is not applicable. So, previously, we would have learned that in case of the services by way of transportation of goods by vessel from outside India to India. So, there is a shipping company which is located in Germany, which will be providing services to exporter of goods who is in Germany. And what service they will provide? Transportation of goods by vessel. From where to where? Outside India to India. Okay. This particular service, even if both supplier and recipient are located outside India, this service used to be taxable, and liability to pay GST is on the importer of the goods, who is nowhere connected to the transaction related to the transportation service. For this transportation service, supplier of service is the shipping company and recipient of service is the exporter of goods. But even though both are outside India, importer of goods who is in India was required to pay GST in the past. But at present, there is a Supreme Court judgment in Mohit Minerals case in 2022, wherein the Supreme Court held that this particular taxability is unconstitutional. So GST should not be levied. So therefore, at present, if you get this question, what is that question? Transportation of goods by what mode? Vessel. From where to where? Outside India to India. At present, this service will be taxable or not taxable. But GST not payable. You should not write the service is exempted. You have to write the service is taxable. But GST not payable. Why GST not payable? Because of this Supreme Court decision in Mohit Minerals Private Limited case. Okay, this is an amendment, latest amendment applicable for November 23 exam. Maybe this point could be tested, may not be tested also. Okay, if it is tested, write that the said service is taxable. However, GST not payable because of the Supreme Court judgment. Then next, section 9 subsection 4 you can see. Page number 56. Actually, section 9 deals with liability to pay GST, and as per 9 subsection 1 and 9 subsection 2, generally liability to pay GST to government is on the supplier. But in case of 9.3, notified goods and services, liability to pay GST is on the recipient. Even 9.4, the inward supplies of a promoter or builder. I am a promoter or builder. I make purchases. So when I make purchases from an unregistered person, I will not pay any GST to him, correct or not? Because he is unregistered, he will not charge any GST to me. So because of this reason, there is loss of revenue to the government due to that. So they are asking me to pay GST under RCM. Are you understanding this? So I am making purchases from an unregistered person. Will the unregistered person charge GST to me? No. For example, there are two shops, shop A and shop B, and shop A will be charging GST to you, shop B will not be charging GST to you. From which shop you will purchase? Why from shop B you will purchase? Because you don't have the GST burden. So like that. So why I will buy from an unregistered person? Because I don't want to pay the GST. I don't want GST burden. Sir, we can pay GST and take it as ITC na? Unfortunately no, because I am engaged in making residential flats. Residential flats, rate of GST is 7.5% without ITC. So the rate of GST on sale of residential building is what? 7.5 without ITC, which means I cannot take ITC on my inward supply. So therefore, I will try to reduce my cost na. When I am not getting ITC, definitely I will try to reduce my cost by purchasing from an unregistered person. But if I do that, what will happen? There is a loss of revenue to the government. How there will be loss of revenue? Had I purchased from registered person, I would have paid GST to him. He will remit the GST to government. So there will be some revenue to the government. That too, construction sector and all is a very big sector and costly sector also. Because can we think of constructing a building in 5 lakhs? No. One building, sir, today if you are in city, so if you need to buy one flat, you have to pay minimum to minimum 75 lakhs to 1 crore. Less than that you will not be getting, and crores of business they will be making, who real estate people, and on that, so a lot of materials are involved. Cement you take, 28% is the rate of GST on cement, and all building materials like iron, cement, everything is more than 18 or more than 18 only. It is not less than that, okay. So it is either 18 or more than 18 and not less than that. So that's the reason why definitely there is a big loss of revenue to the government. So what government is telling, boss, you purchased from unregistered person, very good, appreciated. You pay GST under RCM. Why should I pay GST under RCM? Because we are not getting the revenue. And so if you are not paying GST under RCM, then definitely it is like as good as you close down the business and go. Leave India. If you are in India, you comply with the law of the country. Which section, sir, says that I have to pay GST under RCM if I buy from unregistered person? 9 subsection 4. So 9 subsection 4 says if you are making purchase from unregistered person, you have to pay GST under RCM if you are registered person. Will the builder be registered? Of course, yes, yeah. I told one flat itself is 1 crore rupees. What is the maximum threshold limit for registration? 40 lakhs. Won't they sell one flat also? Definitely they will. Their turnover will be in crores, so that will exceed the 40 lakhs limit. Naturally, the builder will be registered. Okay. Is this 9 subsection 4 applicable only to builders, or is it applicable to others also? Like normal, every person it is applicable? No. Only to promoter or builder only this 9 subsection 4 is applicable at present. Maybe in future they may be adding, but at present only for promoter or builder. Okay. So now say this. Promoter or builder who is making inward supplies can be divided into two: inputs and input services and capital goods. If the promoter or builder is making purchase of capital goods, always you should buy that capital goods from a registered person. If he is making purchases from an unregistered person, then he need to pay GST under RCM at the rate applicable to the capital goods. What are the capital goods that can be purchased by promoter or builder? So concrete mixer, then building like for carrying the cement, etc. and all, they will buy. Then for laying the what is that, foundation and all, so they will keep some artificial pillars like temporary pillars, then cranes, lifts, temporary lifts. These are something which are used by them for construction. So those are their capital goods. And whether it is purchased from RP or URP, you should see. If it is purchased from RP, already they paid GST to that person, correct or not? So you don't have to pay any GST under RCM. Had they purchased from URP, they need to pay GST under RCM. At what rate, pa? At the rate applicable to the capital goods. Is there any relaxation here? Please see this. Purchase from RP, GST not payable. Purchase from URP, you need to pay GST under RCM at the applicable rates. Is there any relaxation like 10% we can buy from unregistered person, or 20% we can buy from unregistered person, like that? No. Means all the capital goods should be purchased from registered person only, else you pay GST under RCM. Whereas in case of inputs and input services, they have given a small relaxation, because naturally not everything can be purchased from a registered person. Example, sand and all cannot be purchased from registered person. Even bricks also cannot be purchased from registered person, because that's an unorganized market. Due to that reason, what they are telling, okay, 80% you buy from registered person and 20% you can buy from unregistered. We are allowing you to purchase 20% from unregistered person. What is this 80-20 of what? Total inward supplies you will have in a year, na? Total inward supply, total inputs and input services that you buy in a year. In that, say for example, total is 150 lakhs is what your purchase is in the year. In this 150 lakhs, 80% should be from registered. What is 80% means? 150 into 80%. So that is 1,20,000 should be 1,20,000, yeah. 120, correct, 120 lakhs. 120 lakhs should be purchased from a registered person. Remaining 30 lakhs can be purchased from unregistered person. It's okay. If you buy the 30 lakhs from unregistered person, no need to pay any GST under RCM. We are allowing you. But cement always should be purchased from a registered person, else you pay GST under RCM. Means in the 20% relaxation, that is not there for cement. Means cement always should be purchased from RP. If not, you pay GST under RCM. At what rate? What is the rate applicable to cement? 28%. At 28%, you need to pay GST, because big revenue not to government, so they don't want to sacrifice that. Whereas other things you can buy from unregistered person. To what extent? To the extent of 20% of the total inputs and input services in a year. Now, while counting this total, don't include a few things. What are those things we should not include? Electricity. Why? Because on electricity there is no GST. It is exempted. So sale of electricity is exempted. That's why electricity you take out. Naturally, when you buy electricity, it will be from an unregistered person only because they are not registered as electricity is exempted. Then high speed diesel motor spirit. What is motor spirit means? Commonly known as petrol. So this diesel, petrol and natural gas are non-taxable supplies. So whenever you are buying, the supplier will not be a registered person. It's okay, take out. Then why TDR, FSI and long-term lease should be excluded? Anyhow, TDR, FSI and long-term lease is covered under RCM. Anyhow, TDR, FSI and long-term lease is covered under RCM, where liability to pay GST is on the recipient. You understood or not? So this TDR, FSI and long-term lease of land, anyhow it is covered under RCM, where liability to pay GST is on the recipient. Correct. Now again, why to bring it under 9 subsection 4? Because it was already covered under 9 subsection 3. So what are the 5 things that we need to exclude? Electricity, petrol, diesel, natural gas and TDR, FSI long-term lease. But alcohol also non-taxable supply, na sir. ATF also non-taxable supply. And crude oil also non-taxable supply. Why that is not excluded here? First of all, no one will buy that. So why a builder will purchase the alcohol? It is no way connected to construction. Okay. So the builder will have workers, they will buy alcohol. Why builder will buy that? Builder will not buy that. If you buy also, it will not be accounted expenditure. So some other business expenditure like that he will be showing. Okay. So then what about crude oil? How crude oil is relevant to construction here? How ATF is relevant for construction? So these are not relevant. That's why not given here. Okay. So now what is that you need to do? Step number 1. Come on. First you take capital goods. Check whether it is purchased from registered person or unregistered person. Purchased from registered person. Ignore. Ignore. Purchased from unregistered person. Pay GST under RCM. At what rate? At the rate applicable to capital goods. Okay. So I'm just writing this steps that is involved so that easily you can remember. And whatever handwritten notes that I am writing, everything I am writing in a single document only, and I will make it as a PDF and I will upload it in the YouTube lectures. Even I will share it in the Telegram group also, so that you can have access to this. But if you want to make note of certain points, you can also make note. In case if anything misses also, you can cross check. That's why. Then, so step 1. What is the step 1 that we need to do? Step 1, check capital goods. So capital goods, whether you are purchasing capital goods, whether you are purchasing from registered person or unregistered person, you see. Suppose if you are purchasing from registered person, what is your answer? Pay or ignore? Ignore. Why? Because already you purchased from a registered person. Suppose you are purchasing from unregistered person. So pay GST under RCM. At what rate? At applicable rates. At applicable rate to capital goods. At applicable rate to capital goods. Okay. Then next we have to see inputs and input service. Total inputs and input service. In the total inputs and input services, what and all should be excluded? 5. Electricity, petrol, diesel, natural gas and TDR, FSI long-term lease. How much is the permissible limit up to which we can buy from registered person and unregistered person? 80-20. Okay. Now you are purchasing say 90% from registered person. Okay. You are purchasing 90% from registered person. What is the purchases from unregistered person? Balance 10%. You achieved the condition of 80%? Yes. Now in the 10%, check whether cement is there. If cement is there, definitely, that is, for example, 150 lakhs per 150 lakhs into 90% is what? 135 lakhs you purchased from registered. Baki how much? 15 lakhs. In that 15 lakhs, you purchased cement. Okay. Definitely you need to pay GST under RCM at what rate? 28%. Suppose in that 15 lakhs, we have other materials like flooring tiles or bricks, sand, paint, etc. and all. Whether you need to pay any GST under RCM? No, ignore. No need to pay any GST because already you achieved the condition of 80%. Understood this? Whereas, if you are purchasing from a registered person, only 75%. only 75% you purchased from registered. So whether you achieved the target, you did not achieve the target. What is the shortfall here? And what is purchased from unregistered person? 25. But what is the shortfall for the target? 5%. That 5%, for example, 150 lakhs. 150 lakhs into 75%. What is it? 150 lakhs into 75%? 105 lakhs. 105 lakhs you purchased from registered person. What is the balance? 45 lakhs you purchased from unregistered person. But in that, how much is the permissible limit up to which you can buy from unregistered? 20. That is 30 lakhs. But you purchased 45 lakhs from unregistered person. So in that 15 lakhs, okay, that 5% portion. So whatever is there, up to 80%. So shortfall up to 80%, that 5% is there. So in that, is it cement or other goods or services you check? Cement means always you need to pay GST at what rate? 18%, 28%. If it is other goods or services, what is the rate? 18%. Sir, what if those goods are sand 5%, but purchased from unregistered person? How much GST I need to pay? 18%. If it is nil rated, how much I need to pay? 18%. If it is 12%, how much I need to pay? 18%. Sir, why sir? The rate itself is 5%, nil rate and 12%. Why should I pay 18%? You don't want to pay? Okay, then buy from registered person. You don't want to pay, na? Then buy from registered person. So then what if the rate is more than 18%? Only one product, that is cement. Already you are paying 28%. You understood? All other materials will be 18 or less than 18. So you pay 18%. Got it? Sir, I don't want to pay 18%. Very good. Buy from registered person. Had you not purchased from registered person 80%, then you have to pay GST under RCM. So on the shortfall, what is the shortfall here? That 5% portion, you need to pay GST under RCM at what rate? 5% or 15% a shortfall? 5% only. Okay. Huh? Only one product is having that 18%, more than 18%, that is cement. On that already we are paying 28%. Okay, that's what I said. Only one material in the entire building materials that we buy, only one material will be more than 18%, that is cement. On that already we are paying 28%. Rest of the things and all will be 18 or less than 18. So, but we will end up paying only 18% under RCM. So, if you don't want to pay 18%, that's what I said, buy from a registered person. So, he will charge you whatever is the applicable rate only. For example, if sand is 5%, if you buy from unregistered person that sand and you have a shortfall of 80%, so on that you need to pay GST at 18%. Suppose if you buy from registered, he will charge you only 5%. So that is better. Okay. Now, so the moment you pay GST under RCM on this shortfall, it is as good as purchase from registered. Now you achieved the condition of 80. Already 75 registered. Now this 5% you pay GST under RCM. So it's as good as 80 achieved. Now what is the remainder? 20. In the 20, that is beyond 80%, that is 20%. Again check, is there a cement? If it is cement, pay GST at the rate of 28%. If it is other goods or services, GST not payable, because already you achieved the condition of 80%. Okay. Therefore, what is the step number 2? Step number 1, capital goods. So that we have completed. And step number 2, actually cement has a special point. What is that? Cement always should be purchased from a registered person. If cement is purchased from unregistered person, so therefore step 1, capital goods is over. And now step 2. So step 2, what is step 2? Cement. So check whether cement is purchased from registered person or unregistered person. So check whether cement is purchased from registered person or unregistered person. If cement is purchased from registered person, should we do anything? No, ignore. If cement is purchased from unregistered person, pay GST under RCM at what rate? At 28%. Okay. Reason, cement always we need to buy from RP, and that 80% condition is not applicable for cement. Okay. Then next, step number 3. We have to see other inputs or input services from unregistered person. Okay. So what are the inputs other than cement? Already cement we considered. So what is the remaining? Remaining inputs and input services from unregistered person. We need to see. So remaining inputs and input services, remaining inputs and input services from unregistered person divided by total inputs and input services, correct? Divided by total inputs and input services. In this total, should we take cement? Yes, we should take. So reason, we are seeing the total. We are seeing the total inputs and input service including the cement. In that, cement already we considered, so see the remainder, okay. Remaining inputs and input service from unregistered person divided by total inputs and input services. In this total inputs and input services, we should exclude few things. What are they? Excluding electricity, then diesel, then motor spirit, that is petrol, next natural gas, then TDR, FSI and long-term lease. Long-term lease. So these things we need to exclude. So remaining inputs and input service from unregistered person divided by total inputs and input services into 100 you see. If this percentage is less than or equal to 20%, then purchase from unregistered person less than or equals to 20%. Cement already considered. So remaining, allowed. So should we pay any GST under RCM? No, ignore. Ignore. Suppose if it is greater than 20%, means we have not achieved 80% condition. 20 more than 20 is from unregistered person, means we have not achieved 80% condition. So on that excess, you need to pay GST at what rate? Excess beyond 20% is chargeable to GST, under RCM. At what rate? At 18%. Okay. Excess beyond 20% is chargeable to GST under RCM at 18%. So tell me what are the 3 steps that are involved. Come on, step number 1. Capital goods, divide into 2. Purchase from RP, URP. RP, ignore. URP, pay GST and the rate of capital goods under RCM. Then second, step number 2, cement. RP, URP. RP, ignore. URP, pay GST under RCM at the rate of 28%. Other inputs and input service from unregistered person divided by total inputs and input services, exclude those 5 things into 100. If this percentage is less than or equals to 20%, means you have to purchase less than or equals to 20 from unregistered and you purchase it that only. So ignore that. If it is greater than 20%, to what extent? Suppose if it is like excess of 20%, 25. So up to 20 you can buy from unregistered. So remainder whatever is there, on that you need to pay GST at the rate of 18% under RCM. So these are the 3 steps that we need to keep in mind and answer any question based on this. You can see this illustration too for understanding purposes. A promoter or builder has procured the following goods and services for construction of a residential real estate project during a financial year. So what are the various inputs and input services? We have the list including the capital goods also, concrete mixer, electricity, FSI, like that one big list is there. And in that we have whether purchased or received from a unregistered person or registered person. Y means purchased from registered, N means purchased from unregistered. In that manpower supply we have a question mark, and see below compute GST payable under 9.3 and 9.4. 9.3, what is there in 9.3 here? TDR FSI is there under 9.3 and 9.4 in the following cases. If manpower supply is received from a registered person. So suppose if this manpower supply is from a registered person, let's see what will be the answer. Okay, first. So in this question, you need to identify what is capital goods. So is there any capital goods here in this question? Yes, only one, concrete mixer. And step number 1 we are doing concrete mixer purchased from RP or URP? URP. So we need to pay GST under RCM at what rate? At the rate applicable to capital goods. What is the rate applicable to capital goods? 12%. So what is the answer for this? Step 1, 40 lakhs into 12%, that is 4,80,000. What if it is purchased from registered person? Step 1 will be 0. We don't have to pay anything. Got it? As it is purchased from unregistered person, on this 40 lakhs, we need to pay GST at 12%, that is 4,80,000. Then step number 2. Step number 2 is what? Cement. In this list, you see cement is there? Yes. And cement purchased from RP or URP? URP. So therefore, we need to pay GST on cement at 28%. How much is the purchase from URP cement? 15 lakhs. 15 lakhs into 28% is what? 4,20,000. Already step 1, 4,80,000. Step number 2, 4,20,000. Okay. So that itself is 9 lakhs. Okay. Now, in the list, you see, is there anything else from unregistered person? Is there anything else from unregistered person? Don't take electricity and FSI. Why? Electricity and FSI should not be taken. Even what are the other things which should not be taken? So petrol, diesel, natural gas. Is it in the list? No, we don't have that in the list. So therefore, we are ignoring electricity and FSI, except electricity and FSI, and capital goods already considered, correct? So except this, what are the other things purchased from unregistered person? Only one, flooring tiles, correct? And how much is the flooring tiles that we purchased from unregistered person? 10 lakhs divided by total inputs and input services except electricity, FSI, etc. So capital goods also don't take. See only inputs and input services. So please take your calculator and do the total. 10 plus 15 plus 20 plus 15 plus 100 plus 5 plus 10 plus 20 plus 15. That's it. How much is the total of this? 120 lakhs. 120 lakhs is the total inputs and input services. What are the purchases from unregistered person? Flooring tiles. How much? 10 lakhs. 10 divided by 120 into 100. How much percentage? 8.33. Is it less than or equals to 20%? Yes. Should we pay any GST under RCM? No, because up to 20% we can buy from unregistered person. So no need to pay any GST under RCM. Are you understanding this? So therefore, how much is the GST payable under RCM? 9 subsection 4 only 9 lakhs. Step 1, 4,80,000. Step 2, 4,20,000. 9 lakhs. Step 3 will become 0. And already under 9.3, how much we need to pay? Only on one we have to pay under 9.3. What is that? TDR, FSI, long-term lease. How much is the FSI value? 5 lakhs. On that 5 lakhs, 18% is how much? 90,000. That much we pay under 9.3. That also we have to pay, but not under 9.4, 9.3. So that's what I have given as the answer here. Step number 1, capital goods, 4,80,000. Step number 2, cement. Cement we need to pay. So on 28% of 15 lakhs, 4,20,000. Then you see remaining. Remaining does not exceed 20%. 8.33 does not exceed 20. So ignore. So total GST payable under RCM 9.4 is 9 lakhs. And 9.3 will be 5 lakhs into 18%, 90,000. Are you understanding this? So just remember these 3 steps, easily you will be able to arrive at the answer. Now, there is a change in this question. What if this manpower supply is from an unregistered person? That is second part of this question. What if this manpower supply is from an unregistered person? Then what we need to do in that case? Now, again start from the beginning. Step number 1. What is step number 1? Capital goods. Purchased from RP or URP? RP or URP? URP. So, therefore, we need to pay GST under RCM? Same. That is 40 lakhs into 12%, 4,80,000. Step 1 same, same as above. Then step number 2. What is step number 2? Cement. Purchased from RP or URP? URP. How much is the value of cement? 15 lakhs. On that, what is the rate of GST? 28%. So 15 lakhs into 28% is what? 4 lakh. So 4,20,000. 4,80,000 plus 4,20,000, that will be coming to 9 lakhs. So 9 lakhs will be taken as the answer for this. So step 1, step 2 over. Now step 3. Remaining from unregistered person. Now what and all from unregistered person? Flooring tiles and manpower supply. Correct. Flooring tiles how much? 10 lakhs. Manpower supply how much? 20 lakhs. 10 plus 20, 30 lakhs. And denominator will be 120 lakhs. 30 divided by 120 is how much? 25%. What is the extra? 5%. 5% of what? 120 lakhs. So 120 lakhs into 5% is what? 6 lakhs. Actually, we are purchasing from unregistered person. In other way also you can take 120 into 20% is how much? 120 is total. How much is permissible? 20. So into 20% is what? 120 into 20%. 24 lakhs. But how much we purchased from unregistered person? 30. So what is the excess? 6 lakhs. That way also you can take. You understood? So 120 lakhs, permissible is 20%, but we are purchasing beyond that. So the difference is what? 6 lakhs. So on that 6 lakhs, we need to pay GST at what rate? 18%. So 6 lakhs into 18% is what? 1,08,000. So here we have step 3, extra amount 1,08,000. Step 1 same 4,80,000. Step 2 same, that is 4,20,000. Step 3 extra we will be having 5 lakhs into 18%. Sorry, 6 lakhs into 18%, 1,08,000. So total 10,08,000. How? 9 plus 1,08,000, 10,08,000. And 9.3 as usual. Whatever is the TDR FSI value, on that we need to pay GST at 18%. That is 90,000 will be taken. Understood? So that is with respect to this 9 subsection 4. And whether this computation to be made together for inputs, input service and capital goods, or separately for capital goods and input services separately, because this 80-20 is not applicable for inputs and input services applicable, capital goods not applicable. So therefore, the above computation to be made together for inputs and input services, separate computation of capital goods as 80% condition is not applicable for capital goods. Then the regular time of supply provisions are not applicable, as the computation to be made on an annual basis or up to the project completion as the case may be. So what does it mean? That is, usually we have to pay GST month on month only, na? But this computation we need to do monthly or yearly? Yearly. You don't have to do it on a monthly basis, you do it on a yearly basis. Means, for example, if it takes 2 years, 8 months to complete the project, year 1, one computation. Year 2, second computation. In the year 3, for 8 months, one computation. So like that, yearly or up to project completion, you make the computation separately. Then, and this should be computed separately for each project. For suppose, if they are doing 8 projects at a time, now for each project, we need to do this computation separately. See the purchases for that project. Usage, we don't have to bother. Definitely they will buy for one project and use it for the other project. You don't have to bother about that. Project wise, you do the computation. And GST, when we need to pay, we don't have to pay GST monthly. We have to pay GST annually, as the computation is annually. By the time when we file the annual return, at that time we need to pay this GST. So these are some notes related to this. And this 9 subsection 4, again, not yet tested so far in exam. So even as MCQ also they have not tested. Suppose if at all they want to make the paper little difficult, they can test this particular concept. But what you need to remember is those 3 steps you remember, then it will be easy for you. At least in MCQ they can coin a question like this. Then section 9 subsection 5, the last section that we have. So in section 9 deals with liability to pay GSTR. In that 9 subsection 1, 9 subsection 2 already we discussed. So there are like a few goods which will never be coming under GST. What are they? Alcoholic liquor for human consumption and 5 petroleum products. That is given in 9.1 and 9.2. And the petroleum products permanently excluded or temporarily excluded? Temporarily excluded. Whereas alcoholic liquor for human consumption permanently excluded. And 9.3, there are notified goods or services where liability to pay GST is on recipient. 9.4, promoter or builder making purchase from unregistered person, they need to pay GST under RCM. 9.5 is that whenever there are some notified services supplied through a e-commerce operator, the liability to pay GST is on the e-commerce operator. What are those notified services? So remember 4 services, HATE. H for housekeeping services. Example, Urban Clap. In Urban Clap, who is the supplier? So the carpenter or the plumber or AC mechanic, etc. They are the supplier. And Urban Clap is the e-commerce operator. And the customer who receives the services will be the recipient. Okay. In this case, who will be having liability to pay GST? Is it the supplier or the recipient? Neither supplier nor recipient, but one middleman is there, na aggregator. We call them as e-commerce operator. So e-commerce operator will pay GST. Then A for accommodation services. Accommodation service example OYO. So in that, hotel is the supplier, OYO is the e-commerce operator, your friend is the recipient. So therefore in this case, so liability to pay GST is on hotel or your friend. Neither hotel nor on your friend, but on the e-commerce operator. Okay, on what? Accommodation service. Okay, then next, HA, T for transportation of passengers, not transportation of goods, transportation of passengers by any motor vehicle. Example, we take Rapido. In Rapido, Ola, Uber, who is the supplier? The driver or owner of the vehicle. And who is the e-commerce operator? Ola, Uber or Rapido is the e-commerce operator and the passenger is the recipient. Who will pay GST? Neither owner of the vehicle nor the passenger, but the e-commerce operator will be paying GST. Why they have brought this? Basically, in order to have easy administration in collection of taxes. If that all they need to collect tax, they have to collect from lot of people. You take, suppose if the liability is on drivers. So drivers are more in number and it will be difficult to collect GST from them. Some of them will pay, some of them will not pay. But all these drivers are connected to one e-commerce operator only, correct? How many e-commerce operator we have when it comes to transportation? We can count now. So handful only. So therefore it is easy to control them. That's the reason why they are asking e-commerce operator to pay the GST. Then E for eating food from the restaurant. In that case, so for example, Swiggy and Zomato, who is the supplier? Restaurant is the supplier. Swiggy, Zomato is the e-commerce operator and we are the person, customers who purchase the food from the restaurant. Now, who will have liability to pay GST? Neither restaurant nor on the customer, but on the e-commerce operator. That's the reason why usually there will be a price difference between the restaurant and the e-commerce operator Swiggy. Okay, for example, you wanted to eat something and say you want to eat one masala dosa. And if you go to that restaurant, it would be 70 rupees or 75 rupees. Same masala dosa, if you order from Swiggy from the same restaurant, it will be 105 rupees. Why this 105 rupees? There is a profit margin plus there is a GST. That restaurant may not be chargeable to GST. That restaurant may not be chargeable to GST. Why? Because they have not exceeded the threshold limit, they are not registered. Even then, e-commerce operator has to pay GST on that. That's the reason why when we order food from Swiggy, Zomato and all, the cost of the food is increasing nowadays. Okay. Initially what they used to do is that they used to not levy the delivery fee and they used to give a lot of discounts, etc. and all. Now we got accustomed to that. The moment we got accustomed to that, they understood. Now newly they added even platform fee. Okay, what is this platform fee? For using that app? You understood? For using that app, some cost will be involved, server cost and all, development, app development cost, maintenance cost. That also they are in turn recovering from us. Okay, so therefore all these amounts, that's why the price of the food will increase, and mainly GST, 5% GST. What is the rate of GST applicable on restaurants? 5% without ITC. Means restaurant, when they pay GST 5% on the food, so they will be purchasing the ingredients now. Any food they have to buy the commodities, correct or not? How from sky it will come? So they have to buy, right? So many things they will buy, lot of masalas or even the dals, rice, everything they will be purchasing. On whatever ingredients that they buy, on that GST paid, can they take as ITC? Unfortunately, no, because restaurant rate of GST is 5% without ITC. Now, who will pay that 5% if it is through e-commerce operator, Swiggy, Zomato? So e-commerce operator will pay. How much they will pay? Same 5% they will be paying. Are you understanding? But when they pay this 5%, Can they take ITC? Who? E-commerce operator. Can they take ITC? Yes, because they are not buying the ingredients. See, if the food is prepared by restaurant only buy the ingredients, that restaurant may sell food through directly or e-commerce operator, restaurant only purchase the ingredients, correct or not? Then e-commerce operator will have some inward supply, marketing services or app development services, etc. On that, can they take ITC? Yes, even though they pay rate of GST 5%, but they can take ITC on their inward supply, but on restaurant inward supply, they cannot take ITC. Are you getting this? Restaurant can never take ITC on their inward supplies. So now tell me, what are the 4 services through e-commerce operator? Liability to pay GST is on e-commerce operator. H, housekeeping service. A, accommodation service. T, transportation of passengers by any motor vehicle. E, eating food from the restaurant. Okay. Now, we have one point here. Suppose if that restaurant is in a hotel, and in that hotel the tariff for stay is greater than 7,500 per day. But usually when you stay in some hotels, what could be per day charges? 1,000, 2,000, 3,000, maximum, if it is so much luxury also 4,000 per day, correct? Greater than 7,500 rupees per day means what type of hotel it is? 5-star hotels, 4-star, 5-star hotels, correct? Even 4-star also 7,500 will not be there. So definitely it should be a 5-star hotel. There only greater than 7,500. Like this Grand, then ITC Grand, then Park, Taj. These are all the hotels where greater than 7,500. Per day it will be 8,000, 10,000. You just randomly call and ask. You don't have to stay and all. You call, no, whenever you are finding time, anyhow outgoing free only. Na? So therefore, call and speak. So lot of girls only will be speaking, okay. So therefore, not that I did that way, okay. So example only, okay, or advice. And so you just call them and ask how much is the room charges. So they'll say 9,999 rupees only, okay, only one day. So with 9,999, 1 month we can eat food. You understood or not? So we will never stay there, pa. It is not applicable for us. Even for me also, I will also not stay in such a hotel and all. Okay, 2,000, 2,500, okay. And in that restaurant, in that hotel, 5-star hotel, there will be one restaurant. In that restaurant, if anyone order food through e-commerce operator, it is not applicable. I don't know who will order food from that restaurant. We will not go and eat there also. But definitely there will be some people who will be having fat in their buttocks and they will be definitely ordering food from these restaurants. Then whether e-commerce operator will be paying GST? No. E-commerce operator will not pay. The restaurant only will pay. Okay. Say this. Supply of food by a restaurant in a hotel having declared tariff greater than 7,500 per unit per day or equivalent. So there is a hotel. In that hotel, one room also greater than 7,500, enough. Even if one room, okay, greater than 7,500 per unit per day or equivalent, in that hotel one restaurant will be there. That restaurant selling food through e-commerce operator, liability to pay GST is on the e-commerce operator or on the restaurant? Restaurant only, because it is not covered under 9 subsection 5. Okay, then next. So in this 4 HATE, first 2 supplier should be unregistered. Then only it will come under 9 subsection 5. Liability to pay GST is on e-commerce operator. Whereas the next 2, that is T and E, supplier may or may not be registered. So definitely e-commerce operator will pay GST. Let's try to understand this. So you started one new hotel, okay, newly you started one hotel. When you started the hotel newly, initially you will not cross 20 lakhs threshold limit. So what you need to do, you need to list with e-commerce operators like OYO or GoIbibo, Make My Trip, like that. So you will be listing with them. Now you get the business, correct or not? Now you are unregistered. So on the services supplied through e-commerce operator, who will pay GST? E-commerce operator will pay. Now your business is going good, you made a very good turnover, now you are registered. The moment you are registered, Then also you continue to get the bookings through e-commerce operator, correct or not? But who will pay GST? Hotel only will pay. E-commerce operator will not pay, because the moment supplier is registered, please see carefully, accommodation services, the moment supplier is registered, liability to pay GST is on supplier only, not on e-commerce operator. You understood this? So this is common for whom? H and A, housekeeping service and accommodation service. Whereas the next two, transportation of passengers and eating food from a restaurant. For example, you started a restaurant, newly started restaurant. Now, definitely you will not be registered, because your turnover will not cross a threshold limit. Now, to get the business, you will list it through e-commerce operator. There are a lot of people, now what they are doing is that they started their home itself as a kitchen. They are converting their house itself as a kitchen, and they get this FSSAI registration, and they will list the product through e-commerce operator, and they sell that in the name of homemade food like that, and very good turnover they will be making. Okay, so therefore, see, today's situation is like, only through education we don't have to earn money. There are many ways through which we can earn money. So therefore, what I am trying to convey here is that don't worry. So education is always important, that is guaranteed, less competition. Okay, education will give you secured future. But if not, also we have lot of plan B, plan C, plan D, like that it is there. So don't get vexed in your life. Okay, because you know, one student sent me a message, sir, 4 attempts over, sir, and I am writing, I'm thinking of attempting suicide and all, he said to me. What kind of a moron he is? Rather than dying, he can kill many people and live happily. You understood or not? Correct? If I am in that category, I will do that only. Okay. So, 4 or 5 people I will blackmail, 10 20 people I will assault, 8 10 people I will kidnap, and happily I will live. Why will I think of suiciding and all? Definitely no. You understood or not? So, therefore, don't have that kind of thoughts and all. And if not this, if not Trisha, Nainthara, correct or not? So, therefore, if not this, something else. You understood? So, therefore, that's why I am telling you, lot of people so made like cloud kitchens. These are called as cloud kitchens. What they do is that there is no restaurant, just a kitchen will be there. Now they will list it with e-commerce operator. Now they started selling the food unregistered. Who will pay GST? E-commerce operator. Now they are making very good business. Now moment when they start making very good business, they have to register. Example, you would have heard of Eat Fit, like that one brand, Eat Fit, HRX, Eat Fit. Okay, actually it is Hrithik Roshan's brand it is, and he only has invested that, it is his brand only, and initially they were not having that great sales. So they listed through e-commerce operator and they are doing. Thereafter, they have very good sales now. So lot of people will be purchasing food from them and they are registered. Even then, who will be liable to pay GST? E-commerce operator only. Because if the supplier is registered or not registered, always liability to pay GST is on e-commerce operator only when the supplies are made through e-commerce operator. Understood or not? So these are the 4 activities that we have, and we understood the provisions also related to this. Now, suppose if e-commerce operator is having fixed place of business in India, they will register and pay GST. Example, Ola, Uber, you take. Ola is an Indian company, and whether they have physical place of business in India, yes. So they will register and pay GST. What about Uber? Uber is not an Indian company, it's a foreign company. They don't have a physical place of business in India. Next, check whether they have representative in India. Yes, they have a representative office, and that representative office will be listing the contracts with the drivers. Okay, so there is a representative office in India, so that representative office will register and pay GST. What if they neither have a physical place nor the representative office? Example, Urban Company. Urban Company is a Dubai based company, and in that case they don't have physical presence in India, they don't have a representative in India. So then how, sir, they can pay GST? They should appoint a representative in India, agent in India, for the purpose of payment of GST. That is this flowchart. Have a look into this. Does e-commerce operator have a physical presence in the taxable territory? Yes. Then e-commerce operator will be liable to pay tax. No, they don't have a physical presence. Whether they have representatives in India? Yes. Then that representative shall be liable to pay GST. No, neither physical presence nor representative. They shall appoint a person in the taxable territory for the purpose of payment of GST. Understood? Then we need to understand some special points. Whenever I am making supplies through e-commerce operator, where liability to pay GST is on e-commerce operator, who will raise invoice to the customer? Example, restaurant selling food through Swiggy to the customer. To customer, who will raise invoice? Restaurant or Swiggy? Swiggy. Whomsoever is liable to pay GST, that person only will raise the invoice. So that's why when you place any order from Swiggy, etc., so you get an invoice to your mail, that invoice will not be from the restaurant, it will be from the Swiggy only. Okay. So therefore, whenever e-commerce operator is liable to pay GST, who will raise invoice to the customer? E-commerce operator. Please write down that point. With respect to services on which ECO is liable to pay GST, invoice shall be generated by, with respect to services on which ECO is liable to pay GST, invoice shall be generated by whom? Such e-commerce operator, but not the supplier. So supplier will not raise invoice, but e-commerce operator will raise invoice. Okay. When e-commerce operator raises invoice, then it will be included in whose turnover? E-commerce operator's turnover or supplier's turnover? It will be included in both. Even though invoice is raised by the e-commerce operator, that will be counted for the aggregate turnover of both supplier as well as e-commerce operator. That's the next point. Even though invoice raised by ECO, such amount is included in ATO, aggregate turnover of both supplier and e-commerce operator. So why, sir, it is included in aggregate turnover of supplier? Reason, they wanted the supplier to get registered as soon as possible. So that's why mainly it is included in their aggregate turnover. So which means, concentrate, I am a hotel and I am directly also providing services to my customer, and even through e-commerce operator also I am providing services to the customers. Now in that case, direct also include in my turnover, through e-commerce operator also include in my turnover, so that my aggregate turnover will fast increase and it will touch 20 lakhs, so that I will get registered. The moment I get registered, on every transaction I will only be paying GST. Correct? Because in case of accommodation service, if the supplier is unregistered, so e-commerce operator will pay. If the supplier is registered, supplier only will pay. Are you understanding this? So mainly for that reason only they brought this. Then, so whatever GST that is payable by the e-commerce operator under 9(5), can they pay using the credit ledger balance? No, they have to pay using the cash ledger balance only. This is also one important circular. So GST payable by ECO under 9 subsection 5. GST payable by ECO under section 9 subsection 5. GST payable by e-commerce operator under section 9 subsection 5, can be paid only using electronic cash ledger, but not electronic credit ledger. Means what? So generally we have some input tax credit. In e-commerce operator also will have some input tax credit. Using that input tax credit, he cannot pay GST under 9(5). Then sir, what they will do with that input tax credit? Apart from 9(5), there will be other transactions for which they get commission. Example, Book My Show. Book My Show, okay, or Swiggy itself will take. Swiggy, they sell food also, they sell groceries also, Instamart. Am I right, pa? Swiggy is having two divisions here. They sell food, they sell groceries also. Now, when they sell the groceries, who will pay GST? Supplier only will pay GST because it's not a notified service under 9(5). Then what is the benefit that Swiggy gets? Swiggy gets a commission. On that commission, Swiggy has to pay GST. For that, they can use the input tax credit. Only for payment of GST under 9(5). Means which services? 4 services. HATE. For those 4 services, when e-commerce operator pay GST, that only should be paid using electronic cash ledger, but not electronic credit ledger. All these points are based on the circular that is given. So these points actually I did not discuss in the last attempt for May 23. So these attains importance for November 23 exam. That's why you have to write this and mark it as very, very important. These points can be tested either as MCQ or as descriptive questions. Then look into the next page, some important points. Only in case of notified services, e-commerce operator is liable to pay GST. What are those notified services under 9(5)? HATE. But what about other services? For example, so ticket booking, Book My Show, ticket booking and lot of concert tickets and all can be booked through Book My Show. In that case, who is the supplier? Cinema theater is the supplier. Book My Show is the e-commerce operator. And the customer is a person who is booking the ticket. Now in that case, so who is liable to pay GST? Is it the cinema theater or the Book My Show? Cinema theater only, not Book My Show, because it is not a notified service. So liability to pay GST is on supplier. So in other cases, supplier shall pay GST. Then every e-commerce operator who is liable to pay GST under this section is compulsorily required to get registered. So we don't have to check their threshold limit, etc. and all. Who are the e-commerce operator required to get required to pay GST under this section? I gave you a list. HATE. For these HATE services, whomsoever are e-commerce operators, they are compulsorily required to get registered. Also, every supplier of goods through e-commerce operator. For example, I am selling goods through Amazon or Flipkart. Who will pay GST? I only should pay GST, and compulsory registration is there. So there is no threshold limit applicable. What is the meaning of compulsory registration? Irrespective of threshold limit, when a person is required to get registered, that is known as compulsory registration. Whatever may be the turnover, if they do that activity, they are compulsorily required to get registered. That is this point. Then what about supply of notified services and other than notified services? They are required to get registered only when their aggregate turnover exceeds threshold limit. Otherwise, they are not required to get registered. Is it clear? So this is actually a repetition. So supplier of notified service and supplier of other than notified services through e-commerce operator is required to get registered only when their aggregate turnover exceeds threshold limit for registration. This got copied 2 times. So these are the 4 points that you need to remember. Okay, pa? Then, so which means supply of services through e-commerce operator, any service provider, when they need to register, compulsory registered or no? Only when their aggregate turnover exceeds threshold limit, they need to register. Then what is the meaning of motor vehicle? Because any transportation of goods by motor vehicle, like transportation of goods by motor vehicle, is it covered under 9(5)? No. Only transportation of passengers by motor vehicle is covered under 9(5). Is it clear? For example, porter like that one app is there. So they're doing transportation of what? Goods. Whether it will come under 9(5)? No. Next, so motor vehicle definition we need to know, because not every e-commerce operator will be covered here, engaged. Okay. Example, we can book the air tickets and train tickets through e-commerce operators. Possible? Through GoIBibo, Make My Trip, we can book the air ticket. Train ticket also we can book through those platforms. In that case, liability to pay GST is on the supplier or the e-commerce operator. Is it notified service under 9(5)? It will become notified service under 9(5) if aircraft and train comes under motor vehicle. Now read the motor vehicle definition and tell me whether aircraft and train will come under motor vehicle. Motor vehicle means any mechanically propelled vehicle adapted for use upon roads, whether the power of propulsion is transmitted thereto from an external or internal source, and includes a chassis to which body has not been attached and a trailer, but does not include, here already it is given only those vehicles which you use on roads, but does not include a vehicle running upon a fixed rails, means train. So train will not come under motor vehicle. Aircraft also will not come, because only those which you use on road only will be coming under motor vehicle. And even so, vehicle of a special type adapted for use only in factory or any enclosed premises, that will also not come under motor vehicle. What is that? In airport and railway station, one small vehicle will be there which will be transporting the handicapped people and old people and all. So that is also not a motor vehicle, because it is used only in enclosed premises. Then a vehicle less than 4 wheels, less than 4 wheels means 2 or 3, okay, fitted with an engine capacity of not exceeding 25 cc. I don't know what vehicle it is. Two-wheeler minimum 100 cc, 100 cc, okay. So less than 100 cc, I don't know what vehicles are there. Maybe some mopeds, bicycles with a small motor fixed, that will be coming into this category, 25 cc. So autos and all also even today easily 100 cc here. So I don't know what vehicles, suppose maybe they have not updated the definition yet, and if the motor vehicle is less than 25 cc or equals to 25 cc, it is not a motor vehicle here. So therefore, in that case it is not applicable. This definition is also useful for input tax credit chapter, because already one question has been tested. That is, a company purchased a two-wheeler which is having 20 cc, whether they can take ITC on that or not, used in the business. A company purchased two-wheeler having 20 cc and used in their business. Can they take ITC on that motor vehicle? Yes, because first of all it is not a motor vehicle. It is any other goods. Any other goods used for business, they can take ITC. You understood or not? So for that it will be useful. Then with that we completed section 9.5, and see this. This is supplies through e-commerce operator, one summary chart covering entire supplies through e-commerce operator. And in e-commerce, supplies through e-commerce operator, how many parties are there? 3 parties: supplier, e-commerce operator and recipient. And supplier and e-commerce operator should not be same. If supplier and e-commerce operator are same, it is not supplies through e-commerce operator. Example, so Max Garments has their own app through which they will be selling the garments. So when they sell the garments through their own app, is it called as supply through e-commerce operator? No. Suppose if the Max Garments sell their garments through Myntra or Flipkart, etc., then it will be called as supplies through e-commerce operator. Then supplies through e-commerce operator is divided into 3. Supply of goods through e-commerce operator, supply of notified services through e-commerce operator, supply of other than notified service through e-commerce operator. In case of supply of goods through e-commerce operator, who will have the liability to pay GSTs on the transaction? Supplier or e-commerce operator? Supplier. Same way, in case of category 2, supply of notified service through e-commerce operator, who will have liability to pay GST? E-commerce operator. Then supply of other than notified service through e-commerce operator, who will have the liability? Again, supplier only. Then in case of 1 and 3, first and last, what is the liability on e-commerce operator? E-commerce operator gets a commission. On that commission, e-commerce operator should pay GST. Is it clear? Then next, every supplier of goods through e-commerce operator is compulsorily required to get registered. But supplier of services or other than notified services through e-commerce operator is required to get registered only when aggregate turnover exceeds threshold limit. And every e-commerce operator is compulsorily required to get registered. And this discussion already we have made. If they have physical presence, they will register. Otherwise, agent, this chart we have seen. Then look into the illustration 3. Messrs. ABC Hotel started their business on 15/5/2020 and they have made direct services to guests as well as through e-commerce operator. If they make direct services, entire money received by them will be their money only. But if they make services through e-commerce operator, what is the sharing ratio between hotel and e-commerce operator? Hotel will get 75%, e-commerce operator will get 25%. Now, applicable threshold limit for the hotel is 20 lakhs. Now, May 2020, they have made a direct supplies 5 lakhs and supplies through e-commerce operator 5 lakhs with respect to, and so far they are not registered. So, on this 5 lakhs, who will pay GST? No one will pay GST. Why no one will pay GST? Because it is direct supplies and they are not registered, so no GST. What about the next 5 lakhs through e-commerce operator? Who will pay GST? E-commerce operator will pay GST. Now, what will be included in the aggregate turnover of hotel? 5 or 10? 10. Why? I told you. Whenever supplies are made through e-commerce operator, so it will be not only including the aggregate turnover of e-commerce operator, but it will also be including the aggregate turnover of supplier. Then next, June 2020, so direct supplies 5 lakhs, still they are not registered, so no GST. And 9 lakhs through e-commerce operator, who will pay GST? E-commerce operator will pay GST. Now, what is their aggregate turnover for June month? 5 plus 9, 14. Now, what is their total aggregate turnover for these 2 months? Exceeds 20 lakhs. Are you getting? So, now they will register. Now, they are registered. July onwards, they make supplies. Who will pay GST? Direct as well as e-commerce operator. Supplier only will pay. So, GST is payable by ABC Hotel only because in case of accommodation service, the moment supplier is registered, so then it will not come under 9(5). So, supplier only will pay GST. Understood this? Now, see the first point. When e-commerce operator is liable to pay GST, who will issue invoice? Now, listen. For May 2020, for this 5 lakhs e-commerce operator, who will give invoice? E-commerce operator. Again, for this 9 lakhs, who will give invoice? Thereafter, from July onwards, any turnover, any sale, who will give invoice? Supplier, that is a hotel will give. So, therefore, in this case, e-commerce operator will give invoice for 14 lakhs plus GST. How we got 14 lakhs? 5 plus 9 on that 14 lakhs. Up to the date when ABC Hotel is liable to get registered, they shall raise bill or statement to e-commerce operator to receive their share. Correct? Now, for May and June, 5 lakhs and 9 lakhs they made through e-commerce operator. Now, how much they should get? 75%, for which they raise a bill to the e-commerce operator and collect that money. So, 5 plus 9, 14, 14 into 75%, 10.5 lakhs. But how much will be included in their turnover? 14. So, I told you the reason also. Even though they get in their hand 10.5, but how much will be added as their aggregate turnover? 14, so that they should soon get registered. That's why the provision has been made that way. Then, as and when ABC hotels are liable to be registered, then who will issue invoice to the guest? ABC Hotel. Therefore, on this 28 lakhs, 10 plus 8 plus 5 plus 5, ABC Hotel only will raise the invoice. Then, as and when ABC hotels are liable to be registered, e-commerce operator will raise invoice to recover their share. So, what is their share? On this entire 28 lakhs, who will pay GST? Hotel will pay GST. Then what e-commerce operator will do? They need to get their share. Now, how much share? 25%. So, they will raise invoice. How much is that? 28 into 25%. So, 28. So, direct supplies don't take. Direct supplies, they don't have to give share. They have to give share only with respect to e-commerce operator. How much is the supplies through e-commerce operator? 13 lakhs. 13 lakhs into 25%. How much? So, 3.25 lakhs plus GST. Who will raise invoice to whom? E-commerce operator will raise invoice to ABC Hotels to recover their share. You got it? Again, this question is, which is not tested in exam. Suppose if at all this attempt, they want to touch on 9.3, 9.4 and 9.5, they can check these questions. Okay. 9.4 I gave one question, a promoter or builder. That or 9.5, this type of question they can ask. So, with this, we completed segment 3 also, that is liability to pay GST. Okay. Then The next area that we have to discuss is various exemptions, because exemptions already we completed one part. So the remaining part is there, so that we need to discuss. Please look into exemption segment 7. Segment 7, exemptions under GST, page number 130. Page number 130. So already we have completed few exemptions like advocate services, even we have seen government services like that, and even transportation to some extent. So we will have a look into the remaining services what we have. So you need to revise this particular area also on the one day before exam, because there is no shortcut for remembering these exemptions, because you will never be getting a question in exam as to, so whether you need to write all the exemptions. No, they will give a situation. For that situation you need to just check whether it is exempted or not. If it is exempted, you will write it as exempted, otherwise it will be taxable. So carefully listen to this, and one day before the exam you please revise this and go for exam, that is sufficient. So no need to remember any mnemonic and all for this, because it's a very big area, lot of points are there. First we will see agriculture related services. So what is that exemption? Any service in relation to agriculture or agricultural produce is exempted. Okay, so that is, you are doing agriculture or you have agricultural produce. I am providing some services to you in relation to agriculture or agricultural produce. What services I will provide to you? Like harvesting services, supply of farm labor, soil testing, seed testing, and storage of agricultural produce, renting of agricultural land. These are all examples of service in relation to agriculture or agricultural produce that is exempted. So that's the first exemption we have. Any service in relation to agriculture or agricultural produce is exempted. Only 4 exemptions we have for right now in this. Previously we had big list, but now only 4 points you need to remember. What is the first point? Any service in relation to agriculture or agricultural produce is exempted. Now, what is the meaning of agriculture? You can see in the next page. Agriculture means cultivation of plants. All types of cultivation of plants will come under agriculture that can be related to food products or non-food. For example, rubber plantation. Rubber plantation is not for food, so even then it will come under agriculture. And then floriculture. Floriculture means ornamental flowers. So that is again not for food, even that will also be coming under cultivation. So cultivation of all type of plants and rearing of all life forms of animals. What is the meaning of rearing of animals? Means taking care of the animals for reproduction is known as rearing of animals. So rearing of animals except rearing of horses. For what purpose? Food. Rearing of life forms of animals for food. Example, poultry, fisheries, etc. So what is the objective of that rearing? For the sake of food. Then fiber. Example, sheep farming, then sericulture, silkworm farming. So these are all for what purpose? Again, so for not for food, but for the fiber, wool, silk, etc. Then fuel, that is cattle farming. So why do we rear cattle? For the purpose of using the cattle in the agricultural farm for the purpose of pulling the ploughing equipments, etc. and all. So for fuel. Then next we have raw material. Example, honeybee farming. So rearing of honeybees. For what purpose? To get the honey, which is actually a raw material for many medicinal preparations or any other similar products. That's what I have given. Poultry, fisheries, cattle rearing, sericulture, honeybee farming, etc. So what is the meaning of agriculture? Cultivation of plants and rearing of all life forms of animals other than horses. For what purpose? Food, fiber, fuel, raw material or any other similar products. Why horse farming is not coming, horse rearing is not coming under agriculture? Because horses are no way connected to agriculture. We will not use horses as food or as fiber or fuel. Because agriculture related equipments, we will not use horses. We use cattle only for ploughing. We will not use horses for ploughing. Then even raw material. So that's why it is excluded. Okay, only horses is excluded. What about other animals? Other animals are not allowed for rearing. For example, tiger, lion, elephant and all is not allowed for rearing. So that's why that will not come under agriculture. You can see that in the first chart, animals or life forms are divided into two. Endangered, other than endangered. Endangered means it is not allowed for rearing. Example, snake, tortoise, deer, so even rabbits, these are all endangered, not allowed for rearing. Okay, so definitely it will not come under agriculture. Whereas other than endangered is allowed for rearing. But in that, whatever is allowed for rearing, except horses, remaining and all will be coming under agriculture. You got it? Then next, second, you need to know agricultural produce. So what is the first exemption that we have been discussing? Any service in relation to agriculture or agricultural produce. Okay. So enappa doubt, which animal? Rabbit. Okay. Just because you eat rabbit, it does not mean it is allowed for rearing. Because some countries people eat lizard, cockroach and all. Okay. But no one will do rearing of it. Whatever we eat does not mean it is allowed for rearing. Those are called as exotic non-veg. So those exotic things and all are banned. Okay. But even then it is available. There are many banned websites. Still you are watching? So therefore, you know, what I am talking about is the legality. But reality different. Okay. Reality different. In one country, lion and tiger also they are eating. In India, crocodile also they are eating. Not allowed for rearing. They are all not allowed for rearing, but people eat. So that is exceptions. Okay. Then agricultural produce. So what is the first exemption? Any service in relation to agriculture or agricultural produce. Agricultural produce means the primary produce out of agriculture on which no processing is done. Means, for example, tender coconut which we get from the plant or a tree is primary. Okay, on which no processing is done, or such processing is done as is usually done by a cultivator or producer, which does not alter its essential characteristics but makes it marketable for primary market. That is, that tender coconut, if you sun dry for some days and peel off the husk, we will get coconut. That coconut is also agricultural produce, because this process is usually done by the cultivator, which does not alter its essential characteristics. Because from tender coconut, when you peel off a layer, we are not getting apple or pineapple, we get only coconut. So essential characteristics not changed. And that coconut, if you sun dry for some more days and if you remove the shell, so we get the dry copra. Okay, coconut, dry coconut called as copra. Even that will also be coming under agricultural produce. Again, there is no change in the essential characteristics. But that dry coconut copra, if you extract coconut oil from that, coconut oil essential characteristics changes. So due to that reason, coconut oil is not agricultural produce. Are you understanding this? Then tea leaves are agricultural produce, but tea is not agricultural produce because it is processed. Same way, tomato is agricultural produce, but tomato ketchup is not because it is processed. Same way, coffee berries are agricultural produce, but not coffee powder. So like that, the primary produce out of agriculture on which no processing is done, or some processing as is usually done by a cultivator, which does not alter its essential characteristics, but makes it marketable for the primary market. Okay. And then paddy is agricultural produce, yes. But rice is not an agricultural produce. Why? There is no change in the essential characteristics, just the husk will be removed. No, there are a lot of process that will be done for the rice. So there will be polishing, etc. and all. Usually rice will never be in white color. Rice will be in brown color. So from that they do polishing and bring it into the white color. So that is a big process which is not done by the cultivators, which will be done by the rice mills. So due to that reason, rice is not an agricultural produce. Then what about the brown rice, which the cultivators will get? Yes, but usually paddy to rice is done by whom? Rice mills. That's why rice is not an agricultural produce, because if you see the wording, so such processing is done as is usually done. Can you see that wording? Usually done. Usually who will do paddy to rice? Usually, who will do paddy to rice? Rice mills. That's why rice is not an agricultural produce. See this note, paddy is an agricultural produce, but rice is not an agricultural produce. You need to remember these two definitions. Whatever definitions that I have given in exemptions, those definitions you have to by heart and remember. So what is the first exemption that we have seen? Come on, tell me. Any service in relation to agriculture or agricultural produce is exempted. Then second exemption, you see, artificial insemination of livestock, that is the reproduction, we give injections. So we give injections to the hens, etc. and all, so to get the eggs, and for cattle also we give injections. So this is known as artificial insemination. So whatever process is done is not directly in relation to agriculture, so that's why it is separately given as an exemption. Then number 3, rice is agricultural produce or not? Rice is not an agricultural produce, but in relation to rice, we have few activities which are exempted. What is that? Loading, unloading, packing, storage or warehousing of rice is exempted. So what about these activities in relation to agricultural produce? Anyhow, it is covered under the first point. Okay. So these 4 activities, loading, unloading, packing, storage and warehousing of rice, in relation to other agricultural produce, already covered in the first point. So it is anyhow exempted. But rice is not an agricultural produce, for that separately they have given this. So now, storage of jaggery. What is your answer? Taxable or exempted? Storage of jaggery. Is jaggery agricultural produce? No. So therefore, it is not covered here. Therefore, it will be taxable. What about storage of sugar cane? Exempted. Why? Because sugar cane is an agricultural produce. Storage of fruits and vegetables? Exempted under agricultural produce. Okay. Then storage of tomato ketchup? Why? Because it is not an agricultural produce. Like that, if it is not an agricultural produce, we don't have any exemption. But only for rice, we have, what is that? Loading, unloading, packing, storage or warehousing. Also, storage of cereals and pulses and minor forest produce, even though not an agricultural produce, it is exempted. Okay. Only cereals and pulses. Cereals and pulses means what? Dals pa. So this gram dal, urid dal, tur dal, etc. is there, na? That is actually not agricultural produce. Reason being, it is processed. Even though it is not agricultural produce, but that will come under essential commodities. So they have given exemption. But that to what activity is exempted? Only storage of these pulses is exempted. Also minor forest produce. Minor forest produce is not agricultural produce. What are examples of minor forest produce? So the shikakai, Ayurvedic herbs, bamboo, these are all available in the forest. No one is going there and cultivating that. So it is not an agricultural produce, it's a minor forest produce, even though it is not agricultural produce, but its storage is exempted. Okay. So these are the 4 points that you need to remember for agriculture related services. Come on, what are the 4 exemptions? Number 1, any service in relation to agriculture or agricultural produce. Number 2, artificial insemination. Number 3, rice, loading, unloading, packing, storage or warehousing. Number 4, storage of cereals and pulses and minor forest produce. These are the 4 activities. Any other activity in relation to, of course, like any other activity that may be connected to agriculture also, it will be covered under the first point. Okay, otherwise it will be taxable. For example, I have a godown which I am giving on rent to keep the agricultural produce, it will be exempted, correct? Now, for this godown, I am receiving fumigation services. Fumigation service means pesticides, pest control. Whether it will be taxable or exempted? Taxable. Why it is taxable? It is not service in relation to agriculture or agricultural produce, therefore it will become taxable. Then previously we had one point, slaughtering of animals. Slaughterhouses will kill the animals, peel off the skin, take the flesh, pack it and give it to various supermarkets. Whether this slaughtering of animals is now covered under exemption? No, because it's nowhere given here. and it is not service in relation to rearing of animals. It is killing of animals, you understood. Rearing is different from killing. Rearing is growing it. Killing is destroying it. So therefore, it will not come under agriculture. Therefore, that activity will become taxable. Are you understanding these points? Now, look into the next sector, that is banking and other financial services. So here we have first point related to RBI. Previously, services provided by RBI was exempted. Now, nothing related to RBI is exempted. Everything will be taxable. Service provided by RBI also taxable. Service provided to RBI also taxable. But in two cases, it will come under RCM. Rest of the case and all, it will be FCM. What is that case which we learnt already? Overseeing committee services to RBI. Do you remember that? So that will come under RCM. Even import of services by RBI will also come under RCM. Rest of the cases, it will be FCM. So what are the 2 points you need to remember for RBI? Come on. So all services of RBI either provided by them or to them is taxable. Then second point, in two cases it will come under RCM. What are those two cases? Overseeing committee service to RBI, then import of services by RBI. Then next point you see, transaction in money. So generally, if there is any transaction in money, so for separate consideration, without consideration. So transaction in money without consideration, such activity is neither goods nor services. What does it mean? For example, so I have 500 rupee note. I am giving you 500 rupee note and you are giving me 500 rupee notes. So this will be called as transaction in money without any consideration. I am not selling 500 rupee note to you. You are not selling 500 rupee notes to me. So it is neither goods nor services. No GST on that. However, if this transaction is for a consideration, you are giving me so 400 rupee notes and 150 rupee note against this 500 rupee notes, then in that case it will be treated as consideration. What is its additional consideration? You got 50 rupees, so that will become service. So transaction in money without consideration, neither goods nor services, but transaction in money for a separate consideration, that activity is treated as service. Okay. Now, if the consideration is represented by way of interest or discount, it is exempted. So if there is any other consideration, including interest in case of credit cards, that will be taxable. For example, so whenever banks give some loans, housing loan, professional loan or education loan, etc., will they recover only the loan amount or they are getting anything extra? What is that extra that they get? Interest. So that interest will be exempted. Okay. So what is the difference between interest and discount? Both are actually same. Interest or discount, both are same, but the timing difference will be there. Suppose if you go to a factoring agent, if you ask for advance on the receivables, what factoring agent will do? He will deduct the amount upfront, interest upfront, and he will give the amount, balance amount. When you need to repay, you need to repay the full amount. Usually money lenders, factoring agents, bill discounting by banks, what they will do is that upfront itself they will cut the interest and they will give the remaining amount and we need to repay the full amount. So interest only there also, but as it is in the upfront, we call it as discount. Whereas if you ask for 1 lakh and they give you 1 lakh, but you need to repay 1 lakh 10,000, that 10,000 rupees will be called as interest. If interest comes in upfront, we call it as discount. If it comes at the end, it is called as interest. So if the consideration is represented by way of interest or discount, then that will be exempted. Apart from that, any other consideration received by the bank. What are the other considerations received by the bank? Processing fee, documentation charges, debit card, credit card charges, ATM card charges, like that. Any other consideration will be taxable, including interest involved in credit cards. Generally, when you have a credit card, you buy anything, convert it into EMI. So on every EMI, there will be interest component. On that interest, whether GST payable or not payable, GST will be payable because interest in credit cards will be taxable. You understood the second point here? So what are the 2 points? First, RBI, everything will be taxable. And then transaction in money, divide into 2. For consideration, without consideration. Without consideration, neither goods nor services. For consideration, interest or discount is exempted. any other activity including interest on credit cards will be taxable. And whether banking services comes under FCM or RCM. Is it coming under RCM? No. So therefore it will be FCM. Now you don't have to bother about which case FCM, which case RCM, because already we learned what are the situations that comes under RCM. So balancing figure will be FCM. Then third point, you see, service provided by a banking company to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana PMJDY scheme. So under this scheme, nil balance accounts are opened for many people. Actually, that benefit we are seeing actually today. So that everywhere we are able to do this GPay transactions, UPI transactions, it's only because of the bank accounts. Had the bank accounts were not opened, so this UPI will become a big failure. Okay, so therefore nil balance accounts are allowed to be opened under this scheme. Usually why many people were not maintaining bank accounts was because, whatever minimum deposit they need to keep, and if they are not keeping the minimum deposit, the account will be cancelled or closed like that. So these are basically nil balance account holders, PMJDY scheme, Pradhan Mantri Jan Dhan Yojana. To that nil balance account holders, if bank provides any services, that service will be exempted. That is this point. Service provided by banking company. To whom they are providing services? Basic saving deposit account holders under PMJDY scheme. Then next, forex transactions. Forex transactions means what? Foreign exchange transactions. Between whom these foreign exchange transactions will happen? Between banks or forex dealers, or banks and forex dealers, or between banks or forex dealers and the customers. Which case it will be taxable? Only when the transaction happen between the bank or forex dealer and the customer, it will be taxable. In all other cases, it will be exempted. Okay. Foreign exchange transaction means what? Money changing from one currency to another currency. So that is this fourth point. So what are the foreign exchange transactions that are exempted? If the foreign exchange transaction that takes place between banks, forex dealers, banks and forex dealers, it is exempted. In other cases, what is that other cases? Banks or forex dealers and the customers, then only it will be taxable. Then look into the fifth point. Services by an acquiring bank to any person in relation to settlement of an amount up to 2000 rupees in a single transaction. So either transacted through credit card, debit card, charge card or any other payment card service. What does it mean? Like whenever you use your card for making the payment to a vendor, so whether the vendor receives the full amount, no, because there will be something called as processing fee. Okay, this processing fee who will collect? Acquiring bank will collect. Who is that acquiring bank? That bank which do the settlement. For example, I have HDFC swiping machine and you used Axis Bank card for swiping in this. Now there is a settlement bank, HDFC. What it will do? It will inform your Axis Bank, take money from your Axis Bank account and credit into my HDFC Bank, for which they will be collecting some processing fee. That processing fee is always payable, okay, except if it is UPI transaction, okay, that RuPay card or UPI transaction, except that always that processing fee will be there. But this processing fee will be exempted from GST. Yeah, processing fee is not exempted. Processing fee will always be there. But GST on processing fee will be exempted if the transaction amount is up to 2000 rupees. Okay. So see this. For example, there is a customer. So shopkeeper and customer. So here the customer is paying 3000 and there will be a acquiring bank which will be providing the POS device. Okay, so there will be acquiring bank. So that is a HDFC Bank is the acquiring bank which will provide the POS device, point of sale device, and usually they will charge a processing fee. What is that processing fee? Say processing fee is 1.5% plus GST. GST how much? 18%. GST at 18%. Now you tell me how much will be credited to the shopkeeper. Entire 3000 definitely not be credited. You calculate and tell me how much will be credited to the shopkeeper. $3,000 minus, what is the processing fee? 1.5% on 3,000? 45. And what is the GST on 45? 18% of 45. 8.10. So how much amount will be credited to this account? 946.90 will be credited to his account. You understood this? Now, what if the amount is not 3,000, the amount is somewhere like 1,500? Then how much will be credited? If it is 1,500, shopkeeper, so the HDFC bank and customer. So customer paid how much? 1,500. And how much will be credited to the shopkeeper? Again, same processing fee. Processing fee is there, and that processing fee is 1.5% plus GST 18%. Now, how much will be credited? 1,500 minus processing fee, how much? 1.5% of 1,500. 22.50. Will there be any GST on this? No. So there is no GST, even though the applicable GST is 18%, but it will be exempted. Why it is exempted? Because the transaction amount does not exceed 2,000 rupees. So 1,500 minus 22.5, how much? 1,477.50. So GST is not there, but processing fee will always be there. So what is the point that you need to remember in this case? GST on processing fee for a transaction up to 2,000 rupees is exempted. Then the sixth point already we discussed: business facilitator, agent of business facilitator, business correspondent or agent of business correspondent earning commission from which area? Rural area branch is exempted. That is this. And these two charts already we have seen. Yesterday only these two charts we have seen. And what is that I told you? Business facilitator, then agent of business facilitator, business correspondent, agent of business correspondent earning commission from rural area branch is exempted. Urban area branch taxable. In that, business facilitator shall never pay GST on outward supplies and inward supplies, whereas business correspondent shall always pay GST on outward supplies and inward supplies. This discussion already we have made. Then look into the seventh point. There is a multi-service SEZ in India. Multi-service SEZ is Gift City. Gift City, Gujarat International FinTech City. Gift City is a multi-service SEZ. In that multi-service special economic zone, there is one intermediary. That intermediary is providing services to their customers outside India in relation to currencies other than Indian rupees, that is foreign currencies. Example, you take PayPal Incorporation. PayPal Incorporation is a payment intermediary in abroad, like Paytm in India, PhonePe in India. Like that, PayPal is a payment intermediary. So this PayPal has started their business in India, that too where? In multi-service SEZ. To whom they will provide services? Indian customers or foreign customers? Foreign customers, for which they get some money now. That too they deal with which currency? Indian currency or foreign currency? Foreign currency. They get some consideration. On that they are not required to pay GST. It is exempted. Is it clear? So what is that? There is an intermediary. Where is that intermediary located? Multi-service SEZ. Where is that multi-service SEZ in India? Gujarat. And they provide service to whom? To their customers outside India. And how the consideration will be received? And they deal with Indian rupees or foreign currency? Foreign currency. That activity is exempted. See this. Service by an intermediary of financial service located in a multi-service SEZ to a customer located outside India for international financial service in currencies other than Indian rupees. So these are the 7 points in banking service which is exempted. Any other activity in relation to bank will become taxable. Okay. Then look into the next area, that is healthcare services. In healthcare services, at present we have only 2 exemptions. Healthcare services in relation to human beings and healthcare service in relation to animals or birds. These two are only exempted. Remaining healthcare services are taxable. What is that healthcare service in relation to human beings? Healthcare services provided in a clinical establishment by an authorized medical practitioner or by a paramedics, including ambulance service, is exempted. So what is the first point in exemption of healthcare service? You need to remember, healthcare service provided by a clinical establishment or authorized medical practitioner or paramedics, including ambulance service, is exempted. What is the meaning of healthcare services? You should remember, okay, very important definition. Healthcare services meaning, you see, pre-treatment. Pre-treatment means what? Before treatment. What they will do before treatment? Diagnosis called as X-ray, scanning, blood test, urine test, etc. So that will be coming under diagnosis. Thereafter they will provide the treatment. Then care. Care will be post-treatment. After completing the surgery, the patient will be kept in observation for some days till the time discharge. So that is known as post-treatment care. For what? For any disease, illness, injury, pregnancy in any recognized system of medicine. So what are the examples of recognized system of medicine? Allopathy, homeopathy, Ayurvedic, Siddha, Unani, naturopathy. These are all some recognized system of medicines. What if it is not a recognized system of medicine? Whether that healthcare service is taxable or exempted? Taxable. Examples of non-recognized system of medicine: pranic healing, Reiki healing treatments are examples of other than recognized. What is this pranic healing? Every person will be surrounded with good pranas and bad pranas. Okay. Now, say for example, you are having dengue or jaundice, etc. and all. So why? It is because of the negative energy which is around you. So now I am a pranic healer. What I will do? I will catch that negative energy and destroy it. When I destroy it, you will be surrounded only with the good energy. So dengue, malaria, everything will be gone. Not a recognized system of medicine, scientifically not proven. So therefore, this will be taxable. Then in Christianity, some pastors are there. What they will do? So lot of people will be coming with many diseases, mental disease and all. What pastor will do? He will take the holy water and throw, boom, like this. So what will happen? So like monkey, donkey, they will be jumping like that. So when that water is put on them, everything will become normal. So they will become normal and they will say, everything over and God has seen me, like that, and a lot of overaction they do. That is acting actually, okay. So that acting is not healthcare service, you got it? So therefore that will not come under healthcare services. I am not talking about any religion. In Hinduism also this kind of overactions they do. They will take one neem tree branch and they will hit on that person. So not fever, everything will run away, okay. So that is also not recognized system of medicine and all, okay. So even in Islam also it is there. Like after the prayer, so they will come and they will blow on your face, so that diseases will go. I don't know what disease will go or not. I don't remember, like believe in all these things because these are superstitions, okay. And what if that person was having COVID? If he blows, what will happen? Think of, no? You know. So therefore, you know, these are all not scientifically proven, and that is not read as recognized system of medicine. And in exam it will be given, don't worry, whether it is recognized or not recognized, it will be given. And if it is a recognized system of medicine, then only that healthcare service is exempted, including transportation in an ambulance. Sir, ambulance already it is coming separately also, including ambulance service. What is this ambulance and that ambulance? This ambulance is part of healthcare. Means a hospital which provides the treatment is only providing the ambulance service, part of healthcare, exempted. And that hospital is not providing any treatment, but they provided ambulance service, so then also it will be exempted. Means transportation of a patient in an ambulance, whether the hospital is doing the treatment or not doing the treatment, both cases it will become exempted, okay. For example, Apollo Hospital ambulance, okay, and Apollo Hospital ambulance has taken a patient from his patient's house to Apollo Hospital, and not necessary that the patient has to undergo treatment in Apollo Hospital. Maybe they will not like Apollo Hospital, so because of the bad vibe that is there, so they will not like Apollo Hospital, and they wanted to go with MGM hospital. MGM, like that one good hospital is there, nurses and all will be good. So therefore, that patient says, I want that MGM only, like that. So then in that case, the MGM hospital will be taking the patient from Apollo hospital to MGM hospital, and this will be part of healthcare services. But transportation of people in ambulance is not exempted. That will be taxable. Say one ambulance transported the patient, dropped the patient, return they have to come empty now. So they took 4 or 5 people and collected 100 rupees from each and they returned. So whether that will be taxable or exempted? Taxable. That is not transportation of patient in an ambulance. Okay. Then renting of ambulance, like in construction sites and all, they will be taking ambulance on rental basis for the keeping the ambulance in the construction site, so that any kind of accident happens, immediately the person can be taken. So this renting of ambulance is not transportation of patient in ambulance. Again, it will become taxable. So remember, only transportation of a patient in an ambulance is exempted, whether it is part of healthcare or not part of healthcare. Then next one, but does not include cosmetic, plastic surgery and hair transplantation. Why are this is not related to healthcare? This is not because of any disease or illness or injury or pregnancy. So it is no way connected to that. This is like, if you want to look good, that's why you are doing this, okay. But even without doing this also, you will be alive only, you will not die, okay. But you want to look good, and for that reason you are making all these things. So this is not healthcare service, but this will come under healthcare service if these are carried out to restore the body parts affected due to congenital defects. By birth itself, if there are some defects, to rectify the defects, if they carry out a plastic surgery, then it will be exempted. Example, a baby born with a cleft lip, broken lip. After some days, so they will carry out a cosmetic surgery. They attach the lip, because usually the lip will be broken, okay. They attach that lip and they will make it normal through plastic surgery. This is actually a congenital defect. Because of the imbalance in the genes, this problem will happen. So that plastic surgery will be coming under exempted. Then suppose if a person met with an accident, okay. So usually what happens, so big luxury bikes they buy, and wheelie they will do, and they will fall, overaction they will do sometimes. So maybe in one share auto, one girl might be going. So our guy wanted to do wheelie, join like that. So now what will happen? Chennai roads, needless to say, so that to service roads and all, you should not do wheelie. So what will happen? You will go and fall in one corner, and thereafter one leg or hand will be broken, and then so they will be doing cosmetic surgery to attach that hand or leg. Will this be coming under taxability or exempted? Exempted. Why? To restore the anatomy of body parts affected due to injury or trauma. Fire accident will happen. When fire accident happens, completely body is burnt. So they do cosmetic surgery. So that is also coming under healthcare services. Developmental abnormalities. So during the growth stage, there could be imbalance in the limbs. So because of that, so the left limb to the right limb, so it may not grow properly. So there will be imbalance, and their walking also will be different. So they have to, either have one support for walking. That's why what they do is that they do some cosmetic surgery and expand the limb so that they can walk normally. So this is again coming under developmental abnormalities exempted. Now, you tell me, what is the meaning of healthcare services? Come on. Pre-treatment, diagnosis, then treatment, called as care. Diagnosis, treatment, care. For what? Illness, injury, disease, pregnancy. In which system? Any recognized system of medicine. Includes ambulance service, excludes cosmetic, plastic, hair transplantation. But these three will come under healthcare when? To restore body parts on account of congenital defects, developmental abnormalities, injury or trauma. Understood? So this definition you need to remember, because in exam when you come across a situation, you need to write that it is a healthcare service and it is exempted. That's why this definition is important. Then next, where this healthcare service should be provided? In a clinical establishment. What is a clinical establishment? It can be any place where the healthcare service is provided. That could be even a nursing home or a clinic or a super specialty hospital or a multi-specialty hospital. Everything will be coming under clinical establishment by authorized medical practitioner. Who is an authorized medical practitioner? So minimum MBBS degree, and that should be a minimum qualification, and they should be registered with the medical council. They should get a license to act as a doctor. So they are called as authorized medical practitioner. Who are paramedics? Paramedics, those who assist the doctors like nurse, lab technician, physiotherapist, etc., including ambulance services. So this is the first point that we have: healthcare services provided by a clinical establishment or authorized medical practitioner or paramedics, including ambulance services. Then second exemption we have is healthcare service in relation to animals or birds. We call it as veterinary clinic services or vets, etc. So that is also exempted. Apart from that, any other activity will be taxable. And previously we had these two exemptions, now it got omitted. So biomedical waste treatment operators, they will collect the medical waste from the hospital and processes it, for which they get some charges. Previously it was exempted, but now it is omitted, therefore it will be taxable. Same way, cord blood banks. Cord blood banks will preserve the cord blood and stem cells. So as soon as the baby is born, the umbilical cord that connects the mother and the baby, in that they take the stem cells and they preserve it, so that for that baby in future, if they want to provide any stem cell therapy for cancer, etc., they can use these stem cells. So this preservation of stem cells was previously exempted, now it is omitted, which means consequently it will become taxable. Then one more point here: previously all healthcare services was exempted. As a part of healthcare, even the medicine sold, room charges, everything was exempted. But now for room charges, we have a point. What is that? If hospital collects some room charges, is it ICU charges or other room charges? What is the difference between ICU and other charges, Pa? ICU is basically for doing the treatment, surgery or operation. Whatever may be the ICU charges, it will be exempted. But if it is other charges, means after the surgery gets over, the patient will be kept in a room till the time they discharge, na, that room charges will be exempted. How much per day it should be? Does not exceed 5,000 per day. What if it exceeds 5,000 rupees per day? Entirely taxable. You remember in the entire exemptions chapter, except incubating services, everywhere, if there is a monetary limit for exemption, if you cross that monetary limit, entirely it will be taxable. Only one place, that is incubating providing services up to 50 lakhs is exempted. If it is beyond 50 lakhs, that excess only taxable. Okay. Whereas in every other place, if there is a monetary limit, you cross that monetary limit, fully it will be taxable. Like that here, room charges 4,500 exempted, 5,000 exempted, 6,000, 1,000 is taxable or entire 6,000 is taxable? Entire 6,000 will be taxable. Then next, what about food supplied to inpatients? Who are inpatients? Those who are admitted in the hospital is known as inpatients. Those who go to the hospital for consulting purpose, not admitted in the hospital, will be called as outpatients. You understood? Those who get admitted in the hospital and receive the treatment is known as inpatients. Those who go for consulting, not for admission, will be called as outpatients. So any service provided to inpatients is exempted. So food supplied to inpatients, medicine sold to inpatients will be exempted. What about food sold to outpatients, medicine sold to outpatients? It will be taxable. So food supplied to inpatients is part of healthcare service and it is exempted. Then service provided by consulting doctors to hospitals is also exempted. Usually what will happen? Some hospitals, there will be expert doctors who will not be employees of that hospital. They are like freelancers. basically like this ENT or gynecologist or cardiac surgeons, then even pediatricians. These are the people who are called as specialists, and they will be associated with multiple hospitals. Now, for example, when you want to go to a ENT doctor and you go to a hospital, and the hospital will collect 500 rupees as consulting fees, and 200 rupees they will keep, and 300 rupees they pay to the ENT doctor. Now 500 rupees collected by hospital is also exempted. The 300 rupees collected by the doctor from the hospital is also exempted. Why 500 collected by hospital is exempted? Services provided by a clinical establishment. Under that point, it is exempted. Then the 300 rupees which is collected by doctor from the hospital is also exempted under the CBIC circular. Services provided by consulting doctors to hospitals is also exempted. Then next point, usually people who are not blessed with kids, they go for infertility treatment called as IVF or ART. These are the two treatments that are there: in vitro fertilization, assistive reproduction technology. So these are the two treatments for people without kids they will be providing. And is this IVF and ART coming under healthcare services? Yes, it will come under healthcare services because first there is a infertility which is abnormality, correct? So for treating that abnormality only, they provide this treatment. So it's a part of healthcare service and it is exempted. The abnormality, disease or ailment of infertility is treated using ART procedures such as IVF, and this will be part of healthcare service and it is exempted. Then healthcare services in any recognized system, these are examples: allopathy, naturopathy, siddha, unani, homeopathy are exempted. Then usually a lot of people will go to the dentist for root canal treatment. So whenever they have this teeth issues, cavity issues, they go to the doctor, and the dental doctors will do root canal treatment. So this root canal treatment will come under healthcare service or not? Yes, it's a healthcare service, but they keep the braces. They keep the braces, either invisible braces or that metal braces and all. So then in that case, will it come under healthcare service? No, it's a cosmetic. So it will come under cosmetic surgery, therefore it will become taxable. Even after root canal treatment, they will be keeping ceramic caps. Okay, so they will break the teeth and all. So they will put the ceramic cap. So that ceramic cap again will come under cosmetic procedure, which is a healthcare service or not? No, and it will become taxable. Only purely the treatment that is provided only comes under healthcare services. Then what about rehab professionals? Rehab professionals are not doctors. They are actually these psychology experts, and where they will be working in education institutions, they will be working in rehab centers, they will be working in medical establishments. If they are working in medical establishments, so they provide the care or counseling to the patients who either undergo the surgery or who come out of the surgery. For example, a person has lost his leg. When a person is losing his leg, you don't know the kind of trauma he will be in. So they will not like to live also, because so far they would have been accustomed. So from childhood itself, if they don't have legs, it is okay. But because of some accident, if they lose the leg, so they cannot take that fact, and for which they need the psychology experts' help to ensure that these people are not going into depression. So that is the service of rehab professionals in medical establishments. Whatever money that they collect will be exempted. Then educational institutions also, rehab professionals will be providing counseling to the kids who will go into depression because of this exams, result, etc. and all. So then mainly competitive exams, for example NEET or IIT, we will not be having that issue and all. Okay, so we will take it easily only, and we don't need perhaps anyone like that to tell us no, don't go into depression, etc. and all. Hardly that result today only, that too because others will look at us and will be asking. So therefore, otherwise next day or morning and all, when you get up, it will become normal only. So actually you have to take life that way only, because see, not every day is the same day in your life after you become qualified. After you become CA, do you think that many people will be telling, okay, once you complete education, no issue and all? No, the real challenge starts there only. Till the time you are required to complete your education, completing education is the only problem. But the moment you complete education, so daily is a problem. You go to the job, you need to get a job, and in the job you need to face the politics, and in that politics you need to grow in your life. Thereafter marriage, kids, and their life, so everything will be like a problem. And therefore, compared to that, this is okay. Only one issue you have, that is clearing the exam is the only issue. You understood or not? So if this itself you are not able to face, then what you will be doing in future? You cannot face any kind of issue that arises. So therefore, we don't have problem. But kids, this 11th standard, 12th standard kids and all, what they do, NEET result, if they are not getting positive result, they'll say, okay, I will die like that. As if dying is something which is, so easy. They will say, I want to attempt suicide, I don't want this life, etc. That's where these educational institutions will have some rehab professionals who will be providing counseling to them. That money collected by rehab professionals is exempted. Rehab centers. So rehab centers are basically for drug addicts, alcohol addicts, or some mentally depressed people, etc. and all. But remember, rehab centers are exempted provided that rehab center is established by government or a charitable trust. What if it is a private rehab center? Then it will become taxable. So that's what you can see in the next page. Services of rehab professionals, if they are working in medical establishments, let it be government or trust or private, it is exempted. Whereas if they are working in education institutions, again, let it be government or trust or private, it is exempted. But if they are working in rehab centers, only if it is government or trust operated rehab center, their service is exempted. If it is private rehab center, then it will become taxable. Then next chart you can see, there is a hospital which is providing food to inpatients. What is your answer? Taxable or exempted? Exempted. They are supplying food to outpatients, visitors or staff. What is your answer? Taxable. Now, hospital asked an outdoor caterer. They gave their premises on renting to outdoor caterer. Whether this renting is healthcare services? No. So therefore, it will become taxable. Now the outdoor caterer will sell food to whom? Inpatients or outpatients? Generally, outdoor caterer will sell food to outpatients. That will be taxable. However, if the hospital permits, the outdoor caterer can supply food to the inpatients, then it will become exempted. But usually it will not happen. So see the note there. Outdoor caterer is not allowed to supply food to inpatients in hospital. If it is sold to inpatients, it is treated as authorized by hospital and it will become exempted. You understood? They are not allowed to sell it to inpatients. But if they sell, means hospital is authorizing, that's why it will come under exemption. Then hospital is giving their premise on rent for pharmacy to sell the medicines. Is that renting taxable or exempted? Taxable. Now that pharmacy is selling medicines to inpatients, what is your answer? Exempted. If the pharmacy is selling medicines to outpatients, then it will be taxable. Now listen, there is a pharmacy which is not connected to hospital. A third party pharmacy like Apollo Pharmacy or MedPlus, like that, some private pharmacies are there, not associated with hospital. Now that pharmacy is selling the medicines. Will it be taxable or exempted? Always taxable. Always taxable. Only if the pharmacy is attached to the hospital and that pharmacy is selling the medicines to the inpatients, then only it will be exempted. Otherwise, all pharmacies, the sale of medicines will be taxable. That is with respect to healthcare services. You understood? Then we'll quickly complete all these things and see the question and answers. So then you will know its application. So right now you have to just listen and try to keep it in your mind. Then entry tickets. Following are the entry tickets which are exempted. Irrespective of the ticket price, few entry tickets are exempted. Only if the ticket price does not exceed 500, few entry tickets are exempted. What are the entry tickets which are exempted irrespective of the ticket price? Means whatever may be the price of the ticket, it is exempted. So you remember 6 only you need to remember, because these 2 events are already completed. So that will not be tested. Only 6 you need to remember. What are they? 3 related to animals. What are the places related to animals? Zoo, wildlife sanctuary, tiger reserve. Then 3 places. What are those 3 places? Museum, national park, protected monuments. Protected monuments like Red Fort, Charminar and Taj Mahal. These are examples of some protected monuments. Okay. So tell me what are the 6 entry tickets which are exempted, whatever may be the ticket price. 3 animals related. Zoo, wildlife sanctuary, tiger reserve. Then next 3 places. Museum, national park, protected monuments. So these are the 6 entry tickets. 2 events are there, but those 2 events are already completed. No need to remember that. Then, whereas 9 entry tickets are exempted if the ticket price does not exceed 500 rupees. So what are those 9? Related to performance, 4 tickets. What are the performance means? Dance performance. Then musical performance. Musical performance also includes concert. Then theatrical performance. Theatrical performance means stage shows like drama, ballet, stand-up comedy. All these will come under theatrical performance. So 4 performance related. What are the 4 performance related? Dance, music, concert, theatrical performance. Then next 4 events. 4 events. Award function, circus, pageant, that is beauty show, and sporting event. 4 events. What are the 4 events? Award function, circus, pageant. Pageant means beauty show, and 4 sporting event. These 4 events are exempted if the ticket price does not exceed 500. Sporting event can be recognized sporting event or unrecognized sporting event. But in case of cricket, definitely it will not be less than or equals to 500. What could be IPL match ticket price? I am not talking about how much we pay. How much is the price printed on the ticket? 1000, 1500, that range only. Whether they have a ticket with 200, 300 rupees printed? No. So which means that, so usually that will be taxable because it exceeds 500. Again I told you, the moment it exceeds the monetary limit, fully it will be taxable. Suppose if the ticket is 750, full 750 taxable, extra 250 is only taxable. Full 750 will be taxable. Then one place, that is planetarium. So tell me what are the 9 entry tickets which are exempted if the ticket price does not exceed 500? Dance, music, concert, theatrical performance. Then circus, award function, pageant, sporting event, and one place, planetarium. Then pension services. So generally there are many pension schemes in India operated by government as well as private. But government operated pension scheme is exempted. What are the government operated pension scheme? Central government pension scheme is known as Atal Pension Yojana. Like that, any state government operated pension also will be there. These 2 government operated pensions is exempted. What is pension basically? SIP plus SWP. Systematic investment plan plus systematic withdrawal plan. So during your active life, say 50 years or 55 years, up to that, monthly you will be putting some amount. And thereafter, say 50 or 55, you can select your retirement age. From that time, you will be getting monthly some withdrawal. That is known as SWP. Okay. So SIP plus SWP is known as the pension basically. So private also lot of people are doing. Religare, Motilal Oswal, then ICICI, SBI, these people are also doing. But which pension is exempted? Only government, that is central government Atal Pension Yojana or any state government operated pension. The monthly they will collect some amount, that amount collected by them will be exempted. Then next one, insurance services. In case of insurance services, we have 6 exemptions. First, NPS, remember that, underline NPS, National Pension System Trust. NPS Trust, National Pension System Trust, will be providing life insurance services, will collect some premium, that premium collected by them will be exempted. Then next, group life insurance services. What is the meaning of group life insurance? So like related people will form a group insurance fund and they will contribute monthly some amount towards that fund. In that group, any person dies, so to their family members, out of that fund, money will go. That is known as group insurance fund. We have lot of group insurance funds, even for this professionals like CAs, CMAs and CS also, there is a concept of benevolent fund. What happens? All practicing chartered accountants will be contributing some amount to its benevolent fund. Any one practicing chartered accountant dies, so then from that benevolent fund to their family members, so ICI will be making some payment. So this is like a group insurance fund. We have lot of group insurance funds in India, but only 5 group insurance funds will be exempted. What are they? Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. These 5 group insurance funds, premium collected is exempted. Okay, so it is the first point that you need to remember in insurance. NPS trust, insurance premium collected by NPS. Then number 2, group life insurance. What is it? Group life insurance? Which group? Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. Then next, number 3, there is an insurance company which is providing general insurance services, but that insurance services should be under government notified schemes. When government will be notifying, means the premium will not be payable by the person, but the premium will be payable by the government. When government is ready to pay premium on behalf of you, all people they will pay. To whom? Below poverty line. Super. Then agriculture and farmers. Then women and infants. So these are the targeted audience. For them only they are ready to pay the premium. Why, sir? Because this is the biggest vote bank. Farmers, below poverty line, women and unemployed. So this is the biggest vote bank. You do any scheme which is targeting these people, definitely they will win in the elections. Correct or not? Hurry, 25 years. So 2 parties called as DMK and ADMK won that way only by giving free mixie, free grinder, free TV, free laptop to women and below poverty line people. Even now also, in the name of 1,000 rupees for Pongal, 2,000 rupees for Diwali, they are giving and they are winning. You understood or not? So this is the biggest vote bank, and definitely government is interested about them only. Government is not interested about anyone else. Okay. So because see why government will not bother about middle class people? Because middle class people will not go and put the vote. They don't want to stand in the queue. They don't want. If you bring voting through WhatsApp, they will. Voting through WhatsApp, voting through Twitter, etc. and all. See, don't see the Twitter, then Facebook or Instagram and decide about politics. Okay. These sect of people who talk about politics in this place will never be putting vote. Okay. So this is waste audience. Only they have to spend their time, they speak some shit that is not related. So majority of the people who go and put votes will not talk in Twitter. You understood what I am telling? So therefore, this is actually the vote bank. That's why government is not bothered about those middle class, and they are bothered only about the below poverty line, etc. Now, what is this? There is a insurance company. That insurance company is providing services. What services? Life insurance or general insurance? General insurance to the people, for which the premium is received from the government. So under government notified schemes, for example, hut insurance. Who will live in hut? Below poverty line. Okay, understood. Then coconut palm insurance, farmers. Then seed crop insurance, farmers. Like that, when you see the policy, easily you will be able to connect. Is it related to below poverty line? Is it related to women? Is it related to farmers? Yes. Then it's a government notified scheme. So the premium collected will be exempted. Can you remember this way? Then next, life insurance. Same way like how general insurance, there is an insurance company which is providing life insurance services under government notified scheme. How do you know that it is a government notified scheme? Easily, private insurance, private schemes and all where people have to pay, they will not use the word Yojana. Usually these schemes will have the words Yojana. So Pradhana Mantri Bima Yojana, Pradhana Mantri Suraksha Bima Yojana, like that. This Yojana is a word which government only uses. You understood or not? So private people will not use. So why? Because Yojana is basically a Hindi word, okay, which government is only very much interested with. Whereas private insurance companies, normal and all, they have to treat everyone equally only, whether you are a Hindi speaking person or non-Hindi speaking person. So they have to treat equally. So they use English. You understood or not? So whereas, so government schemes only uses this word Yojana, Bojana, etc. and all. So that easily you can identify that it is a government notified scheme. Okay. So scheme ending with the words Yojana, and micro life insurance scheme where sum assured does not exceed 2 lakh rupees. So two insurances is exempted here. What is that? Any insurance scheme, government notified insurance scheme or micro life insurance. Usually in micro life insurance, small premiums we will pay. How much is the maximum sum assured here? 2 lakhs. Then it will be exempted. For example, there is a micro life insurance where the sum assured is 3 lakhs. Whether the premium will be taxable or exempted? Taxable. Why it is taxable? It's a micro life insurance only. But how much should be the sum assured so that it will be exempted? 2 lakhs. That is with respect to this. Then 5. Insurance services provided to government. Usually government owns lot of properties. On that property also they need to take insurance, correct? Example pa. So what happened recently, Karnataka and all is making a protest. What? They have sent some water for Tamil Nadu. So why they sent water, I don't know. So they sent, okay. We are not bothered, they sent. And when they sent, so people over there are making protest. When they make protest, let them make, no issue. But why they are damaging Tamil Nadu buses and all, I really don't know. So when Tamil Nadu bus will go to Karnataka and these protesters are damaging the Tamil Nadu government bus. Why? You only sent. Whether we ask? No. You only sent. And you are only making protest. Damage Karnataka bus na. So why are you damaging Tamil Nadu bus? And they are not leaving anyone, everyone. So they are damaging. Now, soft target is what? Government property. Whenever you want to protest against government, go and damage government property. And somewhere in Rajasthan, this Vande Bharat train is coming. So people there are throwing stones on the train and breaking the glass. Again, government property is losing. So now government will take insurance on that property. So they have to receive insurance services and pay the premium. That premium is exempted. Services, insurance services provided to government is exempted. You understood or not? Then next, 6th point is common for all. That is, whatever 5 points that we have seen as exempted insurance, its reinsurance is also exempted. What is reinsurance? One insurance company takes insurance from the other insurance company. So generally, say one insurance company A provided service to government and gets premium from government, that is exempted. Now this premium they will share with another insurance company for reducing their risk. That reinsurance premium is also exempted. So if the main insurance premium is exempted, reinsurance premium also exempted. So tell me what are these 6 points? Come on, pa. NPS, life insurance premium collected by NPS trust, exempted. Then number 2, group life insurance. What are the group life insurance? Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. Then next, there is a insurance company which provides general insurance under government notified scheme. Same way, life insurance under government notified scheme including micro life insurance. How much should be the sum assured? 2 lakhs. Then 5, insurance service provided to government. And 6th point, reinsurance of the above insurances is also exempted. Then next, charitable and religious service. See, I am making you repeat. Reason being, if you sit at home now here itself you are sleeping. No, you sit at home and you start reading it. It is actually a sleeping pill. Understood? You don't need a sleeping pill at all. Normally you may not get a sleep. If you want to get sleep, open this tax book and start reading the exemptions. Automatically you will get sleep. Okay? Reason, because these are abstract. We don't know why it is exempted. We did not create this exemption. Someone is telling that it is exempted, so we need to learn. So far, we learned the provisions with some logic. So why this person has to pay and why this much value should be taken, like that some logic was there. But here no logic, it's an abstract. So easily you will get sleep. That's the reason why I'll be telling like this exemptions is a chapter which you need to watch the video multiple times. So you are listening na, even whenever you are finding time, you please take this exemptions part alone. So you hear, just listen as many number of times as you listen, it gets registered in your mind. The moment you see the question, it will automatically come and you will write it as exempted or taxable, okay? Because you cannot think of a CA intermediate paper without touching this exemptions question, okay? Then, charitable and religious services, following services are exempted. Number 1. Services by an entity registered under 12AA or 12AB of Income Tax Act by way of specified charitable activities. What is entity under 12AA or 12AB? Charitable trust. Whether the charitable trust receiving any amount is exempted? No. Only charitable activities, specified charitable activities, if they earn money, that is exempted. What are those specified charitable activities? Public health, advancement of religion, spirituality, yoga. But this public health anyhow exempted. Normally also healthcare service is exempted, correct? There are some NGOs which will be creating awareness about various diseases. Okay, they will create awareness like, so right now, lot of places in Chennai, so people are getting affected with dengue. So now what this NGO will do, will go to different houses and will be telling, so don't keep this stagnant water. So try to close that because mosquitoes breeding will be happening in this stagnant water. That too not in the dirty water, in the clear water only mosquitoes breeding will happen. So close the, whatever sump, tank, etc. and all. So this is what public health awareness. So they create, or they do any kind of really treatment. They go to some slum areas or rural places and they provide the basic medical needs, etc. That is a healthcare service. Anyhow, healthcare service is exempted. Even if it is provided by a charitable trust also, it will be exempted. Then, advancement of religion, spirituality, yoga. So all these Babas, Swamijis, etc. and all will be coming under this category. So they will advance religion, spirituality or yoga. Sir, whatever activity that they do, will it be exempted, sir? Yes, sir, everything, sir. In the name of religion, in the name of spirituality, in the name of yoga, if they sell toothpaste, hair oil also, it will become exempted only, sir. Okay. So then next, educational program to orphans or physically, mentally traumatized persons or prisoners. Educational programs to orphans. So some NGOs which will go to orphanages and provide them the education, exempted. Physically or mentally traumatized persons, exempted. Prisoners, exempted. Persons over 65 years residing in rural area. Okay. So I don't know what they will learn. So over 65 years residing in rural area, not in urban area, rural area. If you provide any educational program to them, that is also charitable activity. For that, whatever money that is collected will be exempted. Okay. Then, if we take direct tax class and all for them, by the time portion gets over, they will die. So then, environmental preservation. Environmental preservation is what this wildlife protection or environment protection that will be coming. So these are the 4 charitable activities that we have. Already they asked this as one theory question once. So what are the 4 charitable activities? Number 1, public health. Number 2, advancement of religion, spirituality, yoga. Number 3, educational program. To whom? Orphans, physically, mentally traumatized persons, prisoners, or persons over 65 years residing in rural area. Number 4, environmental protection. Apart from these 4, any other charitable activity, if not covered under other points, it will become taxable. Okay. So see the second point that we have. Service by a old age home. Suppose if there is a trust or a government which is running a old age home and they provide accommodation, boarding and lodging to old people. Who are considered as old people here? 60 years or more. 60 years or more is old people, and whatever money that they are collecting will be exempted if it does not exceed 25,000 rupees per month per member. Okay, it's not per annum, per month. So how much should be the monthly amounts that you should collect in the old age home? 25,000 rupees per month per member, then it is exempted. If it crosses 25,000 rupees per month per member, entirely it will be taxable. That is this. Then services by a person by way of, these two are the charitable activities. Next to two is religious activities. Okay. So what are the two charitable activities? That four: public health, then advancement of religion, spirituality, yoga, then that health, educational programs, and environmental preservation. Extra one more point is there, what? Old age home. But for that old age home, either government or a trust, and how much should be the monthly contribution? It should not exceed 25,000. Apart from this, any other charitable activity, it may be purely charitable in nature, even then amount collected will be taxable. Then two religious activities that we have, that is service provided by a person by way of conduct of religious ceremony. Who will be conducting religious ceremonies? Priest, purohit, or pandit, or church father, etc. So they conduct any religious ceremony for which they get some money. That money received by them will become exempted. So no need to pay GST. Then there are some special organizations who will be providing religious pilgrimage. So they take on a religious tour. What are considered as religious tours? Kailash Manas Sarovar Yatra, that is in China, and Hajj Yatra. These two are only considered as religious tour. And for this religious tour, there should be a special organization, not all. There should be a special organization that collect money for taking the people on a religious tour. So money received by them will become exempted. So these are the 4 points that we have. You understood here? Two charitable activities, two religious activities. Then services by specified organizations. These are the specified organizations. If these specified organization collect any amount, that amount received by them will be exempted. Now check the list and tell me, is SEBI a specified organization? Is SEBI in the list? No. So SEBI gets money from whom? Listed companies. So whether they need to pay GST? Yes. Is IRDA in the list? IRDA, Insurance Regulatory and Development Authority, in the list? No. So they will get money from whom? Insurance companies for giving the licenses. Whether it will be taxable or exempted? Taxable. And whether EPFO is there in the list? Yes. From whom they will get money? EPFO? Employer, towards PF contribution. So that is exempted. Like how EPFO, we have CMPFO, Coal Mine Provident Fund Organization. EPFO is for normal provident fund. For workers who are working in coal mines, we have Coal Mine Provident Fund. So both are covered here, correct? Then next, we have, so this ESIC. What is ESIC? Employee State Insurance Corporation. From whom they will get money? From the factory owners. So because they will be providing health services to the factory workers, so ESIC is a notified organization. And then we have NCCCD, refers to National Center for Cold Chain Development. So cold chain means what? A place where we keep the agricultural produce is known as cold chain. To establish a cold chain, you have to make some payment to this NCCCD so that they will be providing the requisite assistance. So the money collected by them is exempted. Then NPS trust already we discussed. Then UN agencies or foreign diplomatic mission. So foreign diplomatic mission means UN agencies, consulates or embassies. Who are UN organizations that we have? UN agencies, UNICEF, UNESCO, WHO, these people are called as UN agencies. And consulates or embassy, basically what consulate will do, will give visa to visit that country. US visa or Russian visa, etc. if you need to get. So you need to visit the consulates, US consulate, Russian consulate or embassy. So they will be providing visa to visit their country. So these people are called as foreign diplomatic missions, and whatever money that they collect will be exempted. So what are these specified organizations? Total 6 organizations we have. Tell me what is the list? EPFO, ESIC, CMPFO, Coal Mine Provident Fund, 3. Next 3. NCCCD, NPS trust, one more, foreign diplomatic mission. So what is foreign diplomatic mission? I gave in the next page, specified agencies of UN, embassy or consulate. Then incubator and incubatee services. We need to understand here three terms: incubate, incubatee and incubator. So China is incubator and Wuhan laboratory is incubate, where the COVID is created. Okay, so virus is created. And incubatee, the scientist working in the laboratory who created this virus, is the incubatee. Now you tell me, what is the meaning of incubate, incubator, incubatee? Incubate means laboratory, where they do the research. Okay, then incubator, the owner of the laboratory. Okay, then incubatee, so the person who is developing the biotechnology or any other innovative product. Okay, so incubate is a place where the research is carried out. Incubator is the owner of that particular incubate. Incubatee is the person who do the research in that laboratory. You got it? Now, incubatee gets some money, so for doing the services, it is exempted up to how much? 50 lakhs. Say this. So incubatee, services provided by incubatee is exempted up to 50 lakhs. What if it crosses 50 lakhs? Extra is only taxable. This is the only place where if there is an amount, if it crosses that amount, excess is only taxable. But in all other places, if there is an amount which crosses, entirely it will be taxable. So services provided by incubatee is exempted up to 50 lakhs. And what are the conditions that we have? Two conditions. Condition number 1, previous year gross receipt should not exceed 50 lakhs, and this exemption is only for a period of 3 years from the date of signing agreement as a incubatee. Okay, now see this illustration. So A Limited is an incubatee. First year they got 60 lakhs, second year 40 lakhs, third year they got 70 lakhs. Now first year how much is exempted? 50 lakhs. What is the taxable value? 10 lakhs. Second year, will they get exemption? Why? Previous year, it exceeds 50 lakhs. So second year, they will not get exemption. So full 40 lakhs will be taxable. Okay, again, third year, will they get exemption? Yes, because we need to see previous year. What is the previous year for third year? Second year. In second year, what is the gross receipts? 40 lakhs, which does not exceed 50 lakhs. So third year, they will get exemption for 50 lakhs. So remaining 20 lakhs will be taxable. So fourth year, will they get exemption? Why? 3 years already over. 3 years already over. So fourth year, they will not get any exemption. Then services provided by incubator is always exempted to any person provided the incubator is approved by government. Okay, there should be an incubator. Incubator is who? Owner of incubate, and that incubator is approved by government of India. Now whatever money that they get will be exempted. What if that incubator is not approved? Means the research is not approved research. Whatever money that they earn will become taxable. Then the next area we have is education services. In this education services, look into this fourth point first. Fourth point you see. Education sector is something which you can easily get connected with because lot of your parents' money you have invested in this place only. So services provided by an educational institution. Services provided by an education institution. To whom? To students, faculty and staff. Okay, and is exempted. Whatever may be the services, need not be education. Apart from education, today a lot of services are provided by the education institution. Everything will be exempted. Okay, bus facility, canteen facility, that is food they will be giving, uniform fees, book fees, ID card fees, like that everything will be collected. On all those amounts, it will be exempted. Okay, but it should be collected by education institution. What if it is not an education institution? Then it will be taxable. So what is an education institution? So we have three categories of education institution. Category 1 up to 12th standard. Category 2 education for obtaining a qualification recognized by law. And category 3 approved vocational education. So what is the starting point in education? We don't know. It starts LKG, play school, pre-KG. That's why in category 1 they use the word up to 12th standard. That is the first category. Up to 12th standard or equivalent. What is after 12th? Again it is divided into two. Either you go towards qualification or you go towards skill. Okay, it is divided two. If you go towards the qualification, we call it as UG, PG, professional. Okay, so UG, BCom, BBA, etc. PG, MCom, MBA, Masters. Then professional, engineering, doctor, CA course, CWL, advocate, that will come under professional. So that will be qualification, education as a part of curriculum for obtaining a qualification recognized by law. That is category 2. Or skill. What is that skill? You go to some polytechnic colleges or some centers wherein you learn some skills and you get a diploma. You will not get a degree. You will get a diploma or a certification that is called as approved vocational education. You got it, pa? So what are the three education institutions? Come on. Up to 12th standard. Education as a part of curriculum for obtaining a qualification. Approved vocational education. If these three education institutions collecting money from students, faculty and staff for any service, that will be exempted. Sir, why they collect money from faculty and staff and all, sir? Students they will collect. Why they collect from faculty and staff? They will collect, pa. For example, engineering colleges and all, if you see, they will identify one good forest and they will start their college there. And to that forest, there won't be any connectivity. So their bus only will go. And even the staff and faculty also forced to go in that bus only. And it will not be free. So they will be charging some amount from the faculty and staff. Okay. So that amount collected will be exempted. Got it? Now, you understood the first point. Tell me what is the first point that you need to remember? Any service provided by an education institution to its students, faculty, staff is exempted. What is the meaning of education institution? 3. Up to 12th, qualification, vocational education. Now, see the fifth point. Fifth point is service provided. And pa 1 minute. Any service is exempted. Okay, any service is exempted, including the admission fee. So, admission fees or this prospectus fees, etc. and all, actually you have not yet joined there. Before joining itself, they will be collecting admission fee and prospective fee. So, this prospectus fee, admission fee or application fee, all these things are also covered under this exemption. Reason being, so you are a prospective student. As you are a prospective student, so whatever admission fees, etc. that they collect will be coming under this exemption, because needless to say, in different names they will be collecting. So, I know some places where for ID card they will be collecting 100 rupees, 150 rupees like that. For what? For issuing ID card. Okay. Whether I collected it from you? Free only, na? It is. Okay. So, no one charged any amount to you. Don't worry. So, it will not be charged because it's not that much costly and all. So, in that itself 100, 150 they are collecting means, see what is the profit that is there. Hardly whatever ID card that you are wearing will be somewhere like 15 rupees to 20 rupees. That much only. Okay. And when you are leaving, no, return those ID cards and go. So that next batch it will be useful for us. You understood or not? Then, so if you want to preserve it as a memory and all, so preserve me as a memory. Don't preserve ID card as memory and all. Okay. Preserve the subject as a memory. Okay. Therefore, this like this ID cards or application fee or transfer certificate fee or eligibility certificate fee, attendance not having, for that some fee, every kind of fees will be coming under exemption here. But it should be collected by an education institution. What about tuition centers, sir? tuition centers are not education institutions. That's the reason why CA coaching institutes, how much ever big it may be, it will never be called as an education institution. It will be called as tuition center only. Okay, all tuition centers are taxable. All tuition centers are taxable. Let it be up to 12th standard or even at category 2 level, tuition centers are taxable. But ICI is not a tuition center, that's an education institution. So that's the reason why whatever exam fees that you pay or whatever registration fees you pay, even ICI will conduct some oral coaching. For that they collect some coaching fees. All those fees will be exempted. But private coaching centers and all will become taxable. Then look into the fifth point. This fifth point is service provided to education institution. What was the fourth point? Service provided by education institution. This is service provided to education institution. In the previous point, education institution was the service provider. In this point, education institution is the service recipient. Now, only you need to remember 3 points. Point number 1, transportation, catering, security and housekeeping. Okay, transportation, catering, security and housekeeping to category 1 education institution is exempted. What are the 4 activities? Transportation, catering, security and housekeeping. To which education institution? Category 1 education institution. They get some money from the education institution, that is exempted. Suppose if it is to category 2 or category 3, it will become taxable. But remember, housekeeping should be within the premises, security also should be within the premises. Now I will give you one example. There is a school. School will come under category 1 education institution only. They are conducting an annual day function in an auditorium, and to that auditorium they received security and housekeeping services. Whether the fees like amount paid will be taxable or exempted? Taxable. Why? It is not within the premises. Now for that auditorium, they received outdoor catering services to give food to the parents and the students who are coming to that auditorium. Whether that catering service to the auditorium will be taxable or exempted? Exempted, because that is nowhere given that it should be within the premises. Then next, second point, admission to or conduct of examination of that education institution. All 3 category education institution. Admission to means what? Marketing. Bringing admissions to the education institution. And conduct of examination means what? Setting question paper or evaluating the answer sheets or even invigilation or giving premises like hall and all, giving on rent for conducting the exams. So that is an example of admission to or conduct of examination. Then all 3 category institutions it is exempted. Number 3, online periodicals and journals. Basically, who reads online periodicals and journals? Category 1? No. Category 3? Category 2 only. So that's why for them only it is exempted. Online educational journals and periodicals. Now tell me what are the 3 points in this exemption you need to remember. This exemption is service provided by or to education institution. First, transportation, catering, security, housekeeping. Security and housekeeping within premises. To which category institution? Category 1. Then second, admission to or conduct of examination. Which category institution? All 3. Number 3, online periodicals and journals. To whom? Category 2 is exempted. Then come back to the first point. Services provided by way of conduct of entrance examination against consideration in the form of entrance fee. Actually, this entrance fee is collected from student or non-student. Non-student. They are not yet student. So only after qualifying this entrance exam, they will get a seat. Until that point of time, they are not the student of that education institution. That's why we have a separate point here. So service by education institution by way of conduct of entrance examination against a fee. Usually, so many places, many education institutions, to conduct the entrance exam, they collect some entrance exam fee. You take NEET or IIT, even colleges and all. So for conducting entrance exam to give seat, they will collect some fees. That fees will be exempted. But it should be collected by an educational institution. Then there are some national testing agencies or central examination board whose job is only to conduct the exam and give the result. Based on that result, the student can go and join in the counseling in colleges. For example, NEET exam is not conducted by any medical college. NEET exam will be conducted by National Board of Examination. So once they conduct the exam, they give a result. Based on that result, the student can go and join in the college. Now whether this NEET exam board will come under education institution, but they are not giving any qualification. Even then, they will be coming under education institution. Reason being, so they are conducting the entrance exam. Without entrance exam, the student will not get seat. So this will be coming under part of curriculum. So therefore, whatever fees that they collect is also coming under exemption. That is this point. So central and state educational boards are treated as educational institution for the limited purpose of providing service by way of conduct of examination to the students. Therefore, National Board of Examination or National Testing Agency is an education institution, and whatever fees they collect is exempted. The number 2, amount paid to training providers under Deen Dayal Upadhyaya Gramina Kausalya Yojana, DDUGKY scheme. Under this DDUGKY scheme, some people will go to the rural area and will be providing them training on certain skills, for which Government of India will be paying some money to these people who go to the rural area and provide them training on certain skills. So that money collected by them is exempted. For example, so you have a particular skill. Example like you know how to make the cups, paper cups, etc. using the leaves. So waste leaves or wood, etc. and all wood waste, you know how to make the paper cups, paper plates, etc. Now you go to the rural area, or you know how to make the handmade papers. So you go to the rural area, you provide the training to them under this scheme. And for doing this training, government will pay you some amount. That money which you have collected will become exempted under this. Then, any service provided by NSDC, SSC, assessment agent or training partner. So basically they provide the skill development courses. So like stock market training, tally, GST certification, so banking exam preparation, like that, lot of services they provide. NSDC, National Skill Development Corporation, Sector Skill Council, assessment agent or training partner, whatever course that they provide, that fees collected by them will become exempted. You understood these 3 points, pa? So then next one, 6th one, you see training in recreational activities relating to arts and culture. Example, recreational activities relating to arts and culture. What and all will come? Dance schools, then music, martial arts, correct? All kinds of arts and culture. But it should be by an individual. If it is by any other person, then it will become taxable. For example, listen carefully. There is a dance school. That dance school is operated as a partnership firm. Now they provide dance training to some people and collect fees. Whether that fees will be taxable or exempted. Why taxable? Because it is not an individual. Suppose if there is a dance teacher, individual dance teacher, providing Bharatanatyam training and collect some fees, whether it will be taxable or exempted? Exempted. So is there anywhere given that it should be classical dance only? No, any arts. That arts or culture not defined here, so it can be anything. What will come under culture? So training in languages, training in Vedas, Upanishads, that will come under culture. Then training in recreational activities relating to sports. So what will come here? Sports academies. So sports academies like cricket academy, shuttle academy, badminton academies, etc. are there na? They will come. But what is the condition? That they should be registered as a trust. For example, MRF Cricket Academy, which is a private cricket academy not registered as a trust. They will be collecting yearly 4 lakh rupees for training in cricket. And lot of people from there will directly go to the nationals. Okay. So this MRF Cricket Academy collecting 4 lakhs per annum will be taxable or exempted? Taxable, because it is not registered as a trust. Suppose if there is a cricket academy which is registered as a trust and train the kids and they get some money, whether it will be taxable or exempted? Exempted, because it is registered as a trust. Then 8th point, training in recreational activities relating to sports. services by assessment bodies under skill development initiative scheme. What is this skill development initiative scheme means? Like today there is a big gap between what educational institutions are teaching and what is there in the industry. To bridge this gap, so government has created some assessment bodies. In these assessment bodies, people are invited from the industry. Those who work in the industry will come and review the curriculum, and they will tell these are all outdated portion. So this no need to teach to the students. So these are the latest portions which are there. So that needs to be taught. Like that they will specify, and for doing this review of the curriculum, these assessment bodies will receive some money. That money received by them is exempted. That is the skill development initiative scheme. Then 9th point, educational program where at least 75% of the total expenditure is borne by central government or state government is exempted. Example, CA coaching is provided to below poverty line students, and for this money received from state government, how much? Say 80%. There is a CA coaching center which provided CA coaching to below poverty line students. 80% of the fees paid by government, 20% of the fees paid by the student. Now, is it exempted or taxable? Exempted. What is exempted? 80% collected from government is exempted, or entire 100% is exempted? Entire 100% is exempted. The training program is exempted. What if in that CA coaching, so 70% paid by government, 30% paid by the student, then entirely it will be taxable, because what is the condition there? So government should bear how much of the total expenditure? At least 75%. At least 75% means what? Greater than or equal to 75%. Whereas last point, 10th point, you see, coaching services to students by coaching institutions and NGOs under central sector scheme of scholarship for students with disabilities. So what is the difference between 9th point and 10th point? 9th point, at least 75% of the expenditure borne by government is exempted. But 10th point, entirely it should be borne by government. And 9th point, to any person, correct? But 10th point, to students with disabilities. So this is that DDUGKY scheme I was talking about. That is, there will be some volunteers who will go to the rural area and will be providing training. Based on that, either they will become employed or self-employed, and these volunteers receive some amount from Government of India, that is exempted. Then skill development initiative is also the same way. Like there will be some assessment bodies which is formed by Ministry of Skill Development and Entrepreneurship. They review the curriculum and suggest the changes or addition. So these people will get some money from the government, that is exempted. Then, so some circulars we have in this. So 3 circulars. After this we'll take a break. So listen. Generally, these maritime training institutes are there. Like if a student who wants to get a marine engineering degree, to get the marine engineering degree, they need to undergo a practical training for 6 months. Okay. So this 6 months practical training will not be provided by the college. They need to go to the maritime training centers, and they need to learn the practical training as to how a ship is operated, what are the parts of the ship, etc. and all. So these training centers are private training centers. Whether they will also be coming under the exemption? Yes, because if the training is not completed, the student will not get the degree, which means that training is part of the curriculum. Even though it is provided by private training centers, they will come under education institutions, so fees collected by them will be exempted. That is this first point, read that. Maritime training institutes and their training courses are approved by Directorate General of Shipping, which are duly recognized under the provisions of Merchant Shipping Act and are educational institutions, and the courses conducted by them are exempted. Then second, usually there are some Anganwadi schools, Palwadi schools. So what they do? They provide the daycare to the kids. Okay, daycare schools basically they are. And kids also will be very much interested to go to those schools because they provide afternoon lunch. So lunch will be provided by the schools itself, and for providing the lunch to the kids in the afternoon, they will be receiving catering services. whether that catering service received by them is taxable or exempted. Exempted. Why? Where does this Anganwadi schools come? Category 1 education institution. What we learned? Housekeeping, security, catering, transportation to educational institution. Category 1 is exempted, correct? So category 1 education institution catering service is exempted. Therefore, even Anganwadi schools receiving catering service is also exempted. But how they are going to pay the money is irrelevant. Whether they may pay money out of government funds or corporate donations, that is irrelevant, but the service provided to them is exempted. Then next, third point. So there are some for conducting examination, some educational institutions will receive online testing services like app development or website development, etc., or printing services. Will this also come under services provided to education institution for conduct of examination? Yes. Example, during COVID, lot of colleges has conducted online exam. Best example is CMA Institute. What ICMA Institute did, they conducted online test. So for conducting online test during the COVID time, so they received the software development services for online testing with one company. Actually, so a lot of people have provided these services. They took the services from TCS. So TCS has developed the website for them for conducting the online test. But that was one of the worst website, and that's a different story. And this website developer providing the services to ICMI for what purpose? Development of software for online testing. Will it come under conduct of examination? Yes. Therefore, whatever money that is collected will be exempted, because admission to and conduct of examination to all category institutions is exempted, correct or not? So GST is also exempt on input service relating to admission to or conduct of examination, such as online testing service, result publication, printing of notification for examination, admit card, etc. Okay, even ICI will be taking service of a printer to print the question paper, to print the answer sheets, to print the admit cards, etc. For which, even mark sheet, for which they receive service of a printing. These are all coming under which category? Conduct of examination. So that printing service is exempted. Got it, pa? So this is about exemption with respect to education services. Government services already we completed. Okay, so service provided by government, fully this we have seen up to this cost petroleum, ERCC, etc. Now we need to start with services provided to government. That we will see after the break, and we are left with hardly few points only: transportation sector, renting, etc., and miscellaneous. So 1 hour or 1.5 hour max it will be over. And then we will do an MCQ test on exemptions. With that, exemptions will be completed. Done? Look into page number 148. Page number 148. Here we have services provided to government. What we have so far was, what we have completed was services provided by government. Here government is the recipient and we are providing services to government. What is that activity? Concentrate. Government is required to do certain activities as per Article 243G or 243W of the Constitution. Example, laying down road, sanitation. These are all the works of the government, solid waste management. So government is required to do certain activities as per Article 243G or 243W of the Constitution. Either they can do or they can outsource it to some other person. Now they outsource it to some other person. Example, let's take this activity of solid waste management. Solid waste management means cleaning the garbage. So cleaning the household waste, garbage, dustbins, and throwing it in a outer space. So that is called as solid waste management. Who should do that job? Government should do. But is government doing that? No. They will outsource it to one private company called as Arbaizer Samit. So that company, Arbaizer, like that one company is there. That company is doing the work right now. So government is required to do certain activities as per constitution, which they outsourced to a person. So that person is providing services to government and receives money from the government, which is exempted. But remember, it is not all activities that is provided to government is exempted. Government is required to do those functions as per constitution, and those activities they outsourced it to one person. That person provides that services to government and gets money from government, that is only exempted. What if it is a composite supply involving both goods and services? Even then it will be exempted, provided the value of goods does not exceed 25% of the total. For example, laying down cement road. Laying of cement road is the job of the government. So in the streets, so laying down of roads will be there in many streets. So that job will be of government as per Article 243G or W of the Constitution. But what government will do, they will outsource this work to one contractor. That contractor will lay down the road. In the job of laying down road, what is a goods element? Cement and concrete is goods element, and laying down road is the service element. And in the total contract price, whether the value of goods exceeds 25% of the total, yes. So that activity is not exempted, that will be taxable. So laying down of cement road, where the value of goods exceeds 25% of the total, that activity will be taxable. Another example, sanitation of streets. In sanitation of streets, usually they will be filling this drainages and all with these pesticides, okay. So now in that work, so who should do? Basically government, but they outsource it to one person. So that person is doing the sanitation of the streets. And what is a goods element in that? So chemicals which is used for sanitation is the goods, and sanitation, so spraying that throughout the drainage, is this service. Now in that, goods element does not exceed 25% of the total, therefore that activity will be exempted. So don't remember the examples alone, not that these cases only it is taxable or exempted. Remember the provision. What is that? If it is a pure service which is provided by any person to government, then it is exempted. If it is a composite supply of goods or services, where the value of goods does not exceed 25% of the total, even then it is exempted. In remaining cases, it will be taxable, okay. So here one important point is that these activities are required to be performed by government under Article 243G or 243W of Constitution, okay. And only these services are provided to government, but not to government authority or government entity. Purely it should be provided to government. Government means what? Central government, state government or local authority. So municipal corporation, gram panchayat and all will come in this. Then next. So looking to the next page, generally in North India and all, in ration shops, they will not give rice. So in South India, they will give rice. But in North, they give wheat flour, atta. They will be giving atta. So therefore, government will buy atta from the wheat flour millers. So what that wheat flour millers will do? They will buy wheat, convert it into atta, and they will be selling it to the government. In this atta, what is the goods element? Wheat. What is the service element? Converting it into powder. That is the service element. Now, definitely the value of goods is more than 25% of the total or does not exceed 25% of the total. Definitely it is more than 25% of the total. So whenever the wheat flour mills supplies the wheat to government, that activity is not exempted, that will become taxable. See this circular. Composite supply of service by way of milling of wheat into wheat flour along with fortification by a person to state government for distribution of such wheat flour under public distribution system is not eligible for exemption. Why it is not eligible for exemption? As the value of goods involved is greater than 25%. Then another one, generally, this government is required to do certain activities as per the constitution, correct? Those activities only. One point is there, Indian Army receiving the services of cleaning of bathrooms and toilets for the Indian Army, lot of places will be there na. So like Indian Army quarters. For that Indian Army quarters, toilets, for cleaning the toilets, they gave contract to one person. So that person is providing the service by way of cleaning the quarters toilet, and for which they collected some money from Indian Army. Is that activity taxable or exempted? Here, is Indian Army required to do that activity as per constitution, and that they outsourced it to some other person? No. So this activity will not be exempted, it will become taxable. That's why I was stressing that point. First you check whether government is required to do that activity as per constitution. That activity they outsourced it to one other person. That person providing services to government got some money, then only it will be covered here. Okay. Then, so this illustration is on services provided by government. Have a look into this question number 1. State government of Tamil Nadu give immobile property on rent to flower vendor Mr. Rahim, whose aggregate turnover during previous year does not exceed threshold limit, and Mr. Rahim is unregistered even during the current year. Whether this renting of immobile property by government to business entity in the list of 14 specific exemptions. Check the previous pages. Is it in the list of 14 specific exemptions? Renting of immobile property by government to business entity? No, it is not covered. Okay, first general exemption applicable or not applicable for renting of immobile property? First general exemption. See the first general exemption. What is that first general exemption? Services provided to business entity whose turnover during previous year does not exceed threshold limit. Whether that point is applicable for, general exemption point number 1 is applicable here? No, because that is not applicable in case of renting of immobile property. Second general exemption is applicable? Yes. But for second general exemption, what should be the value? 5,000. But here any amount is given? No. So therefore, it is not covered under specific exemptions. It is not covered under first general exemption, second general exemption. Consequently, this activity will be taxable. Wherever it is taxable, services provided to business entity, who will pay GST? Business entity will pay, recipient will pay GST. But I gave you one exception point. What is that? If that business entity is unregistered, then supplier only will pay GST. Check your notebook. So notebook, you see, government services to business entities we discussed. In that, what is that I told you? Always services provided by government to business entity is covered under RCM. And last column wide point you have written. What is that? If they are providing services to a business entity and that business entity is unregistered, then government only will pay. In this case, you read this and tell me who will pay GST. Will that Mr. Rahim pay GST or state government of Tamil Nadu pay GST? State government of Tamil Nadu. Why? Because Mr. Rahim is unregistered during the current year. Understood here? Then second, state government of Karnataka provides advertising service to an ad agency whose turnover during previous year exceed threshold limit. Invoice value 4,500. Such ad agency is not registered during current year. So advertising services to ad agency, is it covered anywhere in the 14 specific exemptions? No. First general exemption not applicable because their aggregate turnover during previous year exceed threshold limit. But second general exemption is applicable here. What is that second general exemption? Invoice value does not exceed 5,000. Therefore, this activity will be exempted. Then third illustration you see. What will be your answer if the invoice value is 6,000? Taxable. How? First general exemption not applicable. Second general exemption also not applicable because the invoice value is more than 5,000. So it will be taxable. And wherever it is taxable, who will pay GST? Business entity only will pay. Only for renting of immobile property we have that FCM. It is not renting of immobile property, it is advertising service. So who will pay GST? Recipient only will pay GST. Recipient, what if they are unregistered? They need to compulsorily register and pay GST. Got it? Then looking into the next area, renting services. This renting services majorly we have already discussed. So movable property. In case of movable property, renting of movable property, what are the exemptions? Yesterday we have seen renting of motor vehicle, 4 points exempted. What are they? renting a motor vehicle that can carry more than 12 passengers to a state road transport corporation. Number 2, renting of electric vehicle that can carry more than 12 passengers to a local authority. Renting a motor vehicle to a goods transport agency. Renting a motor vehicle to a person who is providing transportation service to educational institution up to 12th standard. These 4 cases it is exempted. Other cases it will be taxable. Wherever renting a motor vehicle is taxable, if 3 conditions are satisfied, RCM is applicable. What are those 3 conditions? Supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. Otherwise, it will be FCM. Then, look into renting of immovable property. Here also we discussed. Renting of commercial property. What is your answer? Renting of commercial property. Always taxable under FCM. Renting of residential property. Divide into 2. Residential purpose, commercial purpose. Commercial purpose, what is your answer? Taxable under FCM. If it is for residential purpose, again divide into 2. Registered person, unregistered person. Unregistered person, what is your answer? Exempted. Registered person, it will be taxable. But we have an explanation now. What is that? Suppose if it is renting to registered individual for family stay, it is exempted. So renting to registered individual for their family stay is treated as renting to unregistered person and it will be exempted. You understood this part, pa? Then next you can see transportation services. This already we know. So a school providing transportation service to student, faculty and staff is exempted. Am I right? Which category? Which case? Any service provided by education institution to its students, faculty and staff is exempted. That place it is exempted. Now there is a travel agency. That travel agency provides transportation service to school. That is also exempted. Where? Transportation of students, faculty and staff to category 1 education institution is exempted there. And this travel agency takes the motor vehicle on rent. That is also exempted. Here, renting a motor vehicle to a person who provides transportation service to education institution up to 12th standard. So this entire line is exempted. You got it? Now, what if the travel agency directly provides transportation service to students, faculty and staff? Usually, some private van operators are there. They will directly provide service to the students, faculty and staff and collect money. Is it taxable or exempted? That is taxable. That is not exempted. Now the travel agency take motor vehicle on rent. That is also taxable. When it will be exempted? When renting a motor vehicle will be exempted? Renting a motor vehicle to a person who provides transportation service to school, then only it is exempted. Then next scenario you see, there is a college which is providing transportation service to students, faculty, staff. Is it taxable or exempted? Exempted. Which place it is exempted? Any service provided by an education institution to its students, faculty and staff is exempted. There it is covered. Now ABC Travels, travel agency, provides transportation service to college. Is it taxable or exempted? Taxable. Why? Transportation service only to category 1 is exempted. Category 2 and 3 will become taxable. Now this ABC Travels takes the vehicle on rent. Whether that rent will be taxable? Of course, yes. Because they are not providing service to the school, they are providing service to the college. So this renting will become taxable. The next point you can see, renting of precincts of a religious place. What is precincts means? Surroundings. Precincts means surroundings. There is a religious place meant for general public. What is an example of religious place meant for general public? Temple. Let's take a temple, church, etc. So it's a religious place meant for general public. And that should be registered as a trust under Income Tax Act. Now, they have given their premises on rent. For what purpose? Tirumala you take pa. Tirumala is a religious place meant for general public, registered as a trust. Now, for what purpose they will give the premises? Stay, accommodation or functions, correct? Marriage function or etc. any social function. Then shops. Suppose if they are giving their place for accommodation purpose, it is exempted if per day charges is how much? 1,000 or less than 1,000? Less than 1,000 is exempted. 1000 rupees or more than 1000 rupees will be entirely taxable. Suppose if the room charges is 500, 750, 1000, 1200, that and all will become taxable. Then next, suppose if they are giving it for hall, for what purpose? Marriage functions or name keeping ceremony or betrothal functions, engagement ceremonies, lot of things will be happening there. And now per day how much should be the charges so that it is exempted? Less than 10,000 per day is exempted. Suppose if it is greater than or equals to 10,000 per day, entirely it will be taxable. Then shops, suppose if it is less than 10,000 rupees per month, exempted, not per day, per month, exempted. If it is greater than or equals to 10,000 per month, entirely it will be taxable. Now in Tirumala, I went to one marriage function. So it was like a big hall like this, okay. Big hall, one stage like this is there, and around some 30 couples are there. 30 couples are there who are getting married, and there are some 5 priests who were reciting that mantras and all, and those couples were getting that marriage and all, and their relatives, family members and all are surrounding, okay. Now at a time for 30 people they are conducting the marriage ceremony, and from each couple they collected 2000 rupees. From each couple they collected 2000 rupees for this, okay. So now 30 into 2000 is what? 60,000. So per day it exceeds 10,000. So is it taxable? No, not that way. Per person how much they collected? 2000. It does not exceed 10,000, less than 10,000. Therefore everything will be exempted. You understood or not? Sir, in a hall at a time marriage function is happening for 30 people, but see from each person how much they are collecting. So it does not, each couple means each family, how much they are collecting? 2000. So it is less than 10,000 per day, therefore that amount will become exempted. You got the clarity? Then what about entry tickets of the temple? Usually 300 rupees special entry darshan ticket is there, na? Taxable or exempted? Is it covered here? No, then where is it covered? Entry tickets where we have temple. Entry ticket we don't have temple. In that 9 entry tickets where we have temple, we have circus, musical performance, theatrical performance, like that only. Where we have temple in that list, we don't have temple in that list. Then where it will be covered? Charitable activities, advancement of religion, spirituality, yoga. Under that category it will be exempted, because temple is also registered as a trust and it is advancement of spirituality, correct or not? So therefore all the monies which are collected by the temple in whatever name they call, so they call it as abhishekam or some special puja or sevai, whatever it may be, so everything will be covered under exemption. Under which category? Advancement of religion, spirituality, yoga. Under that it will be exempted. Then next, look into the next point. Services by an unincorporated body. There is a association. That association collects some money from its members. That money collected by the association from the members is exempted if that association is a trade union. What is a trade union? Association of traders. All relevant traders will form an association. Like all jewelry shops will have an association. All medical shops will have an association. Like that all rice merchants will have an association. For what purpose? In order to ensure that collectively they can fight against the government policies. Suppose if government has taken a policy that is going to affect their business, they need to fight against that policy. So individually they can't do anything. As an association only they can fight. So therefore they form a trade union. So in this trade union, to become a member of the trade union, you have to pay the membership fees. That membership fees collected by the trade union is exempted. Same way, industrial or agricultural labor union. So for example, so you take this Sri Perambudur, like that one area is there in the outskirts of Chennai, in which there are around some 10 to 20 factories are there. So all these factory workers is having one labor union. So industrial labor union. Why? Suppose if any factory is not properly paying the wages or bonus, etc., so then that association will fight for the workers. So this is known as industrial or agricultural labor union. In order to become member of that union, again they collect a membership fees, that is also exempted. So this trade union and labor union both are exempted irrespective of the amount. You got the clarity? Then next, suppose if the association is providing exempted services to its members, so anyhow that service itself is exempted. If the association provided to their members also, it will be exempted. For example, vaccination is exempted, correct? COVID vaccination or any vaccination is exempted. And suppose if that vaccination is provided by a society to its flat owners, that is also exempted. Why? Because anyhow the service is exempted. If it is provided by association to its members, also exempted. Then in some associations what they do, they install the solar panels on the top of the apartment. They install the solar panels and generate the electricity. And whenever they needed the backup, when the main power is not available, the generated electricity using solar panels, they will be supplying it to the household and they will be collecting some charges. Generally electricity is exempted. If it is given by association to its members, that is also exempted. Are you getting this? So because the service itself is exempted. Next, suppose if it is a resident welfare association. What is a resident welfare association? Apartment owners association pa. So all the flat owners will form an association in order to incur the common expenses. What are the common expenses that will be there in flats? What is that? Expenses. Of course, they collect maintenance charges. For what purpose they collect that maintenance charges? To meet the common expenses. What are those common expenses is what I am asking. Security, gardening, lift maintenance, then water supply, power backup, correct? Motor, and these are the expenses which are common. Common area, lighting, electricity. So they will in turn recover it from the flat owners in the form of maintenance charges. Usually what is the range of the maintenance charges in apartments? 1,000, 2,000, somewhere 3,000. But if it is more than 7,500 rupees per month, then only it will be taxable. So usually 90% of the apartments are not covered here. So only 10% of the luxury premium apartments like gated communities, where everything they provide inside itself, they are only covered here, where they will be charging more than 7,500 per month. Like swimming pool facility is there, gymnasium is there, a theater is there. So everything is inside that gated community. Then only they will be charging this much. That only will be taxable. So how much should be the maintenance charges per month pa? Greater than 7,500. Again, what if it is greater than 7,500, entirely taxable, or the amount exceeding 7,500 is taxable? Entirely it will be taxable. Then next, apart from these four, if there is any other association collecting money from its members, if the amount does not exceed 1,000 rupees per annum, 1,000 rupees per annum, then it will become exempted. For example, we create one association, POSCA, Protection of Students of Chartered Accountancy Association. For what purpose? In order to fight with the ICI, okay? Because individually you will not fight with ICI. Why you will not fight? Fear. You have a fear. What is that fear? So that is like, what if they note your registration number and they purposely fail you, like that you have fear and all. And therefore, collectively we can fight as an association. So therefore, I create this association. Lot of issues are there for us, correct or not? So we are writing exams properly, we are not getting marks, and we don't know how they will award the marks. Suggested answer only we are writing, but then also we are not getting full marks. Many issues are there. So therefore, we need to fight with ICI. For that we created one association. Now in that association, all CA students will join as the members. How much will keep membership fees? Say 500 rupees will keep membership fees per annum. Okay, taxable or exempted? Exempted. Why exempted? It does not exceed 1,000 rupees per annum. So the amount collected is exempted. Then, now let's take a scenario. There is a apartment in which 15 flats are there. There is an apartment with 15 flats. From each flat, they are collecting 9,000 rupees. And in a year, how much it will be? 15 flats. Each flat they are collecting 9,000 rupees. And per annum, how much will be the total turnover? 15 into 9,000 into 12. 16 lakh. Whether it exceeds 20 lakhs? Whether it exceeds 20 lakhs? No. Even though per month it exceeds 7,500, but the overall turnover does not exceed 20 lakhs. So, are they required to register and pay GST or not required to pay GST? Not required to pay GST because their aggregate turnover does not exceed threshold limit. Is this service taxable or not? Yes. Service is taxable. Why service is taxable? Per month it exceeds 7,500. So, be careful in exam. Don't write it as exempted. Even though answer is correct, you will not get marks. Why? Because the service is taxable, but the GST is not payable. Why GST not payable? Because the supplier is not required to get registered. Why they are not required to get registered? Because their aggregate turnover does not exceed threshold limit. That's what I have given below. Even if it exceeds 7,500, if the aggregate turnover does not exceed 20 lakhs, they are not required to pay GST. Is it clear? Then sports services already we have completed. Then look into import of service. Import of service also already we have completed. Import of service divided into two. What is that? OIDR other than OIDR. OIDR always taxable. Correct? Who will pay GST? If it is imported by non-taxable online recipient, supplier will pay. If it is imported by other than non-taxable online recipient, recipient only will pay. Who is a non-taxable online recipient? Any unregistered person importing for what purpose? Personal purpose. Then, suppose if it is other than OIDR service, we have an exemption. What is that? If it is imported by non-taxable recipient, it will be exempted. Other than non-taxable recipient, it will be taxable under RCM. Who is a non-taxable recipient? Individual, trust, government. For what purpose they are importing? Other than business or commerce. So, that is this discussion. Already we have completed that. Look into the next area, page number 156, construction services. Construction services. Look into the first point. But before reading the first point, I will give you an example. So, read that and tell me, is it taxable or not? Mukesh Ambani, you know, no? Mukesh Ambani. You know or you don't know? Owner of Reliance Industries, okay? So, Mukesh Ambani constructed one house in Mumbai, Antilla, like that one house. And that house was somewhere like 28 floors. And the construction cost of that house is some crores, okay. And what he did, he purchased all the material required for construction. He gave it to one builder. That builder did the construction activity. And the builder got some 30 crores as consideration for doing the construction. Is that 30 crores taxable or exempted? You read this first point and tell me. Taxable or exempted? Huh? Why exempted? Is it an individual house? What is an individual house? House occupied by a single family is known as individual house. Whether single family is only occupying? Yes. Therefore, the amount 30 crores will become exempted. You understood? You got the clarity? So, individual house can be any area, any amount. Construction of an individual house, the consideration received will be exempted. But remember, it should be a pure service. Pure service means what? There should not be any goods element. There should be only construction service. Then the money received will become exempted, whatever may be the amount. But it should be an individual house. What is an individual house? House occupied by a single family. So logic is simple. If there is only single kitchen in the house, entire house, it is called as house occupied by a single family. Suppose ground floor, first floor. Ground floor one kitchen is there, first floor one kitchen is there. Will it be called as an individual house? No, it will become a complex. So therefore construction of a complex will be taxable. So only construction of an individual house is exempted. Okay. Then second point you see, and tell me what is the difference between first point and the second point. Read second point and tell me what is the difference that you have. In the first point, individual house. In the second point, it is project. What project? Either Housing for All Mission or Pradhana Mantri Awas Yojana. It's a government project. So government housing project, you are doing construction or repair. Both are exempted. You got it? Whereas individual house, only construction is exempted. Repair of individual house will be taxable. But construction or repair of government housing project will become exempted. Then, but in both the cases, it should be only construction. It should not be works contract, which means there should not be any supply of goods. There should be only supply of services. Then look into the third point. Whenever you buy a flat in an apartment, are you paying for the flat only or even for the land? Land. And what is that called as? UDS, undivided share of land. You should be knowing it. It's a general knowledge part. Okay. Like, so let's take a locality called as Annanagar. Annanagar is one posh locality right now where space is available. We have other posh localities also like Besant Nagar, Adiyar, etc. and all. But here fully it is populated. So there we have some space to live. Okay. Now in Annanagar, one apartment you have seen, wherein they are telling 1 crore is the price of the flat, 3 BHK flat or a 2 BHK flat, 1 crore rupees. Okay. Now, when you invest 1 crore rupees, are you going to get any benefit out of that? Is it a appreciable asset or a depreciable asset? Depreciable asset. Flat is a depreciable asset. It's not an appreciable asset. But the flat will have a UDS that is only appreciable. You got it? Now, for constructing the 3 BHK flat, how much could be the square feet? Some 1200 square feet. You should not see the 1200 square feet, but you should see the land beneath that. So, there could be some 5000 square feet, concentrate, 5000 square feet, 10 flats they constructed. Means each flat will get how much as UDS? 500 square feet. Today, the square feet rate in Annanagar is somewhere like 15,000 rupees or 20,000 rupees. So 500 into 20,000, how much? 1 crore. Yes, happily you can buy the flat. Why you can buy the flat? Reason being that UDS will appreciate. So therefore, if they are asking 2 crores, we should not buy. Why we should not buy? Because the land value is only 1 crore. If you pay extra 1 crore, that is for the building, which will depreciate. So therefore, it is not a right choice. You understood or not? So like that, we need to analyze. UDS is actually the underlying benefit that a person gets, and the value of that UDS will appreciate. But sale of land is excluded from supply. There is no GST on land, because land is what type of property? Movable or immovable property? Immovable property. Then sir, why on flat we need to pay GST? On flat also no need to pay GST. If you buy the flat after completion, if it is under completion, if you buy, you have to pay GST on the flat. Is it clear or not? So which type of flat is chargeable to GST? Come on. Sale of flat where the consideration is received before completion certificate, then it will be chargeable to GST. Okay, now while paying GST in this 1 crore flat, whether you need to pay GST on entire 1 crore? No, because this 1 crore is even for the land, correct or not? Then how much should be taken as the value for payment of GST? So this third point says 1/3 of the gross amount is exempted towards land. Okay. So what is that amount that you are paying? 1 crore. In that 1 crore, 1/3 is what? 33,33,000. So therefore, what will be the remaining amount? 66,66,667. On that only GST will be payable. Got the clarity? Suppose if the land value is given as 40 lakhs and building value is given as 50 lakhs, usually they will not give separately. Suppose if you are getting separately, land is 40 lakhs, building is 50 lakhs. Now total 90 lakhs. How much is the exemption you get? Only 30 lakhs. Why only 30 lakhs? 1/3 is only allowed as deduction. 1/3 of the gross value of flat is exempted towards land or undivided share of land when the gross value includes value of land. Got it? Then this transfer of development rights, already we have discussed this point, and this is the example I have given now. Sale value of flat including UDS 75 lakhs. How much will be excluded? 1/3. What is 1/3 of 75 lakhs? 25 lakhs. What is the remaining portion? 50 lakhs. That 50 lakhs will be chargeable to GST. Suppose if land value is 50 and building value is 40, then total 90. But how much we will get as an exclusion? Only 1/3, 30. So remaining 60 lakhs will be chargeable to GST. Then, so with this we have seen all the major exemptions. We have exemptions under IGST Act. So have a look into these exemptions under IGST Act. If both supplier and recipient of service is located outside India, there won't be any GST. Supplier of service outside India, recipient of service outside India. For example, you went to US and you are watching one movie in US. Okay, where the cinema theatre is? Where you are? Both are outside India. Will there be any GST on this transaction? No. First of all, government don't know this transaction also, correct or not? So no GST on this. However, one service, they have made it taxable. What is that service that they have made it taxable? Transportation of goods by vessel from outside India to India. But that also now omitted. Supreme Court decision. Today only we discussed. However, this exemption is not applicable in case of transportation of goods by vessel from outside India to India. So this point you write down, GST not payable on account of Supreme Court judgment. GST not payable on account of Supreme Court judgment. So literally you need to know that if supplier of service is outside India, recipient of service outside India, whether GST payable or GST not payable. GST not payable. You remember it as exempted. Okay. Then look into the second point. Services provided by a tour operator to a foreign tourist in relation to a tour wholly conducted outside India. Where is the tour operator located? India. Tour operator is India. To whom he is providing services? Foreign tourist. Where the tour is conducted? Outside India. Now you may get a doubt why Indian tour operator will provide tour operator service to foreign tourists, that too outside India. Example, a person is coming from US. A person is coming from US and they wanted to visit China. They want to visit China and so they wanted you to do the tour operator services because that US tour operator is having a branch in India. So now Indian tour operator providing tour operator service to a US citizen in relation to tour conducted where? In China. So therefore, whatever money that is received is completely exempted. What if the tour is conducted in India? Taxable. So service provided by a tour operator to a foreign tourist in relation to tour conducted fully outside India. What if it is in India? Taxable. Now another situation. What if it is partly in India and partly outside India? Proportionate to outside India, it is exempted. How will you calculate that proportionate? Based on number of days the tour is conducted. For example, if number of days for which tour is conducted is 9 days, in that 9 days, 6 days tour outside India and 3 days tour in India. To what proportion you will get the exemption? Total consideration into 6 by 9. You understood or not? However, the maximum exemption will be 50%. The maximum exemption will be 50% because consideration received into number of days tour outside India divided by total number of days tour is held, or consideration received into 50%, whichever is lower. So if you want, you can make note of these illustrations. Say this. So tour conducted in India for 4 days and outside India outside India for 3 days, and the total consideration is 1,50,000. And the total consideration is 1,50,000. So, what is the value of taxable supply? What is the value of taxable supply? On what amount we need to pay GST? First, we need to take what? Exemption. How much is exempted? What is exempted, pa? A. Total amount how much? 1,50,000. In this 1,50,000, how many days tour is conducted outside India? Outside India, 3 days. What is the total number of days? 7 days. 1,50,000 into 3 by 7. 60, 286. Or B, that is total consideration into how much? 50%. That will be 75,000, whichever is lower, that is 64,286. So, what is the taxable value? Total amount is 1,50,000. In that 1,50,000, 64,286. So, what is the balance? 85,714 is the taxable value. You got the clarity? Then suppose, what will be your answer if? What will be your answer if tour outside India is 6 days and tour in India is 4 days? Then what will happen? Tour outside India is 6 days and tour in India is 4 days. Then what will happen? 75,000 is only exempted because 50%, whichever is lower. So, what is exempted? A, 1,50,000 into 6 divided by 10. So, how much it will come to? 90,000, or 1,50,000 into 50%. So, what is that? 75,000. So, whichever is lower, that is 75,000. And what is the taxable value remaining? So, the taxable value will be 1,50,000 minus 75,000, that equals to 75,000. Now, there could be another scenario wherein exactly days we don't have, but hours information is known. Okay. So, see this. Third one, what will be your answer if? What will be your answer if tour outside India is 3 days, 18 hours, and tour in India is 2 days, 4 days, 4 hours. 3 days, 18 hours, and 4 days, 4 hours. Now, remember, whenever it is greater than or equals to 12 hours, you take it as full day. Whenever it is less than 12 hours, you take it as half day. So, here it is 3 days, 18 hours. So, this 3 days, 18 hours should be taken as 4 days. Whereas, this 4 days, 4 hours will be taken as not 4 days, 4.5 days. It will not be taken as 4 days, it is 4.5 days. That is, less than 12 hours should be taken as half day. Even if it is 1 hour, you take it as half day. And if it is greater than or equals to 12 hours, you need to take it as full day. Now, in this case, what is the exempted portion? A, total how much? 1,50,000. 1,50,000 into what by what? Tour outside India. What is tour outside India? 4 divided by tour in India, total 8.5. So 1,50,000 into 4 by 8.5, how much? 70,580. 588. 70,588. Then 1,50,000 into 50%, that equals to 75,000. So whichever is lower, that is 70,588. So taxable value will be remaining. So taxable value will be, so 1,50,000 minus 70,588 equals to how much? 79,412. Okay. So that is with respect to this. Then fourth point, you see, there is a supplier of goods outside India, recipient of goods also outside India, but you are a commission agent connecting the seller and buyer outside India. Now you get a commission, that commission is fully exempted because that commission is not arising out of a transaction in India. That commission is arising out of a transaction completely outside India. See the fourth point. Services provided by an intermediary when location of both supplier and recipient of goods is outside India. So the intermediary means the commission agent who gets a commission is exempted. Then advocate services already we have completed. Now look into the transportation services. This transportation service also in relation to goods already we have completed. Correct? Do you remember that? In relation to goods. Transportation of goods. What are the four modes? Airways, waterways, railways and roadways. In case of airways, what is exempted? Only one exemption. Transportation of goods from outside India to India is only exempted. Remaining and all will be taxable. Then in case of waterways, two exemptions. What are the two exemptions? Inland waters and coastal waters between places in India, specified goods. Correct? Then next, railways, what is exempted? Transportation of specified goods. Then roadways, what is exempted? Other than GTR courier agency, remaining cases it will be exempted. Already we saw that. So you remember what is exempted. So remaining cases will be taxable. Understood? Then next, in case of GTA, this part also already we have seen. For GTA, what are the exemptions that we have? Specified goods. Then if the recipient is government or if the recipient is individual, HUF or AJP not having factory. Now there are three places where we come across specified goods. What are the three places? Transportation of specified goods by railways exempted. Transportation of specified goods by coastal waters is exempted. Transportation of specified goods by GTA exempted. What are the specified goods for these three cases? 6 specified goods. What are they? Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief materials, defense and military equipments. In other cases, it will be taxable, and wherever taxable, GTA is having two options, either FCM or RCM. Again FCM 12% with ITC, 5% without ITC. RCM always 5% without ITC, and the GTA has to decide this option every financial year. Then look into the next one, transportation of passenger service. So far what we have seen is transportation of goods service. Now transportation of passenger service. Remember, our focus is to know what are exempted. So remaining and all will become taxable. First, again transportation of passengers is divided into 4. Waterways, airways, railways, and in the next page you can see roadways. First look into waterways. In case of waterways, inland waters exempted. Inland waters exempted. Like inland water goods is exempted, passengers also exempted. Coastal waters means what? Seaways. That is also exempted. If it is for public transportation other than for tourism purpose, if it is for tourism purpose, it will become taxable. So what is exempted? Public transportation is exempted. For example, from Chennai to Andaman, there is a cruise ship which will transport the people and on a daily basis. So this will be for public transportation or tourism, public transportation. So whatever money that is collected will be taxable or exempted? Exempted. Then from Kanyakumari shore to Tiruvalluvar rock or Vivekananda rock, so there will be one boat which will be taking the tourist. So whether this will be taxable or exempted? Taxable, because it is predominantly for tourism purpose. But when it comes to inland waters, rivers and all, don't see whether it will be for tourism or not, because always it will become exempted. Then, so in waterways, what are the 2 points that you need to remember? Come on. Inland waters, then coastal waters for what purpose? Other than tourism. Other than tourism means public transportation. Then airways. In case of airways also we have 2 exemptions. If the starting point or ending point of the journey is in northeastern states or Bagdogra in West Bengal. So what are the northeastern states that we have? MMTNA SAM. MMTN, Manipur, Mizoram, Tripura, Nagaland. You can see below MMTN ASAM. Manipur, Mizoram, Tripura, Nagaland. A. Assam. S. Sikkim. A. Arunachal Pradesh. M. Meghalaya. These are the 8 states which are called as northeastern states and Bagdogra in West Bengal. For example, you are traveling from Chennai to US and what could be the ticket cost? 1 lakh rupees, easily 1 lakh. Now you book 2 tickets. Ticket number 1 from Chennai to this northeastern states or Bagdogra. That ticket is exempted because the ending point is in that place. Again book another ticket that is from that place, northeastern state or Bagdogra to US. That ticket also exempted because the starting point is in that place. So without paying GST, you can make the travel. Okay. So that is why they have bring this exemption. But previously, this exemption was for both class, economy class as well as business class. But now they are giving this exemption only for economy class, not for the business class. Is it clear? And Bagdogra airport is famous for that only. Lot of connecting flights will be there in Bagdogra airport. So people who want to save money, so the travel cost and all they want to reduce, anyhow you cannot get a direct flight. You will not get a direct flight to US and all. You have to change 2-3 flights. So therefore, in this case, what happens is that so they book one flight from there, that place, the ticket is exempted. Again from there to outside, the ticket also exempted. And easily they will be saving a good amount of GST. For one person, okay, it is less only, but when you see a family of 4 or 5 who are going, so easily 40,000 to 50,000 rupees they will be saving in that flight cost. So that is with respect to this. Then next, second exemption, viability gap funding from Government of India for a period of 3 years. What is viability gap funding? Like there are some regional connectivity airports. Example, Tiruchi airport is a regional connectivity airport because as Chennai airport is there, lot of people will be coming to Chennai only and Tiruchi, very less number of people only using that airport. And how to make it functionable? More people should come. So how more people will come? If the flight ticket has been reduced, then more people will come. But if flight ticket is to be reduced, then flights cannot operate at that reduced rates. So therefore, government is telling that we will pay you some amount, you collect some amount from the passenger. For example, Tiruchi to Chennai, what is your variable cost? 2,500. Okay, you collect from the passenger 1,500, we will give you 1,000 rupees so that you start the travel, you start the journey. So now in that case, what happens? Lot of people start booking the tickets, and when lot of people are booking the tickets, more number of flights will come. more number of flights will lead to increase in the rental income of the airport. So more income of the airport, so they don't have to sell the airport to Adani. You understood or not? So that is the objective behind this, regional connectivity airport. Now, airlines is getting two types of consideration. One from passenger, 1000 rupees, 1500. Another from government, which is exempted. Both or amount received from government is exempted. Amount received from government is exempted. That too for how many years? 3 years. Whether after 3 years also they will receive the money the same way? Yes. But after 3 years, both passenger amount as well as government amount will be taxable. But up to 3 years, whatever money collected from passenger will be taxable, whatever money collected from the government is exempted. That is this. So amount received from government towards viability gap funding with respect to regional connectivity airport for a period of 3 years. Now tell me, waterways, what are the two exemptions? Come on, please respond. Inland waters exempted, then coastal waters other than tourism is exempted. Then in case of airways, 2 points. Starting point or ending point is in northeastern states or Bagdona in West Bengal. Which class? Economy class. Then second, viability gap funding, amount received from government. How many years? 3 years. Then look into railways. In case of railways, other than first class or AC, everything is exempted. What are other things? Other than first class or AC? Sleeper, general ticket, second class sitting, everything will become exempted. AC? Taxable. That can be first class AC, second class AC, 3-tier AC or chair car. Everything will be taxable. And first class, AC or non-AC, both are taxable. AC only. First class is AC only. Why first class non-AC? Local train. In local trains, there will be first class compartments. That will be first class non-AC. That is also taxable. Then metro, mono and tramway always exempted. Don't see AC, non-AC there. Metro, monorail and tramway. Metro already you know. Monorail is a bullet train, single track. And tramway refers to on the road itself they lay down the track. That is tramway. So therefore, what are the two exemptions you need to remember for railways? Come on. Other than first class or AC. Second exemption, metro, monorail and tramway. Then in case of roadways, we have a very big chart, but you remember only 3 points, 3 exemptions. Exemption number 1, auto rickshaw or metered cab is exempted. Auto rickshaw or metered cab is exempted. Auto rickshaw, you know, autos. What is meter cab? A car where the meter is fixed. This black and yellow color cars you will be seeing now. So that is metered cabs. So that is exempted. Auto rickshaw, metered cabs. Number 2. Non-AC stage carriage. What is stage carriage? Local bus. Non-AC local bus or non-AC share auto. Share auto will be non-AC only, where from AC we have. So non-AC stage carriage is exempted. You understood? Then number 3, non-AC contract carriage. Non-AC contract carriage other than for tourism or hire is also exempted. What is contract carriage? Intercity bus from one place to another place. And in case of contract carriage, mostly it will be AC. Correct? But non-AC contract carriages are also there. Chennai to Tirupati, Chennai to Velur. Like that, these are all the places, nearing places, like 2 hours journey, 3 hours journey and all. They operate a non-AC bus. You got it here. And this non-AC contract carriage, other than tourism or hire, means public transportation, is exempted. So tell me what are the 3 points which is exempted? Come on. First, metered cab, auto rickshaw. Number 2, non-AC stage carriage. Number 3, non-AC contract carriage. For what purpose? Public transportation. Remaining and all will be taxable. You got it? Easy. Now these 3, wherever it is exempted, if it is through e-commerce operator, it will become taxable and liability to pay GST is on e-commerce operator. Example, normal auto, no GST. If the auto is booked through Ola, Uber, GST will be applicable, where e-commerce operator Ola or Uber will pay GST. Understood? Normal bus ticket, no GST. Non-AC contract carriage. But if you book the ticket through Red Bus, etc., then GST will be applicable. Okay. So if you are traveling by non-AC contract carriage, don't book the tickets through Red Bus app. If you book it unnecessarily, you will end up paying the GST. Directly board the bus and pay the amount there. So you will save 18% GST on that. You understood or not? So that is with respect to this. So if these are, that is, what are the exemptions we saw? Auto rickshaw, stage carriage, katra carriage through e-commerce operator, then it will become taxable. So exemption not available. So balancing figure for transportation of goods by road is what? Taxable or exempted? Balancing figure for transportation of goods by road. Goods, this is passengers. Goods by road, exempted. Other than GTA or courier agency is exempted. Balancing figure for transportation of passengers by road is what? Taxable. Now tell me, so transportation of passengers in horse cart, bullock cart, rickshaws and all, taxable or exempted? Taxable. Taxable. That's what I said you. Only 3 exemptions are there. What are the 3 exemptions? Auto rickshaw, metered cab, then non-AC stage carriage, non-AC contract carriage, public transportation. Remaining and all will be taxable. Sir, then sir, this horse cart, etc. and all, are they required to pay GST? Where I said they are required to pay GST, I said the service is taxable. If they are registered, they will pay GST. How they will register here? You mean to say their turnover will cross 20 lakhs? If their turnover crosses 20 lakhs, we can quit CA today itself here. We can happily buy 4-5 horse carts and run it. You understood or not? And definitely 20 lakhs and all, it will not cross. So therefore, they will not be registered to pay GST. Okay. Then we have the last area, that is miscellaneous exempted services. With this, exemptions is over. Come on, with some good energy, listen. Services. இது நான் எனக்கே சொல்லிக்கிறேன்ப்பா. So தொண்டை வலிக்குதுப்பா. Services by way of transfer of going concern as a whole or independent part thereof. What is this? That is, I have business. I'll give you best example. Recently, Jaipur, one international airport was there. That they gave it to Adani. Government of India gave Jaipur International Airport to Adani and got some money for that. Okay. Now, is this sale of business chargeable to GST? No, exempted. Sale of business, transfer of business as a going concern is exempted. No need to pay GST on that. Is it clear? Then next second, supply of services associated with transit cargo to Nepal and Bhutan. Nepal and Bhutan, geographically, you know where it is. It is surrounded by land and they don't have sea. So if they want to import goods by sea, they have to import it to a port in India. From there it will be taken to Nepal and Bhutan. This is known as transit cargo to Nepal and Bhutan. For the transit cargo, if you provide any service like transportation, loading, unloading, etc., it will be exempted. So services associated with transit cargo to Nepal and Bhutan, both ways, taking goods to Nepal and Bhutan, bringing goods from Nepal and Bhutan, that is transit cargo to Nepal and Bhutan, exempted. Then number 3, services by way of collecting or providing news by independent journalists. So there will be some independent journalists who will not be associated with any newspaper or media channel, etc. They will carry out the sting operations and get the news, and they will sell that news to the newspapers and news channels. These news channels will be putting that as breaking news, etc. and all. And these independent journalists will get some money for doing that. So that money received by independent journalists will be completely exempted. Okay. So what they do is that, so in dining table here and there, they will keep cameras and they record whatever things that are happening. So that video footages and all they will be releasing in the media. So they get some money for that. That is the work of independent journalists, but whatever amount that is received is exempted. Then Press Trust of India, United News of India. I'll give you a best example for this. Recently what happened in Chennai, so one person, one cab driver, in his account 9,000 crores got credited. Okay. So when 9,000 crores got credited in 9,000 crores on real, 9,000 crores got credited in his account, and this person did not believe. So in order to test it, he transferred some money to his friend, GPay he did to his friend, and immediately bank got it out. How in this account this much fund movement is there? Immediately the bank has called that person. So you have to return full amount, and whatever money you transfer to your friend, that also you need to pay. And for which he said, okay sir, give me 2-3 days time, I will pay. But they started torturing him and all. What he did, he directly came to Press Trust of India and he told, sir, like this happened. Now Press Trust of India released this news to every news channel. And you know how much he spent? 2,000 rupees. To give news to Press Trust of India, he spent 2,000 rupees. Now Press Trust of India releases this news to all the news channels, and everywhere this news came out, and the Tamil Nadu Mercantile Bank name got spoiled, and the CEO of that bank got resigned. You understood? Had he allowed 2-3 days time, his job would have been saved, and that bank name would not have been spoiled. I would not have discussed that in the class. You understood or not? And so this is the power of Press Trust of India. You might be thinking, sir, I am getting unfair thing. Where should I report? So police station you can go, but police is not responding. Media you can go, but how to go to media? Press Trust of India. So search where the Press Trust of India is. You go there. You need to pay 1,000 rupees or 2,000 rupees. You need to give the information. That information will be released to all the newspapers and news channels, and as a news item it will come. Next time when you read the newspaper, you see source, they will put PTI, UTI, like that, Union Trust of India, Press Trust of India, UNI, United News of India, like that they will be mentioning. Okay, so this is mainly broadcasting agencies. So they will release or disseminate the news to all the people. These people get some money. That money received by them will be exempted. Got it? So Press Trust of India or United News of India. Then number 4, service of public libraries. So public libraries will be lending books, for which they will be collecting some lending fees. So that lending fees collected by public libraries will be exempted. I don't know in today's context why it is relevant, because no one is going to. Are you going to public libraries? You will go to read each other, but not to take books on rent and all. Okay, because library is a place where you get lot of privacy, so that you can read each other and all. Whereas books and all you will not be taking for rent. And suppose if you take any book on rent and if you pay some rental charges, it will become exempted. Now in ICA also one library is there. It is there really. SARC, there is one library, and you go to that library. You take books on rent. They will give books on rent. You have to pay some charges for that. Taxable or exempted. ICA library is not a public library. Any Tom, Dick and Harry who go on road can go to ICA library? No, na. So it is only for CA students. Then it will be coming under public library or private library? Private library. So what is your answer? Exempted. Correct only. Because any service provided by an educational institution to its students, faculty and staff is exempted. Under that education services, it is exempted. Any service provided by education institution to its students, faculty and staff. Then next. Services by a organizer to any person in respect of business exhibition held outside India. So there is an organizer who is conducting a business exhibition. Where is he conducting business exhibition? Outside India. He gets some money that will become exempted. What if the business exhibition is held in India? Taxable. The next point. So this public toilets, washrooms, urinal, lavatories are there, where they collect 1 rupee, 2 rupee or 5 rupees for the purpose of giving you access to use the toilet, pay and use toilet. Whether it will be taxable or exempted, I am not talking about toilet, I am talking about 1 rupee, 2 rupees. So is it taxable or exempted? Exempted. Exempted. But I don't know why it will cross 20 lakhs and all, because where our people will pay and use the toilet, so a lot of open space will be there, and service by way of public conveniences such as provision of facilities of bathroom, washroom, lavatories, urinal or toilet is exempted. Then next, 7th one. Services by a performance artist. Who is a performance artist? One who performs before the audience is known as performance artist, not before the camera. So those who perform before the camera is not a performance artist. Those who perform before the audience, and in what genre they should perform, folk or classical art form, and that too in art form of music, dance or theatre. Music, dance or theatrical performance, drama, stage shows, etc. And how much should be the consideration per performance? It should not exceed 1,50,000, and they should not be acting as a brand ambassador. So if they act as a brand ambassador and get some money, whatever money that they have received, even though it does not exceed 1,50,000, it will be exempted. So there is a Bharatanatyam dancer. Bharatanatyam is a classical genre, and dancer, so therefore dance, art form of dance, and she gets 2 lakh rupees for 2 performances. Taxable or exempted? Exempted, because per performance it does not exceed 1,50,000, therefore it is exempted. What if there is a product launch event? So in that product launch event, she performed as a brand ambassador. So whatever money that she receives will become taxable. Then next, services, already this we have seen. Training or coaching in recreational activities relating to arts, it should be by an individual. Culture also by an individual, or sports by a charitable trust. So this point already we discussed in education services itself. Then 9th point, you see, satellite launch services supplied by 3. Actually these 3 people are only there in India right now to provide satellite launch services. ISRO, New Space India Limited, Antrix Corporation. So they get some money for doing satellite launch service. That amount received by them will become exempted. Then service by way of access to road or bridge on payment of toll charges. Basically what is this toll charges? So government will not have money to lay down roads. Why, sir? Whatever money they have, they would have used for construction of statues and parliament building, etc. and all. So then they will not have money to put the road. So then what they will do? They will approach a private contractor and they will say, you lay down the road in this area, and whatever investment you made, you collect from the people who are using that road, okay, in the form of toll charges. So basically toll charges is what? Recovery of their investment. That's why toll charges is exempted. But that toll charges, if it is by way of annuity, annuity means what? Yearly some amount is payable. Previously it was exempted, now that is omitted, which means it will become taxable. So generally toll charges is exempted, but if the toll charges is by way of annuity, it will become taxable. Then next, some cases where there are huge lorries, like they will be taking heavy loads and all. Now they have to pay overloading charges. Apart from normal toll charges, they need to pay overloading charges. That overloading charges is also exempted. Then suppose if you are not having FASTag sticker in the vehicle, you need to pay double the toll charges. Even that extra charges for not having FASTag sticker is also exempted. I mean to say, toll charges, overloading charges, extra charges for not having FASTag, all these are part and parcel of toll charges which is exempted. Only one will be taxable. What is that? Toll charges by way of annuity. Then next point, you see, usually this guest anchors and all will be hosting some TV shows. Right now Big Boss season has started, and wherein almost all languages, so they will be roping in some famous celebrities only to host the show. And Kamal Haasan, for one episode, he will be charging somewhere like 2 crore rupees. For one episode, 2 crore rupees is his charges. So the 2 crore rupees what he receives for hosting one episode will be taxable or exempted. Anywhere we studied as exemption. So taxable. And they have given one stupid point. However, guest anchors whose aggregate turnover in a financial year does not exceed 20 lakhs or 10 lakhs shall not be liable to take registration and pay GST. First of all, they will not be called as anchors itself. You understood or not? Why they will be called as anchors here? And normal people who are not earning more than 20 lakhs also, why we will call them to host a particular show and all. So definitely not easily they will be crossing that, and therefore they are required to pay GST. This is the point I told you. Additional amount collected from users for not having a functional FASTag, that additional toll charges is also exempted. Then 13th point, annuity is now taxable. Correct? That is that. Then look into the 14th point, liquidated damages. Liquidated damages are consideration for tolerating an act. So what is this liquidated damages? Please listen, pa. I am entering into contract with you to supply some goods or services. Now I breach the contract. When I breach the contract, you are suffering for that. So you will ask me to pay some amount towards the damages, correct or not? So the person who breached the contract will pay an amount to the other party who suffers the damage. So this charges is only called as liquidated damages. Now, is this liquidated damages taxable or exempted? For that they have given one circular. Divide this liquidated damages into two. Is it mentioned in the contract or not mentioned in the contract? If it is mentioned in the contract, okay. Otherwise, it is not treated as consideration, consequently GST not payable because it is in the nature of compensation, okay. So, I have not, like you have not mentioned anywhere that if I breach, I need to pay you some amount like that, nowhere it is given. But I breached, you suffered the damages. So, as a compensation, I paid you some amount. This will not be chargeable to GST because it is not specified in the contract. See that. Liquidated damages or compensation collected for breach or non-performance of contract. Mere compensation to compensate the loss, damage or injury not treated as consideration. Suppose if it is specified in the contract as a part of commercial term agreed between the parties. Again you check, is it in the nature of penalizing a person to discourage that act? Yes, then also it is not treated as consideration. Example, check bounce charges. Bank will be collecting check bounce charges, then EMI bounce charges, like they will be presenting the EMI in the bank account. You don't have sufficient balance in the bank account. What will happen? EMI will bounce, for which they will be levying some charges, check bounce charges and all. So is it specified in the contract? Yes, it is specified in the contract. The moment you open the account itself, there will be lot of terms and conditions which you will agree. In that, these charges also you will agree. So it is specified in the contract. Is it like penalizing a person and discouraging the act of that person? Yes. So they wanted to discourage this act. Therefore, again it is not treated as consideration and not taxable. One more example. So traffic fines. Traffic fines also specified in the contract. Yes. So the moment you take a driving license, you agree that you abide by all the provisions of Motor Vehicles Act. So which means that it is a contract. Traffic fine is specified in the contract. Is it like penalizing a person to discourage such act? Yes. So again it is not treated as consideration, not taxable. Suppose if it is other cases. Other cases means what? They are allowing a person to do that because they can understand in the normal course of trade it will happen. So then it will be treated as consideration and chargeable to GST based on principal supply. For example, ticket cancellation charges, train ticket cancellation charges, not to discourage a person. So because usually they also know that plans will change, travel plans will change and people will cancel the ticket. So in case of cancellation of ticket, there will be some cancellation charges. Again, is it specified in the contract? Yes. At the time of booking ticket itself, they will specify if you cancel at this time, this much charges you need to pay, this time you have to pay this much charges, like that. Specified in the contract. Is it like penalizing a person to discourage such act? No. Other cases. So it is treated as consideration. Now, what charges it is? Ticket cancellation charges. What ticket? Rail ticket. And is it AC ticket? Yes. Then this ticket charge is also taxable because AC ticket is taxable. Is it sleeper class ticket? Yes. As sleeper class ticket is exempted, this cancellation charges for sleeper class ticket is also exempted. You got it, pa? That is this. Treated as consideration and its taxability depends upon principal supply. You please write down the examples that I have given here. So for this, the example is train ticket cancellation charges. Train ticket cancellation charges, train ticket cancellation charges, train ticket cancellation charges. And here you write down the example: traffic fine, traffic fines, comma, check bounce charges, check bounce charges, this is compensation not specified in contract. Compensation not specified in contract. Actually, this is in study material. If you see in your ICA study material, this circular they gave for 3 pages. Multiple situations and all they gave. But just in half a page I completed. This much you remember, that is sufficient. Okay. So with this we completed exemptions under GST. Fully it is over. Say this. The next segment that we are going to discuss is composition scheme. Please take page number 167. Composition scheme is basically a simplified scheme for payment of GST at reduced rates rather than paying GST at the normal rate. So a person opting for composition scheme will pay at reduced rate. So now how it works and what are the advantages and disadvantages we will see. Suppose if there are two traders, trader A and trader B. Trader A is opting for composition scheme and trader B is opting for normal scheme. So there are two traders, trader A and trader B. Trader A opting for composition scheme and trader B is opting for normal scheme. Now what happens is that they will make purchases and sales, and the rate of GST applicable for a dealer who is under composition scheme is 1%. Okay. Now both of them makes purchases. So the purchase price is say 1000 rupees. Purchase price is 1000. Both are paying GST on purchases. So GST at 12%, that is 120 and 120. So both pay 1120 on purchases. Both paid 1120 on purchases. But if you see, trader A cannot get input tax credit. Trader A cannot claim input tax credit, but trader B can claim input tax credit, because one of the disadvantage in composition scheme is that the person opting for composition scheme cannot take ITC on inward supplies, but a person under normal scheme can take ITC on inward supplies. So input tax credit, please concentrate but don't talk. So input tax credit for trader A is 120 will not be getting, 0. Why? Because a person opting for composition scheme cannot take input tax credit. But trader B, yes, he can take input tax credit of 120 rupees. Then what is the cost of purchase? The cost of purchase for trader A is 1120, but the cost of purchase for trader B will be only 1000 rupees, because 120 rupees is available as credit now. Then only 1000 rupees will be their cost of purchase. So cost of purchase for trader A who is under composition scheme 1120, but trader B will be 1000, because 120 rupees will not be added to their cost. Now they are fixing a sale price. So the sale price is say 1500 and 1500. A person opting for composition scheme cannot charge GST to the customer. So add GST at 12%. Here he cannot add that GST. Reason being, person opting for composition scheme has two disadvantages. Disadvantage number 1, they cannot take ITC on their inward supplies and they cannot charge GST to the customers. So what about dealer B who is under normal scheme? Yes, they can pay GST. So 12% of 1500, how much? 180. So how much they will be collecting from customer? amount collected from customer, amount collected from customer, if you see, it is 1500 only, whereas here it is 1680. 1680. Now, here, how much is the GST payable by trader A and trader B? GST to government. GST payable to government. Trader A, if you see, they have to pay GST out of their pocket. As they did not charge 1 rupee also to the customer, but they have to pay GST out of their pocket. What is the rate applicable to them? 1%. Usual rate of GST 1%. So 1500 is the sale price. On that 1% is how much? 15 rupees they will pay to government. And they don't have input tax credit also. Whereas dealer B or trader B, if you see, 180 rupees they need to pay. On purchases, they already paid 120 rupees on purchases. So what is the differential amount that they will pay to government? 60 rupees they will pay to government. Now, let's see the profitability of dealer A and dealer B. What is the profit? Profit per unit. So dealer A, if you see, how much they are getting from customer? 1500. How much they paid at the time of purchase? 1120. 1500 they collected from customer and 1120 they paid at the time of purchase. So 1500 minus 1120 plus 15 rupees they need to pay out of their pocket. So minus 15 rupees. So that will be equals to 1500 minus 1120 minus 15. How much? 365. Whereas trader B, if you see, they are collecting 1680 from the customer. And at the time of purchase, they paid 1120. 1680 they collected. At the time of purchase, 1120. And they don't have to pay anything out of their pocket. They have to pay 60 rupees. Net liability. Correct? So, net liability, 60 rupees they pay to government. Then what is left with them? 500, which is nothing but their value addition. They buy for 1000, they sell for 1500, that 500 only. Whatever 180 they collected from the customer, 120 already paid at the time of purchase recovered, balance 60 rupees paid to government, so 500. So who is having more profit? A trader under composition scheme or normal scheme? A trader under normal scheme. Then it is advisable to go for normal scheme only now, not like that. Generally, a person opting for composition scheme, if you see, what is the cost to consumer? 1500, whereas normal scheme is 1680. Now you are a consumer, okay, consumer means you cannot take ITC. So you will go and definitely buy from a person opting for composition scheme because your cost is 1500. Suppose if you buy from a person opting for normal scheme, your cost is 1680. So naturally we buy from a person opting for composition scheme. Due to that reason, the sales volume will increase. So what happens to the sales volume? So if 1000 is the sales volume for normal scheme, definitely for a person opting for composition scheme, it will be more. So say 1400 units will be the sales volume. Now if you see the total profit. So what is the total profit in case of composition scheme? 365 into 1400, how much? 5,11,000 is the total profit. 5,11,000. Whereas here if you see the total profit is only 5 lakhs. So that's where a person opting for composition scheme will have an advantage over the person opting for normal scheme. So there is an increase in the sales volume. When sales volume increases, automatically their profitability also will increase. So that is the advantage. Apart from that, is there any benefit available to a person opting for composition scheme? Yes. The compliance cost also will be reduced. What is compliance cost? A person opting for normal scheme is required to file monthly returns and he has to pay tax monthly. But a person opting for composition scheme will be filing quarterly returns, that to one return only, and he will be paying tax also on a quarterly basis. So the cost of compliance will come down. That is also an additional advantage. Now, this background illustration I gave you to make you understand what are the benefits and disadvantages associated with composition scheme. You can see here advantages and disadvantages of composition scheme. Advantages. What happens to the person opting for composition scheme? Cost to consumer gets reduced. Correct? Because in case a person is opting for composition scheme, you purchase from him. How much is your cost? 1500. But if you buy from normal scheme, 1680. So what is the first advantage? Cost to consumer gets reduced. Then increase in sales volume. Am I right? Sales volume increases. And because of increase in sales volume, what happens to the profit, total profit? It will increase. And one more advantage what we have is reduction in compliance cost. These are the 4 advantages. So number 1, there will be cost to consumer that gets reduced, and the profit, total profit will increase because there is an increase in the sales volume, and even compliance cost gets reduced. Then if you see the cost associated, that is disadvantage, they cannot take ITC on their purchases, and because of which the purchase price will increase. When purchase price increases, the profit per unit decreases. Why profit per unit decreases? 2 reasons. As the purchase price increases and they need to pay tax out of their pocket and cannot be recovered from the customer, due to that reason the profit gets affected. Exactly, the profit gets affected to the extent of ITC not available, 120, and the 15 rupees what they pay out of their pocket. So these are the disadvantages of composition scheme. But still, when is it advisable to go for composition scheme? If the total profit is more, then they can go for composition scheme. Okay. Then we have 2 composition schemes, one under 10 subsection 1, another under 10(2)(a). This 10 subsection 1 composition scheme, section 10 deals with composition scheme. Section 10 composition scheme is divided into 2, 10 subsection 1 composition scheme and 10 subsection 2(a) composition scheme. 10 subsection 1 is for a manufacturer, trader and supply of food service provider, whereas 10(2)(a) composition scheme is for manufacturer, trader, any service provider. So what is the difference here? 10(1) to 10(2)(a). 10(1) is not applicable for other service providers. So only for a service provider engaged in supply of food. But 10(2)(a) is applicable for any service provider. Okay. Now we are seeing 10(1) and then we will see what are the differences that we have between 10(1) and 10(2)(a). So the base for our discussion is 10(1) only. Now, so when a person can opt for composition scheme under 10 subsection 1, if their aggregate turnover during the previous year does not exceed 150 lakhs, they can go for composition scheme under 10(1). Okay. So I told you that first we will complete the discussion related to 10(1) and then we will see the differences. So concentrate. You are a manufacturer or a trader or supply of food service provider. You can go for composition scheme under section 10(1). So what is it you need to see? To go for composition scheme under 10(1), you need to check the previous year aggregate turnover. During the previous year, if aggregate turnover does not exceed the specified limit, then during the current year, you can opt for composition scheme. Is it clear, pa? So every year, whether you need to opt for composition scheme or not, depends upon your aggregate turnover during the previous year. So current year, you can opt for composition scheme 10(1) if aggregate turnover during previous year does not exceed specified limit. What is that specified limit? If you are doing business in 8 states, if you are doing business in 8 states, what are those 8 states? M, T, N, not ASAM, it is USAM. For your exam, Uttarakhand is also a state wherein the 75 lakhs limit is applicable because you are appearing for November 23 exam and there is no change in this. So for May 24 only there is a change. So you don't have to worry about that. So therefore the limit will be M, T, N, U, SAM. So what is it? MMTN, Manipur, Mizoram, then Tripura, next Nagaland, this U is Uttarakhand, Uttarakhand, then Sikkim, then Arunachal Pradesh, and Meghalaya. Suppose if you are doing business in these states, MMTN, USAM, the limit will be 75 lakhs. Whereas if you are doing business in other states, the limit will be 150 lakhs, 1.5 crores or 150 lakhs. So, for the purpose of composition scheme under 10 subsection 1, so what should be your aggregate turnover during the previous year? If it is 8 specified states, 75 lakhs. For other states, it should be 150 lakhs. Then during the current year, you can opt for composition scheme. Okay. Up to what turnover you can opt for composition scheme? Up to 75 lakhs or 150 lakhs, you can be into composition scheme. Are you understanding? Current year, not that full turnover you will be under composition scheme. Up to 150 lakhs or 75 lakhs, you will be into composition scheme during this turnover. So, during this period, you will be under composition scheme. Which composition scheme? So, under section 10 subsection 1. Whereas, the moment current year, you are crossing 75 lakhs or 150 lakhs. Which cases 75 lakhs? Those 8 states 75 lakhs. For other states 150 lakhs. The moment you cross this 75 lakhs or 150 lakhs, you will be going into which scheme? Normal scheme. You will go to normal scheme. Now, during the time when you were under composition scheme, you need to pay GST. What is the rate of GST that you need to pay? So, to whom this 10(1) composition scheme is applicable? Manufacturer, then trader and food service provider, correct? Am I right? Now, for manufacturer, what is the rate of GST? So, we have CGST and SGST. CGST, SGST. Manufacturer 0.5% CGST, 0.5% SGST on what turnover? Total turnover. Okay. So, manufacturer is required to pay GST of 0.5% CGST, 0.5% SGST on total turnover. Whereas, a trader is required to pay GST on taxable turnover. Whereas, food service provider is required to pay GST again on total turnover. So, total turnover means what? Both taxable as well as exempted, that will be taken. So, what is the rate of GST pa? First you see what is the turnover on which they need to compute. Manufacturer will compute GST on total turnover, means total turnover includes exempted also. And trader will compute GST on taxable turnover, means exempted turnover we should take out, only taxable turnover. Supply of food service provider will pay GST again on the total turnover, means we need to take even exempted turnover also. And what is the rate of GST that we have? In case of manufacturer 0.5, even trader also 0.5%, whereas supply of food service provider will be 2.5% and 2.5% on the total turnover. These are the rates that you need to remember. You have to remember these rates, no other go. So, a manufacturer is required to pay GST how much when they are under composition scheme? CGST 0.5%, SGST 0.5% on what turnover? Total turnover. Trader is required to pay GST 0.5%, CGST 0.5%, SGST on taxable turnover. Food service provider is required to pay GST 2.5% on total turnover. The moment they go into normal scheme, so manufacturer, trader or food service provider, they will pay GST at what rates? GST at normal rates, whatever is the applicable rates. So that rates they will be taking and they will be paying the GST. You got it? Now, during the time when they are under composition scheme, can they take ITC on inward supplies? During this period, can they take ITC on inward supplies? No. So, they cannot take ITC on inward supplies. So ITC not available. ITC not available. Okay. The moment they go into normal scheme, can they take ITC on their inward supplies? Yes. ITC available. Not only on the inward supplies after the date they go into normal scheme, but before the date, that is, the moment they go into normal scheme, we need to see the closing stock here. Am I right? On this closing stock, whatever GST that they have paid, even that also they can avail as ITC. ITC on closing stock as on which date? ITC on closing stock before the date of migration, correct? Before the date of migration. And what is the section? 18(1)(c). 18(1)(c). Even on capital goods also they can take the credit. Okay. So this is already what we have learnt in input tax credit, which I have just connected here. Now, whenever they are under composition scheme, they cannot take ITC on their inward supplies, but the moment they go into normal scheme, whatever closing stock that they have, on that they can take ITC. Even the moment when they are under normal scheme, whatever inward supplies they have, they can take ITC, because they will be paying GST at the normal rates. Now, next year, can they go for composition scheme? No, because next year, for the next year, this year is the previous year. Here already you crossed 150 lakhs or 75 lakhs. So next year you cannot go for composition scheme under 10 subsection 1. You got the clarity about 10 subsection 1 composition scheme? Yes or no? Now, can any service provider other than restaurant service go for this composition scheme 10(1)? No, not possible. For that reason, they created a facility. What is that facility? So, if you are under composition scheme 10 subsection 1, whatever is your turnover during the previous year, in that into 10% or 5 lakhs, whichever is higher, to that extent, you can provide services other than supply of food during the current year. Okay. Again, I am repeating, carefully listen. So, previous year aggregate turnover does not exceed 150 lakhs or 75 lakhs. Current year you are under composition scheme. And being a manufacturer, trader, food service provider, you can go for composition scheme. But you can provide any other services. Yes, any other services. Any other services you can provide during current year. To what extent? To what extent? 10% of turnover during previous year or 5 lakhs, whichever is higher. You can provide any services up to this limit. For example, previous year your turnover is 120 lakhs. Current year, how much you can provide service? 120 into 10%, 12 lakhs or 5 lakhs, whichever is higher. 12 lakhs worth of services you can provide. But overall limit should be 150 lakhs. Current year, you should be in the overall limit of 150 lakhs. In this overall limit of 150 lakhs or 75 lakhs, how much services you can provide other than supply of food? 10% of turnover during previous year or 5 lakhs, whichever is higher. To that extent, you can provide the services. Are you understanding this part? Then, so the moment you cross this, for example, previous year my turnover is 120. 120 into 10%, 12 lakhs or 5 lakhs, whichever is higher, 12 lakhs. Current year, I am crossing 12 lakhs of services. The moment I cross 12 lakhs of services, I will be disqualified from the composition scheme. I need to pay GST under normal scheme. So, these are the points we have under 10(1). So, that's what I have given here. What is the meaning of aggregate turnover for determining the eligibility for composition scheme? Why we need to determine aggregate turnover? Because the composition scheme during the current year depends upon the aggregate turnover during the previous year. So, what is that aggregate turnover? While counting the aggregate turnover, you need to take taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, and this will be computed on a all India basis. But 3 things will not be taken in aggregate turnover. What are they? Interest on loans, advances, deposits, then taxes, and then inward supplies on which you need to pay GST under RCM. Got it? So, what is the meaning of aggregate turnover? Come on, tell me. Taxable, exempted, non-taxable, zero rated. Three things will not come. Interest on loans, advances, deposits, inward supplies under RCM and taxes. Okay. So this you need to take. One more exclusion also or inclusion actually it is, that is pre-registration turnover should be included. What is pre-registration turnover means? Before you are getting registered, you will make some turnover, na? That should also be taken into aggregate turnover. So that is the meaning of aggregate turnover. And I have given a table for the comparative table for turnover, which you can see in page number 175. So see that page number 175, I have given the meaning of various turnovers. There I have explained. Aggregate turnover for determining eligibility to opt for composition scheme. Whether we need to check this aggregate turnover for current year or previous year? Previous year. And it should be computed on a all India basis. What and all should be included? Taxable supplies should be included, exempted supplies, interest on loans, advances, deposits will be excluded, non-taxable supplies included, export of goods or service included, interstate supply included, inward supplies under RCM excluded, taxes excluded, and pre-registration turnover should be included. So then you can opt for composition scheme. This is the meaning of aggregate turnover for opting for composition scheme. Now have a look into this illustration number 1 below. During 2019-20, a person commenced business and on 24/7/19, his aggregate turnover exceeds 40 lakhs. So when he commenced a business during financial year 19-20, exactly on one date, what is that date? 24/7/2019, his aggregate turnover exceeds 40 lakhs and he got registered. Post registration, the aggregate turnover is 130 lakhs up to 31st March 2020. Now, what is his aggregate turnover for determining the eligibility to opt for composition scheme? Whether we take 130 or 130 plus 40. 130 plus 40. Why 130 plus 40? Because while determining the aggregate turnover for eligibility for composition scheme, the pre-registration turnover should be included. So therefore, 130 plus 40, how much? 170. What is the limit for composition scheme? 150. Correct. But how much is your aggregate turnover? 170. Current year, can you opt for composition scheme? No. Why you cannot opt for composition scheme? Because previous year aggregate turnover exceeds 150 lakhs. So current year composition scheme not possible. Got the clarity? Then next, so we have one more turnover also. Turnover for determining 10% limit for services. For what purpose? Just now I told you. During the current year, you can provide services up to what limit? 10% of turnover during previous year or 5 lakhs, whichever is higher. While counting the turnover, we need to take previous year turnover or current year turnover. Again, previous year turnover. What is the difference between aggregate turnover for determining eligibility for composition scheme and this turnover? Both are same. Ditto. Check. Both are same. Only one difference. What is that one difference? This aggregate turnover will be computed on all India basis, whereas this turnover will be computed state-wise. But otherwise, everything will be same. Okay. So, taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies. And inward supplies under RCM will not be coming, interest will not come, even taxes will not come. Pre-registration turnover should be included. Everything same, but only difference is what? Aggregate turnover we will compute on a all India basis, turnover will compute on a state wise. Easily you can remember ATO, A all India basis, TO, A is missing, so state wise. You understood or not? ATO versus TO, what is the difference? ATO, TO, state wise. Okay. Now, how this concept could be tested? Say this. So my turnover, please concentrate, pa. Don't write, it's already there, but you listen. So my turnover during previous year. So during previous year, I am doing business in 3 states, Maharashtra, Gujarat and Madhya Pradesh. In Maharashtra, my turnover is somewhere 50 lakhs and Gujarat 40 lakhs. And Madhya Pradesh, so 20 lakhs. Okay. 1 second. I'll just change it to 30 and 60 lakhs. So Maharashtra 50, Gujarat 30, Madhya Pradesh 60 lakhs. And what is my overall aggregate turnover? 140 lakhs. Now, current year, can I opt for composition scheme? So, composition scheme under section 10 subsection 1, I can opt. Okay. Now, up to what limit services can be provided? Service up to what limit? 10% of 140 lakhs, that is 14 lakhs or 5 lakhs, whichever is higher. How much? Wrong answer. Wrong answer. We need to compute this turnover state-wise. We need to compute this turnover state-wise. So, Maharashtra, 50 lakhs into 10%, 5 lakhs or 5 lakhs, whichever is higher. So, we can provide service up to 5 lakhs. Gujarat, 30 lakhs into 10%, 3 lakhs or 5 lakhs, whichever is higher. So, that is 5 lakhs. And in case of Madhya Pradesh, 60 lakhs into 10%, 6 lakhs or 5 lakhs, whichever is higher, 6 lakhs. So, to what extent I can provide the services? It's not 14 lakhs, 16 lakh services can be provided, because while computing the limit for 10% of services, we should see aggregate turnover or turnover? Turnover. Turnover will be computed state-wise. So, state-wise we need to do computation. Means in Maharashtra, to what extent you can provide services? 5 lakhs. And in Gujarat, to what extent? 5 lakhs. In Madhya Pradesh, to what extent you can provide services? 6 lakhs. If you are crossing this limit, you are disqualified from the composition scheme in that state. If you are disqualified from composition scheme in one state, you are also disqualified for composition scheme from all states, because all in or all out. Remember this word, all in or all out. Means all registrations you will be into composition scheme, or all registrations you will be out of composition scheme. There is no mix and match. Okay. So therefore, the moment you are disqualified in one state, you are also disqualified in other states as well. So that is with respect to this. One more illustration, you can see illustration 2. So see that illustration 2 in page number 176. A person's aggregate turnover during previous year 2021 is 120 lakhs and opted for composition scheme during current year. He wants to render services other than restaurant during the current year. Determine the limit up to which services can be rendered based on the following facts. So, what was his turnover during previous year? 120 lakhs. Current year he want to provide some services. Now we have some information here. Previous year that person commenced business and threshold limit is 20 lakhs. Post registration is 100 lakhs. Means in that 120, what is the breakup? Pre-registration 20, post registration 100. And interest income during the previous year is 40 lakhs, out of which interest on loans advances is 30 lakhs and balance interest is for delay in receipt of consideration. Okay. What is the interest on loans advances deposits? 30. So whether the 30 will be taken in the turnover? No. So what is the meaning of turnover? Same as aggregate turnover. And therefore, whether we need to include pre-registration turnover? Yes, include pre-registration turnover. But what should be excluded? Interest on loans advances. So 120 minus 30. How much? 90 lakhs. 90 lakhs into 10%. 9 lakhs or 5 lakhs, whichever is higher. Here we have only one state information. So aggregate turnover or turnover, both are same. There won't be any difference. Only when we have multiple states information, aggregate turnover and turnover will be different. You understood or not? So here one state information only. So 90 lakhs. You know how you got 90 lakhs? How? 120. Why 20 we should include? Because pre-registration turnover should be included and interest on loans advances deposit should be excluded. So that's why 120 minus 30, 90, 90 into 10%, 9 lakhs or 5 lakhs, whichever is higher, 9 lakhs. So they can provide services up to 9 lakhs during the current year. Understood? Now the third turnover. What is that third turnover? Turnover on which we pay GST under composition scheme. So where we come across this, we saw na rates. So 1% on total turnover, 1% on taxable turnover, and 5% on total turnover. That's what, 0.5, 0.5, 0.5, 0.5, 2.5, 2.5. So that is on what turnover? Total turnover, taxable turnover. So therefore, what is the turnover for payment of GST? Is it aggregate turnover or turnover? Turnover. Means whether we need to compute it all India basis or state wise? State wise. Whether we need to see this for previous year or current year? Because you are going to pay tax for the current year. So we need to see current year turnover and it should be computed on a state wise. What is the difference between the turnover for 10% limit versus this turnover? Check and tell me. That is previous year, this is current year. Anything else? Huh? Non-taxable supplies should not be taken, correct? Then interstate supplies should not be taken. Exports also should not be taken. Why? Because there is a disqualification for composition scheme under 10 subsection 1. What is the disqualification? In the following cases, a person cannot opt for composition scheme under 10 subsection 1. What is that? Yes, 9 RCM. Section 9 is RCM, correct? Section 9 is RCM. You remember that. Yes, 9 RCM. What is that? Yes. Services other than supply of food are beyond the 10% limit. It's there. Don't do audit. Listen. You listen to me. It's there. I only written that book. This also I am only telling you. Please listen. Yes is what? Supply of services other than supply of food or beyond 10% limit. Can they be into composition scheme? No. Actually only supply of food. But we got a relaxation for 10% limit. Beyond that, they can definitely not be into composition scheme. You got it? So what is this yes point? Supply of services other than supply of food or beyond 10% limit. Then N for non-resident taxable person. Who is non-resident taxable person? I told you already. Who come from outside India to India. Is he having any physical place of business in India? No. And can he opt for composition scheme? He cannot opt for composition scheme. I, interstate supplies. If you are making interstate supply of goods or services, IGST is involved. So therefore, you cannot opt for composition scheme. That's why while discussing the rates, I said CGST 0.5, SGST 0.5. You understood? So you cannot make interstate supplies. If you make interstate supplies, composition scheme not possible. Then another N, non-taxable supplies. What is non-taxable supplies under GST? 2. Alcoholic liquor for human consumption and petroleum products. If you are dealing with these two, you cannot opt for composition scheme. For example, there is a restaurant. Can restaurant opt for composition scheme 10(1)? Yes. But that restaurant is serving the liquor. Can they opt for composition scheme? No. Because if you are making non-taxable supplies, you cannot opt for composition scheme. Then E, that is supply of goods or services through e-commerce operator. A person who is making sale of goods or providing services through e-commerce operator cannot opt for composition scheme. Then R, recipient liable to pay GST under 9(4). Who is the recipient liable to pay GST under 9(4)? Promoter or builder, correct? Promoter or builder is required to pay GST under 9(4) RCM. They cannot opt for composition scheme. Of course, they will not opt also because their turnover is more than 150 lakhs, correct or not? But when building, if they sell itself 1 crore, 2 crores, they will be getting here. Then C, that is casual taxable person. Who is a casual taxable person? Like NRTP, who come from outside India to India. A casual taxable person is from other state to this state. So, a person who come from other state to this state for making supply of goods or service in this state is known as a casual taxable person in this state. Again, he cannot also opt for composition scheme. Then M, manufacturer of certain notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. Okay, 6 goods. What are they, pa? Ice cream, edible ice, pan masala, tobacco products, aerated waters. Aerated waters means this sodas and beverages. Okay. Then bricks and roofing tiles. Manufacturer of these notified goods cannot opt for composition scheme. Which composition scheme we are discussing? Section 10(1) composition scheme. Can you tell me what are the cases? Come on. Yes. Services other than supply of food or beyond 10% limit. Okay. N, non-resident taxable person. Then I, interstate supply of goods or services. Then next N, non-taxable supplies. Then E, supplier of goods or services through e-commerce operator. R, RCM under 9(4). Then C, casual taxable person. M, manufacturer of notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. IBACO, ice cream shop, can they opt for composition scheme? Yes, because they are not manufacturing ice cream, they are selling the ice cream. Trader can opt for composition scheme. The restriction is only to the manufacturer. Understood? So these people cannot opt for composition scheme. That's why here non-taxable supplies, export of goods or services, interstate supplies, it is given as not applicable. Understood or not? Because if you make non-taxable supplies, if you make interstate supplies, you are disqualified from composition scheme. That's why it is given as not applicable. Then one more difference what you can see. Pre-registration turnover, check. Pre-registration turnover, don't sleep. All your life you were sleeping. At least these 3-4 days only you are waking up. Okay. So don't sleep. However, 6 months over, 1 month exam is there. You should not get 1 month only, not even 1 month. So today is what? October 5th. October 5th. 25 days only. November exam is there. How you will sleep here? You should not sleep. You should never get sleep and all. The fear should be there. If you sleep, you will fail. Like that you think. Okay. You will not sleep. Listen. So, what is the another difference that we have? Pre-registration turnover. So, pre-registration turnover should be included or excluded? Excluded. Pre-registration turnover should be excluded because on that we don't have to pay GST. Now, say this. Illustration 3 you see, you will get a question like this. A person commenced business during current year 2021. Concentrate. A person commenced business during current year 2021 and on 18/8/2020 his aggregate turnover exceed 40 lakhs and he got registered under composition scheme. He is into trading within the state. So he is making only intra-state supplies and aggregate turnover during current year is 200 lakhs. Compute GST payable if the applicable rate of GST is 12%. Now, what is the total turnover for current year? 240 illappa, 200. Aggregate turnover for the current year is 200 lakhs. So, the total turnover for the year is 200 lakhs. In this 200 lakhs, how much turnover will be under composition scheme? How much turnover will be under normal scheme? So, what is the total turnover you have? 200. In this 200, if you are under composition scheme, up to what turnover you will be in composition scheme? Are you eligible for composition scheme during current year? Yes, because previous year turnover is 0. This year only you started business. Read the question first. So this year only you started the business, means previous year turnover is 0, means current year you can opt for composition scheme. So in this 200 lakhs, how much will be under composition scheme? How much will be under normal scheme? What is the limit? 150 lakhs will be under composition scheme and 50 lakhs will be under normal scheme. Correct? But in this 150 lakhs, pre-registration turnover should be included or excluded? Just now we studied. We need to exclude. What is the pre-registration turnover? 40 lakhs. So what is the balance turnover? 110 lakhs. On that 110 lakhs you pay GST. How much is the GST that you pay? Trader or manufacturer? Who is that person? Trader. So therefore CGST, how much? 110 lakhs into 0.5%, that is 55,000, and SGST will be 55,000. But the moment you are into normal scheme, so what will be the GST payable normal rate? What is the normal rate given in the question? 12%. So CGST will be how much? 50 lakhs into 6%. 3 lakhs, and SGST will be 3 lakhs. You understood here how to calculate? Now, don't get confused. See the total turnover. Divide it into turnover under composition scheme, turnover under normal scheme. Then whatever turnover you got under composition scheme, you exclude the pre-registration turnover. You see the remaining turnover. On that remaining turnover, you compute the GST payable under composition scheme. Normal scheme, always the normal rate that is payable. So therefore 55,000, 55,000, 3 lakhs and 3 lakhs will be the GST that is payable. That's what I have given. 55 and 55, 3 lakhs and 3 lakhs. So total GST payable, CGST 3 lakh 55, SGST 3 lakh 55,000. Understood? Now, you got the clarity about these 3 turnovers? Yes? Now for computation purpose, this will be useful. These 3 turnovers will be useful. First is aggregate turnover for determining the eligibility to opt for composition scheme. Second one is turnover for determining the 10% limit. Third one is turnover for payment of GST under composition scheme. Now, you can see the differences between 10.1 and 10.2a. Before that, look into page number 170. Who cannot opt for composition scheme under section 10 subsection 1? Page number 170. This is what we have discussed. Who cannot opt for composition scheme under 10.1? Yes, 9 RCM. Okay, this list. Sometimes it will be directly asked as theory question. Sometimes it will be applied into the problematic questions. Okay, then see the before to before page, differences between composition scheme under 10.1 and 10.2a. So we completed composition scheme under 10.1. Now we are going to see the differentiating points. Remaining and all will be same between 10.1 and 10.2a. There is no difference. Okay. So look into the first one. 10.1 and 10.2a when applicable. When 10.1 will be applicable, your aggregate turnover during previous year should not exceed, come on, 150 lakhs or 75 lakhs. Then you can go for 10.1. 10.2a, your aggregate turnover during the previous year should not exceed 50 lakhs, which is common for all states. There, for 8 states, 75 lakhs, remaining states, 150 lakhs. Here, all cases, it will be 50 lakhs. So, if your aggregate turnover not exceeding 50 lakhs, you can go for 10.2a. Now, you tell me, for trader, manufacturer, supply of food service provider, is 10.1 best or 10.2a best? 10.1 only best. Why 10.1 only best? Higher limit, 150 lakhs and 75 lakhs. But in 10.2a, how much is the limit? 50 lakhs only. So therefore, who will go for 10.2a? Other service providers to whom 10.1 is not applicable, they will go for 10.2a. Understood or not? Then see the second point. To whom it is applicable? Manufacturer, trader, supply of food service provider. But 10.2a, manufacturer, trader, any service provider, even though it is applicable to them, but practically a person providing service other than supply of food will go for 10(2)(a), because 10(1) itself is better for manufacturer, trader and supply of food service provider. What is the benefit of reduced rates? Come on, 10(1), 10(1), manufacturer 0.5 CGST, 0.5 SGST on total turnover. Trader 0.5 CGST, 0.5 SGST on taxable turnover. Supply of food service provider 2.5 CGST, 2.5 SGST on total turnover. But 10(2)(a) rate, you see, 3% CGST, 3% SGST on total turnover. So even rates wise, if you see, 10(1) only best. Because what is the highest rate in 10(1)? 5%, 2.5, 2.5. But what is the rate in 10(2)(a) always? 6%. So 3 and 3, 6% we need to pay. Then what is the current year limit for reduced rates? So 10(1), current year up to what limit you will be into composition scheme? 150 or 75. But 10(2)(a) only up to 50. The moment you cross 50, you need to go for normal scheme. Then, is there any difference in the conditions? Yes, that is whatever conditions we saw for 10(1), the same will be for 10(2)(a), except that yes. So, 10(1) is yes 9 RCM, 10(2)(a) is 9 RCM. Okay, why yes is not there? You can be any service provider now for 10(2)(a). So, see the note below that. Above restrictions are applicable for 10(2)(a) also, except that they can provide any services. So, what is the restriction for 10(2)(a)? 9 RCM. What is the restriction for 10(1)? Yes, 9 RCM. That yes alone is the difference. You understood? So, this is about composition scheme 10(1) and 10(2)(a). Now, one important point is there, that is, being a provider, service provider, you can provide up to 10% of services during previous year or 5 lakhs, whichever is higher is there na. Is that for 10(1) or 10(2)(a) or both? 10(1) only, not for 10(2)(a). Because 10(2)(a) where there is a restriction, you can provide any services. So, the moment you cross the 10% limit, then also you will go for 10(2)(a), correct? So, now tell me when a person will go for 10(2)(a? Two situations. Situation number 1, if they are providing any service other than supply of food. Number 2, if they are providing services beyond 10% limit during previous year. Okay, so then they will go for 10(2)(a). Next, so when you are providing service up to 10% limit, what rate you need to take? Manufacturer rate is given, trader rate is given, supply of food service provider rate is given, but the 10% limit you will provide some services na, this 10% limit, for these services what rate to be taken? The rate applicable to a trader. What is the rate applicable to a trader? 0.5 CGST, 0.5 SGST on what turnover? Highlight this point in page number 168. Highlight this point in page number 168. The tax rate applicable for these services is the tax rate applicable to a trader, that is 1% of taxable turnover. Okay. Now, we are going to see the procedural aspects related to composition scheme. You will see that information in page number 171. We completed majorly composition scheme 10(1) and 10(2)(a), and we have some procedural aspects that we will see now. How to opt for composition scheme? If you are already a registered person, now only you are going into composition scheme, you have to opt only in the beginning of the financial year. Means during the financial year, you cannot enter into composition scheme. Say this, new registration, post registration as a normal taxpayer. So, new registration, you need to wait till the beginning of the financial year? No, anytime you can go, because when you are getting registered now only, so means anytime during the year, you can make the registration application. along with the registration application, you can go into composition scheme. But if you are already a registered person, you wait till the commencement of the financial year, then only you can go into composition scheme. For example, right now we are in which month? October month. Now I already am a registered person. I want to go for composition scheme. Can I go into composition scheme now? No, I should wait till March 2024, and in March 2024 I need to file CMP2 to enter into composition scheme. Form GST CMP2. CMP refers to composition. CMP2 to enter into composition scheme. Is it clear? And suppose if I am a newly registered person, now only I am getting registered. In October month, can I go into composition scheme? Yes. So by making application for registration in REG1, in that itself I can go into composition scheme. Got it? Then other provisions relating to composition scheme, every person opting for composition scheme should display that they are under composition scheme in every notice and signboard displayed at the principal place of business and additional place of business. Then validity of the composition levy. If all the conditions are satisfied, the option remains valid. Means every year you don't have to intimate that you want to be into composition scheme. Option once intimated, enough. Every year you will be into composition scheme by default if all the conditions are satisfied. If the conditions are not satisfied, means what are the reasons for which you are not satisfying the condition? Maybe your aggregate turnover exceeds 150 lakhs or 75 lakhs. Maybe you made supplies through e-commerce operator. Maybe you made non-taxable supplies. Maybe you made interstate supplies. Are you getting this? So then you breach the condition. You need to exit from the composition scheme. But what is the time limit for you to make a form for exit? 7 days. But when you have exited, from the day you breach, you have exited. You understood? But to intimate that they have given a time limit, what is the time limit? 7 days. And to enter into composition scheme, what is the form? CMP2. To exit from the composition scheme, it is CMP4. Got it, pa? So two forms. CMP2 is for what? Entry into composition scheme. CMP4 is for what? Exit from the composition scheme. Voluntarily, if you want to exit from composition scheme, what is the time limit you have? 7 days. Now concentrate. When you exit from the composition scheme, you go into, so you can take ITC on closing stock, correct? To take ITC on closing stock, you will file one form. What is that? ITC 1. So 1 and 4 is a combination. Which one, which 4? ITC 1 and CMP4 is a combination. Is it clear? Sir, to come out of the composition scheme, you will be filing CMP4. When you exit from the composition scheme, you can avail ITC on closing stock. To avail ITC on closing stock, we will file one form, that is ITC 1. Then, same way, when you enter into composition scheme, you will file CMP2, correct? CMP2. When you enter into composition scheme, you need to reverse the ITC on closing stock, for which you need to file ITC 3. So 2 and 3 is one combo. Got it? 1 and 4 is one combo. 2 and 3 is one combo. Odd forms are ITC forms. Even forms are CMP forms. Okay. 1, 2, 3, 4. 1 and 3 is 2 and 4 is CMP. Clear, pa? And which two are the combos? 1 and 4, 2 and 3. When you will file 2? Entry into composition scheme. So when you enter into composition scheme, you need to reverse the ITC on closing stock. So ITC 3. Then when you file CMP 4, exit from the composition scheme. When you exit from the composition scheme, you will avail ITC on closing stock. So we will file ITC. So these forms already I have given, no need to make note, it's already there. So overview of the forms involved: CMP2, ITC3, GST CMP4, ITC1. In page number 174 and 175, those 4 forms I have given. Okay, 1, 2, 3, 4. All 4 forms I have given. What is its purpose and what is the time limit, everything. Then, next, self-withdraw. What is this self-withdraw? Come back to page number 172. Self-withdraw. Self-withdraw means, like, you did not breach any condition. You did not breach any condition, but voluntarily you need to come out. Yes, anytime you can come out of the composition scheme. Now, you breach the condition. You did not come out of the composition scheme. proper officer came to know that you have breached the condition. First, they will give a notice to you, and that notice is in CMP 5. After receiving that notice, you need to give reply to the notice. What is the time limit within which you need to give reply? 15 days in CMP 6. After you give reply, within 30 days, they will pass a order in CMP 7, either allowing you to continue in composition scheme or denying the composition scheme. Okay, 3 forms. What are the 3 forms? 5, 6, 7. 5, notice, show cause notice. 6, reply to the notice. Time limit, 15 days. After reply, order within 30 days. Order in CMP 7 for what? Either allowing you to continue in composition scheme or denying the composition scheme. And suppose if they deny the composition scheme, will the denial be prospective or retrospective? For example, say this, 1st April 2022, you opted for composition scheme. Okay. And 18 September 2022, you have made supply through e-commerce operator. Is it a breach of condition? But you continued in the composition scheme. And 15th May, they gave a notice. You gave a reply on 30th May. Now they passed an order on 29th June. Now when they pass the order on 29th June 2023 to deny the composition scheme, will that be prospective, means from 29th June onwards, or retrospective, backdated? So it can be prospective or it can be retrospective, but not before 18 September. You got it? They can deny the composition scheme retrospectively, backwards also, but not before 18 September 2022. Why? Because you breached only on 18 September 2022, so not before 18 September, so they can give an order retrospectively also. So denial of composition scheme, the effective date of such denial shall be from a date including any retrospective date as may be determined by the tax authorities. However, it should not be prior to the date of contravention of the provisions. Then look into issue number 1 here. A Limited is doing business in 3 states, Tamil Nadu, Andhra Pradesh and Karnataka. In Tamil Nadu and Karnataka, they want to opt for composition scheme, and in Andhra Pradesh, they want to opt for normal scheme. Is it possible? No, all in, all out. But in exam, don't write all in, all out and all. So what you need to write? All registrations of a person can either opt for composition scheme or opt not for composition scheme, but few registrations composition scheme and few registrations normal scheme is not possible. Like that you should write. In simple words, you remember as all in, all out. Exam, don't write all out, Martin, etc. and all. Okay. Then next, issue number 2. A Limited aggregate turnover during the previous year is 80 lakhs and they are doing business in Tamil Nadu and Nagaland. Tamil Nadu, what is the limit? 150. Nagaland, what is the limit? 75 lakhs. So what is their turnover? 80. Means in Nagaland it is not possible. Correct? As it is not possible in Nagaland, it is also not possible in. So therefore, what should be taken as the applicable limit? 75 lakhs. So 75 lakhs will be the applicable limit. And so one registration in 150 lakh states and one registration in 75 lakh states. So applicable limit is only 75 lakhs. So if your aggregate turnover during previous year exceeds 75 lakhs, then you will not opt for composition scheme. Then procedural compliances. Up to the date when you are under composition scheme, you need to file a quarterly return. What is that quarterly return? CMP 8. Form GST CMP 8. So we have Form 2, CMP 2 for what? Entry into composition scheme. CMP 8, exit from the composition scheme. Okay, sorry, CMP 4, exit from the composition scheme. CMP 5, notice. CMP 6, reply to notice. CMP 7, order. CMP 8, return. Monthly return or quarterly return? Quarterly return. By when? 18th of the month following every quarter. So 18th of the month following every quarter, they need to file a quarterly return. Even they need to file an annual return. What is the form of that annual return? GSTR 4. By when they need to file that annual return? Person opting for composition scheme by 30th April of the succeeding financial year, means next financial year. Only 1 month we have. So 30th April of the next financial year. Next year, again they can decide either to continue in the composition scheme or to go for normal scheme. The moment they go for normal scheme, the regular returns they will file. That is GSTR 1, GSTR 3B and GSTR 9 annual return that they will be filing. So these are the various forms that we have and various turnovers, and these illustrations already we have completed. With this composition scheme we have completed. Okay. And as this requires some problems to understand the application, so please take your practice manual. We will see the questions on composition scheme. Okay, see this. Composition scheme segment 8. What's the page number? Okay, see this questions here. We have some MCQs also in this. Page number 142 in practice manual. Question number 1, MCQ number 1. X and Co, a registered supplier of Meghalaya, wants to opt for composition scheme under 10.1. The turnover limit for the composition levy is Meghalaya 75 lakhs. So that will be taken as the limit. And then C and Company, a registered supplier in Delhi, opted for composition levy, section 10 subsection 1 of the CGST Act 2017. It sold goods in the fourth quarter of a financial year for 15 lakhs exclusive of GST. The applicable rate of GST on these goods is 12%. C and Co purchased goods from Ramesh registered in Delhi for 9 lakh 55, on which Ramesh and Company has charged CGST and SGST, and C and Co has also purchased goods from E and Co. First of all, they are under composition scheme. Why purchase data is relevant? Irrelevant. So purchase data irrelevant here. So whatever may be their purchases, so they cannot take input tax credit. Also, can a person opting for composition scheme make interstate purchases? Yes. Interstate sales only they should not make, but interstate purchases they can make. Okay. And what is their turnover for the quarter? 15 lakhs. And they are trader or manufacturer? Trader. So being a trader, what will be the rate applicable? 0.5 CGST, 0.5 SGST. So 15 lakhs into 0.5, 7,500 CGST and 7,500 SGST. So option A is the answer. Understood? Then, which of the following is not eligible to opt for composition scheme under 10.1? Measures ABC, a firm selling garments in Ahmedabad having annual turnover of 78 lakhs. Possible? Ahmedabad is in Gujarat. Gujarat, what is the limit? So here it is only 78 lakhs. Can they go for composition scheme? Yes. Then a startup company operating restaurant in Delhi, again 150. So it's only 98. Can they opt for composition scheme? Yes. A courier service company operating solely in Mumbai having an annual turnover of 90. No, they cannot. Because it's a courier service company. Who can go for 10-1? Manufacturer, trader, supply of food service provider. Courier agency cannot. But 10-2A possible? How possible? 90 lakhs. For 10-2A, what is the limit? 50 lakhs. So 10-2A also not possible. A trader selling grocery items in Orissa having an annual turnover of 95 lakhs. Yes, Orissa, what is the limit? 150. So 95 lakhs only they can go for. So the correct answer is option C. They cannot or not eligible to opt for composition scheme. Then 4. Which of the following persons is not eligible for composition levy under 10(1) of CGST Act, even though their aggregate turnover does not exceed 1.5 crores in the preceding financial year in Uttar Pradesh? They are in Uttar Pradesh. Turnover does not exceed 1.5 crores. In which of these cases they are not eligible? They are supplying restaurant service. Eligible or not eligible? Eligible. Supplying restaurant service and earning bank interest. Eligible. Then trading in ice cream. Eligible. Trading. Only manufacturer. So trading in ice cream. Eligible. Person supplying service of repair of electronic items. So 10-1 should be services of supply of food, but other service not possible. Got it? Then 5. Can a registered person opting for composition scheme collect GST on his outward supplies? No, they can never collect GST on outward supplies. They have to pay out of their pocket. Look into the descriptive questions here. Sultan and Sons, a partnership firm in Nagpur, Maharashtra, is a wholesaler of a taxable product P and product Q exempt by way of notification in the state of Maharashtra. So they are dealing with both product P and product Q, which is taxable and exempted. And where are they doing business? Maharashtra. For Maharashtra, what is the limit for composition scheme? 150 lakhs. Its aggregate turnover in the preceding financial year is 130 lakhs. It does not exceed. The firm wishes to opt for composition scheme under 10(1). Yes, they can. However, its accountant is of the view that a person engaged in making exempted supplies not eligible. Anywhere it is given? No. Only a person making non-taxable supplies is not eligible. But exempted supplies, they can opt for composition scheme. Next, what is the way in which we need to present the answer? First, we are referring here to section 10(1). So you need to write as per section 10 subsection 1 of CGST Act, a person whose aggregate turnover during the previous year does not exceed 150 lakhs can opt for composition scheme during the current year. So reference, provision, then discussion. In the present case, Sultan and Sons turnover during previous year is 130 lakhs, and for Maharashtra the applicable limit is 150 lakhs. As their turnover not exceeding 150, they can opt for composition scheme even if they are making exempted supplies. Okay. So conclusion, whether the contention of the accountant is correct or not correct, therefore the contention of the accountant is not correct. That is the conclusion. Like this you should present. What are the 4 points that should be there? Reference, provision, discussion, conclusion. These 4 points if you are writing, you will get full marks for this. Okay. Then next, question number 2. A person availing composition scheme under subsection 1 and 2 of section 10 in Haryana during a financial year crosses the turnover of 1.5 crores in the month of December. Will he be allowed to pay tax under composition scheme for remainder of the year, that is till 31st March? Please advise. Why? The moment a person crosses the applicable limit of 1.5 crores or 75 lakhs during the current year, for the remaining part of the year, they need to pay GST under normal scheme and they cannot continue under composition scheme. Then, what is the time limit within which they need to exit? 7 days. And what is the form they need to file? CMP4. And when they exit from composition scheme, there is some ITC point. They can avail ITC on closing stock by filing form ITC1. And what is the time limit within which ITC1 should be filed? 30 days. Within 30 days from the date they exit from the composition scheme. These points and all we need to write. Then, question number 3, determine whether the suppliers in the following cases are eligible for composition levy under section 10(1) and 10(2), provided their turnover in the preceding year does not exceed 1.5 crores. Mohan Enterprises is engaged in trading of pan masala in Rajasthan and is registered in the same state, Rajasthan. 1.5 crores. Trader of pan masala, can they opt for composition scheme? Yes. Sugam Manufacturers has registered office in Punjab and Haryana and supplies goods in neighboring states. Neighboring states means they are making interstate supplies. So a person making interstate supplies can opt for composition scheme. They cannot opt for composition scheme because we have a restriction now. A person making interstate supplies of goods or services cannot opt for composition scheme. Then question number 4. Subramanian Enterprises has 2 registered place of business in Delhi. Its aggregate turnover for the preceding year for both the place of business was 120 lakhs. It wishes to pay tax under composition levy under section 10(1) and 10(2) for one of the place of business in the current year, while under normal levy for the other. You are required to advise Subramanian Enterprises. So therefore, all registrations they can go for composition scheme or all registrations normal scheme, but they cannot decide between composition scheme and normal scheme for each registration. Then question number 5. Messrs. United Electronics, a registered dealer, is supplying all types of electronic appliances in the state of Karnataka. Their aggregate turnover in the preceding financial year by way of supply of appliances was 120 lakhs. The firm also expects to provide repair and maintenance service of such appliances for the current financial year. So far they have been doing sale of appliances. Now they want to provide repair and maintenance. So when they provide repair and maintenance, to what extent they can provide? 10% of turnover during previous year. What is 10% of turnover during previous year? 120 lakhs into 10%, 12 lakhs or 5 lakhs, whichever is higher. Which is higher? So to the extent of 12 lakhs only they can provide the services. Whether the firm can opt for composition scheme under 10(1) or 10(2)? Yes, they can. For the current year. Why? Because they are doing business in which state? Karnataka. For Karnataka, what is the limit? 150. What is their turnover during previous year? 120. So current year they can opt for composition scheme. Then if yes, up to what amount they can render the services? 12 lakhs. 10% of turnover or 5 lakhs, whichever is higher, so 12 lakhs. Then question number 6. Examine in relation to composition levy scheme under CGST Act 2017 and the rules made thereunder in the following individual cases. This is a May 19, so old syllabus question given for 5 marks. So actually what I did in the practice manual is that I have taken all the past exam questions, RTP, ICA study material questions, MTP questions, and I have answered it as per the latest amendments. Okay. So even if you refer the ICA study material, sometimes the answers given there will be wrong. Reason being, they have given long back, like May 23 book only, not May 23. So November 22 book only, they are still following. May 23, November 23, they have not updated. They gave only supplementary study papers and all. So that's why some answers which you refer in the study material, even the suggested answers that you see may have some different answers. What I did is that I have updated everything as per the latest provisions. Okay. So you can buy this book so that you will be having like updated answers and you can take it for practice. How you need to use it for practice, you know, when you see the question, randomly you take a question and you take a white paper, write the answer and cross check the answer what is given there. Now you will know what are the mistakes in presentation that you are doing. Okay. Then question number 6. Examine in relation to composition levy scheme under CGST Act 2017 and the rules made thereunder in the following individual cases. Ketu is a manufacturer of ice cream and pan masala in the state of Maharashtra. His turnover for the year does not exceed 1.5 crores. He wants to register for composition levy. Is he eligible for it? Because he is a manufacturer of ice cream and pan masala which are notified goods, so he cannot opt for composition scheme under 10.1. Suppose if you get a question, can he opt for composition scheme under 10.2a? Even he cannot opt for composition scheme 10.2a because even for 10.2a also the same restriction is applicable. Then second, Jadoo of Gujarat opt for composition scheme during a financial year 2021, but on 10/2/2021 his turnover crosses 1.5 crores. Can he continue under the composition levy scheme? Why? So what is the financial year 2021? Okay, 2021 financial year turnover exceeds 1.5 crores. So therefore, so next year he cannot, even for the current year also, for the remaining period, that is after February, he cannot go for composition scheme. Then 3, X Limited has 2 branches, K and L in Delhi, having same permanent account number. Branch K opt for normal scheme and branch L, they want to go for composition scheme. Already we discussed that they cannot do that. Then these are all also normal questions. Let's see some good computation involved questions. Say this. Question number 9 you see. Question number 9. So whatever questions I am not discussing, those are all for your practice, okay. So whatever questions I discuss, just put a tick of that. So remaining questions you can practice. Miss Chanchal started providing beauty and grooming services and inaugurated Care and Care Beauty Center in Janakpuri, Delhi on 1st April 2000. She opted to pay tax under 10.2a, beauty parlor, so services, so 10.2a only. The aggregate turnover of Care and Care Beauty Center for the quarter ending 30th June was 20 lakhs. Further, for the half year ending 30th September, the turnover reached 50 lakhs. Care and Care Beauty Center recorded a rapid growth and the turnover reached 70 lakhs by the end of October. Determine the total liability of Care and Care Beauty Center by the end of October. And Care and Care Beauty Center wishes to opt for composition scheme from the next financial year. Next financial year can they opt? Why? Current year it already exceeded 50. Now, what is the rate of GST on these services? 18%. So calculate the GST liability. What will you do? First you will take 70 lakhs. Divide it into 2. What is the turnover under composition scheme? 50. What is the turnover under normal scheme? 20. And on that 20 you will take which rate? 18%. On that 50, whether you need to do any deduction? Yes, you have to. This year only they have started business. For a service provider, what is the applicable threshold limit? 20. So 50 minus 20. What is the balance? 30. On that 30 only they will pay GST under composition scheme. Is it clear? Already we did one question. The same question what we did. So it was under 10.1. Now it is under 10.2a. What is that? What is the total turnover? 70 lakhs. I told you to divide it into 2. What is the turnover under composition scheme and what is the turnover under normal scheme? Okay. So what is the turnover under composition scheme? 10.1 or 10.2a? 10.2a. So 50 lakhs. And here 20 lakhs. And they started beauty parlor this year only. So means first 20 lakhs is pre-registration turnover. So minus 20 lakhs. Pre-registration turnover we should exclude. So what is the remaining? 30 lakhs. And here 20 lakhs. So what is the GST? Composition scheme. Which composition scheme? 10.2a. 10.2a composition scheme, what is the rate? 3%. So 30 lakhs into 3%. 90,000 CGST, 90,000 SGST. Whereas here 18%, which means 9%, 9%. So 20 lakhs into 9%. 1 lakh 80, 1 lakh 80. You understood the answer? So you need to present it like first quarter no GST. Why first quarter no GST? 20 lakhs. Thereafter remaining 30 lakhs, you need to pay 6%, 1 lakh 80. Thereafter on remaining 20 lakhs, you need to pay 3 lakh 60. Got it? Then next one, you see question number 11. Question number 11. Mr. Jafar of Assam provides the following information for the preceding financial year 18-19. You are required to find out the aggregate turnover for the purpose of eligibility of composition levy and determine whether he is eligible for composition scheme or not. So the question is what? Eligibility means we need to compute aggregate turnover. Say this, value of taxable outward supplies out of the above 10 lakhs was in the course of interstate transactions. Whether we will take 50 or 40. We are required to compute aggregate turnover. Aggregate turnover, whether we need to take 50 or 40. 50, even interstate supplies, we will take in aggregate turnover. Then, value of exempt supplies, which includes 30 lakhs on interest on loans or advances. How much we will take? 70 or 40? 40. So 50 plus 40, 90. Because interest on loans, advances, deposit should not be taken into aggregate turnover. Then, value of inward supply on which he is liable to pay tax under RCM. Will it be taken? No. Value of exports, 5 lakhs. Will it be taken? Yes. So therefore, how much is the total aggregate turnover? 95 lakhs. And whether it exceeds, what is the state in which they are doing business? Assam. For Assam, what is the limit? 150 lakhs. Whether it exceeds 150 lakhs? No. So can they opt for composition scheme? Yes. Sir, for Assam it is 75. No, for Assam it is not 75. For Arunachal Pradesh only 75. For Assam it is 150 lakhs. So current year can they opt for composition scheme? Yes. Current year they can opt for composition scheme. Then this is the question actually they asked for latest exam, May 23 exam, who are not eligible for composition scheme. Had the student remember that S9 RCM, so they can easily write that. Okay, already this was tested. So these are the standard of questions that we have in composition scheme. Okay. Now we will see registration under GST. We will complete that registration. So 3 sections we have. Okay. Those 3 sections we will discuss. Section 22, 23 and 24. Okay. Then we will wind up for today. Okay. Please concentrate. So we are going to discuss 3 sections in registration. So segment 9 is registration under GST. So we have total 9 sections in this registration chapter. Section 22, 23, 24 deals with legality. Section 22 says when a person is required to get registered. 23, when a person is exempted from registration, not liable to get registered. 24, compulsory registration. These 3 sections are very, very important for CA intermediate exams. Then we have section 25, 26 and 27 which deals with 25 procedure for registration, 26 deemed registration, 27 that is special provision for casual taxable person and non-resident taxable person. So basically these 3 sections are procedure. The next 3 sections we have 28, 29 and 30. 28 amendment in registration, 29 cancellation of registration and 30 revocation of cancellation of registration. So this section 25 to 30 is purely for MCQ purpose, or rarely you will get a short note questions. Okay, but very, very important sections. If you see the first 3 sections, 22, 23 and 24. Remaining and all is theory and mainly for MCQ purpose only. Okay. Now, section 22, 23, 24. What does 22 says? When a person is required to get registered. 23, exempted from registration. 24, compulsory registration. First we will see 24, compulsory registration. When a person is compulsorily required to get registered. So what is the meaning of compulsory registration? Irrespective of the aggregate turnover, whatever may be their aggregate turnover, they need to always get registered. That is known as section 24, compulsory registration. Who are compulsorily required to get registered? So that you can remember with a keyword, compulsory registration, I creations. I creations. Okay. So what is this I creations? I is interstate supplies of what? Goods or services or both are only goods. So a person who is making interstate supply of goods, it's already there in the book, but I am just writing because I like writing. Okay. So it's already there in the book. So please concentrate. So I for what? Interstate supply. Interstate supply of what? Goods or services? Goods, not services. So a person who is making interstate supply of services, are they compulsorily required to get registered? No. Only a person who is making interstate supply of goods. That too, other than handicrafts. Other than handicrafts. They are compulsorily required to get registered. So a person who is making interstate supply of handicrafts, are they compulsorily required to get registered? No. Only a person who is making interstate supply of goods other than handicrafts is compulsorily required to get registered. Then C for casual taxable person. Already we know who is a casual taxable person. Who is casual taxable person? A person who comes from other state to this state, who is not having any physical place of business in this state and is making supply of goods or services is known as casual taxable person. Basically, lot of actors who come from other states, mainly Mumbai to Tamil Nadu, to act in the movies will be coming under, casual taxable person. Even because nowadays it is a fancy, na? What is a pan-India movie? If you rope in actors from other languages, it's a pan-India movie. So Jailer is a pan-India movie. How? What is the story in Jailer? Revenge story. Okay. And how many years we are seeing revenge stories? Every actor, you name an actor, every actor acted in that story. What is that? Son, he will go in search of son, and either the son will be a good person or son will be an idiot. Only this. Okay. In many movies we have in this. But even the Jailer is super hit. Pan-India movie. Why Pan-India movie? Because Karnataka we have Shivraj Kumar, and Kerala we have Mohanlal, Andhra Pradesh we have Sunil, Maharashtra we have Tamanna. Why Tamanna is there really I don't know in the movie. Okay. Except for that song. Okay. And it became a pan-India movie. Like that, again another movie is being released. Okay. So Puja yesterday only happened. So Kerala, Andhra, again you bring Maharashtra, Amitabh Bachchan, everyone and all they will come. Again another pan-India movie. You understood or not? So, therefore, now it has become a fancy that if you take an actor from the other industry, you call it as a pan-India movie and it will become a super hit. And therefore, the actors who come from the other state to this state, who is not having any physical place of business in this state, are called as casual taxable persons, and they need to register in that state and they have to pay GST. Not only service providers, even goods also. Usually, this festive season started, so lot of factory outlets we will be seeing. That too, so Diwali, this Navaratri and Diwali, this is the exact time where lot of people from north, they will be bringing the garments to Chennai and they will open a factory outlet and they'll say flat 70% off, buy 2 get 8 free, like that and all they will be selling. So what are these garments? These are rejected garments somewhere in Gujarat. In Gujarat, so export and all will happen. There they will reject these garments, stating that these are all of not good quality. That these Vadakkans will be bringing here and they will be selling to us. You know where this got manufactured? In our Tirupur only. You understood? Here it is manufactured. It will go to Gujarat. There it gets rejected. This manufacturer will have laziness in bringing that because unnecessarily we need to pay a freight cost. We will throw it there like that. They will sell it for scrap. That someone will buy there, will be bringing here, and we will, like dogs and pigs will go crazily, we will buy that. Okay. I really don't know what is the logic in this here, and we will buy that and crowd and all will be so much crowd. Okay. Why? Buy 2 get 8 free. Okay. And you know, this kind of offers they will be bringing, and what they do, they come hit and run strategy actually. If it is quality issue also, we will not question. Why? This person will come and we will stay for 10 days or 15 days, sell it and he will leave. So therefore, these people will not pay GST in that state where they belong to. They will not pay GST in the state where they are doing business also. So that's why casual taxable person is compulsorily required to get registered. They need to register and pay GST in the state in which they are doing business. Okay. But we have a relaxation other than handicrafts. Other than handicrafts. Okay. Then R. R for, so RCM under section 9(3). What is RCM 9(3)? So a recipient who is liable to pay GST under 9 subsection 3 is required to compulsorily get registered. Then E for e-commerce operator under section 9(5). Every e-commerce operator who is paying GST under 9(5) is compulsorily required to get registered. Then A for agent. Agent supplying, agent supply, agent making supply on behalf of principal. Agent making supply on behalf of principal. So every agent who is making supplies on behalf of principal, that agent is also compulsorily required to get registered. Usually this agency model we see in FMCG goods. So like HUL, ITC, P&G. So in this consumer goods, what will happen? The manufacturer will be appointing agent in every place and they will send the stock to the agent. This agent will be selling the stock to the retailers in every locality. So these agents are compulsorily required to get registered if they are making supply on behalf of principal. Then T for TDS deductor. So under GST also there is a concept of TDS, and every TDS deductor is compulsorily required to get registered. Then I, that is input service distributor. Already we discussed who is an input service distributor while discussing ITC. I told you there is a head office which takes the input service, distributes the ITC to the branch officers. So that head office is known as input service distributor. Then O, that is OIDAR supplier. Where is this OIDAR supplier located? Outside India, and they are making supplies to whom? When they are required to pay GST. OIDAR supplier outside India, when are they required to pay GST? So if they are making supply to NTOR, correct or not? So that OIDAR supplier located outside India. OIDAR supplier located outside India, and they are making supply to non-taxable online recipient, they have to pay GST. So they are compulsorily required to get registered. Then N for NRTP, non-resident taxable person, who come from outside India to India and is not having any physical place of business in India. Then yes, supplier of goods through e-commerce operator. Supplier of goods through e-commerce operator. So these are the cases where they are compulsorily required to get registered. Okay. Now, in exam what they do, they will be giving a question, one MCQ they will give. In which of the following cases a person is compulsorily required to get registered? A, B, C, D. In that, we need to check whether this I creations comes. If yes, that will be the answer. Okay, pa? So, come on, tell me, what are the cases where compulsory registration is applicable? I, interstate supply of goods. Other than, okay, then C, casual taxable person. Other than, then R, RCM under 9.3. 9.3 or 9.4? 9.3. Then next, ICRE, e-commerce operator. When? All e-commerce operators, no, mainly when they are liable to pay GST under 9.5. 9.5. Okay, HATE, those cases. Then next, A, agent making supply on behalf of principal. Then T, TDS deductor. I, input service distributor. O, OIDR supplier. N, non-resident taxable person, NRTP. Then yes, supplier of goods through e-commerce operator. So these people are compulsorily required to get registered irrespective of threshold limit, and they can never cancel their registration. They cannot cancel their registration. They cannot say, sir, my turnover falls below the threshold limit, sir, please cancel my registration. No, they are always registered. Now we are discussing section 23, who are exempted from registration. Section 23 talks about exemption from registration. Exempted from registration means they are not required to get registered. Okay, exemption from registration. Who are all exempted from registration? 4 cases. 4 cases you should remember. Number 1, if I am making exclusively exempted supplies. Suppose if I am making exclusively exempted supplies, I am exempted from registration, I am not at all required to get registered. Then number 2, exclusively means what? I should not be making taxable supply. If I make taxable and exempted, it will get total. And I have to register if my aggregate turnover exceeds threshold limit. If I am only making exempted supplies, I am not required to register. Same way. Exclusively non-taxable. Exclusively non-taxable. Who is making non-taxable supplies? I told you, na, alcoholic liquor and petroleum products. You take a liquor shop. They are making only non-taxable supplies. Are they required to register? No. Suppose if they sell side dish also, then are they required to register? Yes. If their aggregate turnover exceed threshold limit. That's the reason why. So, Saraku they will sell in the main shop. For side dish, they will open a separate shop outside. In that separate shop, they will be selling pickle, then water cup, water bottle, Pepsi, etc. and all. Okay. Then, next number 3. Now, many shops are there, you can see. Okay. General knowledge only. Then, next we have exclusively RCM supplies. But don't laugh about that and all here, because it's a very big business. And if not, so one person got arrested in that just by taking 10 rupees, 20 rupees extra on one bottle. So one person got arrested and he has accumulated 2000 crores of illegal wealth. 10 rupees, 20 rupees extra itself is 2000 crores means, you think of what is the turnover, what is the market share. It is bigger than the Tamil film industry. You understood or not? So, it's a very big industry. So, definitely it should come into GST. We should pray for that. Okay. And exclusively exempted, exclusively non-taxable, and exclusively RCM supplies. Means what? If my outward supplies is fully covered under RCM, then I don't have to register. That's why if you remember, I told you advocate. Advocate, either they will be making exempted or their outward supply will be RCM. So they are not at all required to get registered. Same is the case of doctor. Doctor, their outward supplies will be always exempted. So a doctor is not at all required to get registered. Are you understanding this? Because they are making exclusively exempted or exclusively non-taxable? Exclusively RCM supplies. Number 4, agriculturist. Agriculturist. So agriculturist is a person who is engaged in sale out of cultivation of land. So when he cultivates the land, he gets some produce. Na? If he is selling only that agricultural produce, he is not at all required to get registered. That agricultural produce may be taxable or may be exempted. For example, if you see rubber. So in Kerala, lot of people have this as their prime activity. They will have a rubber plantation and they will collect that rubber milk. So from the plant they get the rubber milk and they make the rubber and they will be selling. So this is actually agricultural produce. That rubber milk what they get is an agricultural produce. But even then it is taxable, but they are not required to pay GST. Why? Because an agriculturist is not at all required to register and pay GST, even though it may be taxable income. You got it? That may be a taxable turnover. Even then they are not required to register and pay GST, whatever may be the turnover. Even it can be 200, 300 crores also. If they are only engaged in sale of produce out of cultivation of land, they are not at all required to register. So tell me, who are the 4 people not required to get registered? Come on. A person who is making exclusively exempted supplies, a person who is making exclusively non-taxable supplies, exclusively RCM supplies, and agriculturist. Now we are going to see section 22. What is section 22? When a person is required to get registered. As per section 22, a person is required to get registered as and when aggregate turnover exceeds threshold limit. As and when aggregate turnover of a person exceeds threshold limit, they are required to get registered under 22. What is this threshold limit? What is this threshold limit? What is aggregate turnover? What is aggregate turnover? Taxable, exempted, non-taxable, zero rated. It does not include interest is included. Interest is not included in aggregate turnover only for composition scheme, but interest on loans, advances, deposits is included in the aggregate turnover for registration. You understood? While computing the aggregate turnover for composition scheme, interest on loans, advances, deposits you take out. But while computing the aggregate turnover for registration chapter, you need to include interest income. Okay, then. So it excludes only 2. What are those 2? Inward supplies under RCM and taxes. These 2 only will be excluded. So that is the meaning of aggregate turnover. You can see here I have given aggregate turnover includes taxable supplies, exempted supplies, exports and interstate supplies, and it will be computed on all India basis. But it excludes what? CGST, SGST, UTGST, IGST, compensation cess and inward supplies. You just write down here, note, interest on loans or advances or deposits, interest on loans or advances or deposits are not included in aggregate turnover only for composition scheme, full stop, but for registration it is included in aggregate turnover. But for registration it is included in aggregate turnover. So interest on loans, advances, deposits are not included in aggregate turnover only for composition scheme, but for registration it is included in the aggregate turnover. Okay. Then next, so what we are discussing is what is the applicable threshold limit. So this applicable threshold limit depends pa. If you are doing business in single state or you are doing business in multiple states, already the chart is there, but I am writing it just to convey the information to you step by step. So, aggregate turnover exceed threshold limit, a person is required to get registered as per section 22. Now, it is divided into two. First, check whether a person is engaged in business with respect to a single state. You are doing business in a single state or engaged in business with respect to multiple states. Can you see that? Is it there or not? So, we have a chart now. You need to just refer to this chart. Person engaged in business in only one state, engaged in business in more than one state. This chart only I am just drawing again. Okay. So, you are doing business only in single state or you are doing business in multiple states. If you are doing business in single state, again check what is that state. Is it MMTN? What is MMTN? Manipur, Mizoram, Tripura, Nagaland. If yes, then the limit will be 10 lakhs. Let it be goods or services, the applicable threshold limit will be 10 lakhs. Got it? These four are called as special category states. Manipur, Mizoram, Tripura, Nagaland. Okay. Manipur, Mizoram, Tripura and Nagaland. Suppose if you are doing business in U-stamp states. What is that U-stamp states? U for Uttarakhand, then S for Sikkim, T is Telangana. Then next A, not Andhra Pradesh, Arunachal Pradesh. Arunachal Pradesh. M, Meghalaya and P, Pondicherry or Puducherry. So, for these 6 states, okay, for these 6 states, what are the 6 states? U-stamp states. Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Pondicherry. The limit will be 20 lakhs. The limit will be 20 lakhs. Let it be goods or services, it will be always 20 lakhs. Then, if you are doing business in other states, there are many other states like Tamil Nadu, Karnataka, Maharashtra, Madhya Pradesh, like that, other states. Again check, are you exclusively engaged in supply of goods? Only goods. Only goods, then the limit will be 40 lakhs. If you are doing only goods, then the limit will be 40 lakhs. No, other cases, otherwise. Otherwise means what? Both goods and services or only services, then the limit will be 20 lakhs. So, you need to remember 3 points. What is that? First, you are doing business in a single state. Check whether that single state is MMTN. Then the limit is 10 lakhs. What is MMTN? Manipur, Mizoram, Tripura, Nagaland. Then you are doing business in single state. That single state is U-stamp. What is U-stamp? Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Pondicherry or Puducherry. Then the limit will be 20 lakhs. You are doing business in other states. Now, only goods, both goods and services, 20 lakhs. Now, one exception is there. If you are engaged in only supply of goods, but if those goods are notified goods, if you are engaged in supply of notified goods, what are those notified goods? Those list of notified goods which we saw in composition scheme minus aerated waters. So, what is the list? Pan masala, okay, ice cream, so edible ice, so tobacco, next bricks and roofing tiles. So, bricks and roofing tiles. In this case, 40 lakhs limit is not applicable. You are exclusively engaged in supply of goods only. But you are engaged in supply of these list of notified goods. Need not be manufacturer, even trader also. Composition scheme, manufacturer. Registration, you are a trader or manufacturer. Are you getting this? Whether you are a trader or manufacturer of these notified goods, then you will not get 40 lakhs as the limit. Then automatically the limit will be 20 lakhs. Now concentrate. There is a supermarket in Tamil Nadu. That supermarket is engaged in only sale of goods. They have a refrigerator. In that refrigerator, they keep ice cream and they will be selling the ice cream. What will be the applicable limit for them? 40 lakhs or 20 lakhs? 40 lakhs. 40 lakhs. That's what. You understood it differently. 40 lakhs. Actually, 20 lakhs is if they are exclusively engaged in sale of pan masala, exclusively engaged in sale of ice cream, exclusively engaged in sale of tobacco products. Are you understanding this? So, ice cream shop in Tamil Nadu will have what limit? 20 lakhs, because they are exclusively engaged in sale of ice cream. But a supermarket which is selling ice cream, a supermarket which is selling tobacco products, a supermarket which is selling pan masala, okay, then in that case the limit will be 40 lakhs only. But there is a pan shop which will be engaged in sale of pan masala, tobacco products. The limit will be 20 lakhs. Now you got the clarity, okay. So then this is about you are doing business in a single state. Suppose you are doing business in multiple states, okay, then what is it you need to do? Which means you are not doing business in a single state. There are multiple states involved. Again, you divide into 3 points. First, whether one of the state is a special category state and taxable supplies are made from that state. Out of the given state, one of the state is in MMTN. One of the state is in MMTN and taxable supplies are made from that state. And taxable supplies are made from that state. Are you getting this? One of the state is in MMTN and taxable supplies are made from that state. Both the conditions. Out of the given states, one state should be in Manipur, Mizoram, Tripura, Nagaland. And in that state, you should make taxable supplies. Then what will be the limit that will be applicable to you? 10 lakhs. Suppose if none of the states is in MMTN use stamp, none of the states is in MMTN use stamp. None of the states is in MMTN use stamp, okay, and exclusively supply of goods. Exclusively supply of goods. Then what is the limit? Then the limit will be 40 lakhs. Then the limit will be 40 lakhs. Suppose if it is other cases, balancing figure, what will be the limit? The limit will be 20 lakhs. Understood? One of the state is MMTN and taxable supplies are made from that state, then the limit will be 10 lakhs. None of the states, out of the given states, not even one state should be in MMTN use stamp and you are exclusively engaged in supply of goods, then the limit will be 40 lakhs. And in other cases, the limit will be 20 lakhs. Here also that exception is there. If you are engaged in sale of pan masala, tobacco products, bricks and roofing tiles, aerated, other tobacco products, etc., not aerated waters, then the limit will be automatically 20 lakhs. 40 lakhs will not be applicable. Now, concentrate, answer this question. You should do this. So, I am located in Andhra Pradesh. I am doing business in Andhra Pradesh. This is not Arunachal Pradesh. Andhra Pradesh, Telangana, Nagaland. Okay, Andhra Pradesh, Telangana, Nagaland. Taxable goods, exempted goods, taxable goods, exempted goods. So 5 lakhs, and exempted goods 5 lakhs, Telangana 10 lakhs, Nagaland 3 lakhs. What is my aggregate turnover? What is my aggregate turnover on all India basis? It should never be computed state wise. Aggregate turnover is always computed on a all India basis. So what is the aggregate turnover? 20. So aggregate turnover is 28 lakhs. While counting aggregate turnover, we should take taxable, exempted, everything. Okay. So aggregate turnover is 28 lakhs. Now, what is the applicable threshold limit? Come on. What is the applicable threshold limit? Now, point number 1. One of the state is MMTN. Yes, Nagaland. And taxable supplies are made from that state. No, so 10 lakhs will not come. Then, none of the state is in MMTN use stamp. We have MMTN Nagaland, use stamp Telangana. So 40 lakhs will never come. So therefore, the limit will be 20 lakhs. The limit will be 20 lakhs. So whether aggregate turnover exceed threshold limit? Yes. So where they should register? All states? No. That person is liable to get registered and they need to register in each state from where they make taxable supplies. They need to register in each state from where they make taxable supplies. So therefore, they need to register in Andhra, Telangana, but they don't have to register in Nagaland. Why they don't have to register in Nagaland? Because they are making exempted supplies. But exempted turnover taken for aggregate turnover and the overall aggregate turnover exceed threshold limit. So they need to register, but that person is required to register where? See, person liability to register depends upon aggregate turnover. The moment the person is required to get registered, where and all they need to register? Each state from where they make taxable supplies. So that person is liable to register. Where? In Andhra, Telangana, but not in Nagaland. Why not in Nagaland? Because in Nagaland they are making exempted supplies. But when they will register in Nagaland, as and when they start making taxable supplies in Nagaland, they should register because their aggregate turnover long back exceeds threshold limit. Understood? So that is about these steps that you need to remember. And so you can see some more questions on this in page number 182. Illustration 1. Page number 182, illustration 1. Mr. X is exclusively engaged in supply of exempted goods in Sikkim. What is the limit for Sikkim? 20 lakhs, only one state. Sikkim is in use stamp. So 20 lakhs. But they are exclusively engaged in supply of exempted goods. Are they required to register or not required to register? Not required to register as per section 23. Then next, illustration 2. Mr. X is engaged in making supply of goods in Tamil Nadu, Andhra Pradesh, Meghalaya. Taxable value of goods, exempted value of goods. What is their aggregate turnover? Count. 5 plus 5, 10 plus 8, 18, 22. So their aggregate turnover is 22 lakhs. What is the applicable threshold limit? Number 1, whether one of the state is in MMTN. What is MMTN, pa? Manipur, Mizoram, Tripura, Nagaland. Where we have pa there? It's not there. And therefore 10 lakhs will not come. Okay. Whether one of the state is in MMTN use stamp. Yes. So 40 lakhs will not come. Correct. So because 40 lakhs will come only if none of the state is in MMTN use stamp. So what is the applicable limit? 20 lakhs. What is their aggregate turnover? 22 lakhs. Applicable threshold limit 20 lakhs. Are they required to register? Yes. But where they should register? Tamil Nadu and Andhra Pradesh, but not in Meghalaya. And they need to register in Meghalaya as and when they make taxable supplies. Then next, illustration 3. Mahadev Enterprises, a sole proprietorship firm, opened a shopping complex dealing in supply of goods at multiple locations, that is in Himachal Pradesh, Uttarakhand and Tripura in the month of June. It has furnished the following details relating to supply made at such multiple locations for the month of June. So, Himachal Pradesh, Uttarakhand and Tripura, they make taxable supplies, exempted supplies, everything they are making. Now, their aggregate turnover is easily crossing 40 lakhs, correct? 22 lakh 50, 21 lakh, 7 lakh, 6 lakhs and all, if you see, it crosses 40 lakhs. Now, what is their applicable threshold limit? First, whether one of the state is in MMTN, which one? Tripura, and taxable supplies are made from that state, first line. Yes, so therefore, the applicable threshold limit will be 10 lakhs. And whether their aggregate turnover exceeds 10 lakhs? Yes. So, are they required to register? Yes. Where should they register? See this data and tell me where they should register. They should register in Himachal Pradesh and Tripura, but not in Uttarakhand. Why? Because they are making exempted supplies. You got it? Then, determine whether Mahadev Enterprise is liable to be registered under GST law and what is the applicable threshold limit we have seen. Now, second, explain with reasons whether your answer in one will change in the following independent cases. If Mahadev Enterprises is dealing in taxable supply of goods only from Himachal Pradesh, means we don't have this data. Now, only Himachal Pradesh. Okay. So, what is the limit? They are engaged in goods. So, the limit is 40 lakhs. Now, what is their turnover? Whether it exceeds 40 lakhs. Are they required to register? They are not required to register. That is the answer. Then, if Mahadev Enterprises is dealing in taxable supply of goods and services only from Himachal Pradesh, what is the limit? 20 lakhs. Why? Goods and services. And what is their turnover? Whether it exceeds. So, therefore, they are required to register. See, if Mahadev Enterprises is dealing in taxable supply of goods only from Himachal Pradesh and also has affected interstate supply of taxable goods amounting to 4 lakhs, then they are making interstate supply of goods. So, compulsorily required to get registered irrespective of the threshold limit. You may get a question like this, which is consolidated of 22 and 24. Okay. So, mark this illustration 3 as very important. Then illustration 4, last illustration, after this we will listen. We completed 22, 23, 24. These are the applications we are seeing. Then illustration 4, A Limited is registered in, A Limited is doing business in Tamil Nadu, Kerala and Nagaland. What is the aggregate turnover? 4, 5, 6, 7, 8, 9, 10, 11, 12, 12 lakhs. And whether one of the state is special category state? Yes, Nagaland. And taxable supplies are made from that state? No. So, the applicable limit will be, why 40 lakhs will not come? None of the states should be in MMTN use stamp, but Nagaland is there. Sir, but exempted supplies are made. Ignore. That is not relevant. None of the states should be MMTN use stamp. So, then only 40 lakhs. Here one state is in MMTN use stamp, so 40 lakhs will not come. So, 20 lakhs only. For MMTN only you see taxable supplies. But for the second point, if you are doing business in that state, either taxable or exempted, you will not get 40 lakhs limit. So, therefore, the applicable limit is 20 lakhs. But what is their turnover here? So, it does not exceed. So, they are not at all required to get registered. Okay. So, we completed 3 sections, 22, 23 and 24. Okay. And listen, 1 second. In 22, there are 3 special cases where you are required to register, but you can make application for cancellation of registration. That is, see this, page number 181 you see. There are 3 situations in section 22, that is, if you are registered under earlier law, or in case of transfer of business, or in case of merger, demerger, etc. In these 3 cases, registered under existing law, or business is transferred, or transfer pursuant to amalgamation or demerger. In these 3 cases, you have to register. That is, you have to register if you are already registered under old law. If there is a transfer of business, transferee should register. In case of merger or amalgamation, the resulting entity should register. Okay. But if their aggregate turnover falls below threshold limit, they can make application for cancellation of registration. But in case of section 24, compulsory registration, they should always register. Even though their turnover falls below threshold limit, they cannot make application for cancellation of registration. Got it? So we fully completed 22, 23, 24. The remaining 6 sections, that is 25 to 30, we will discuss in tomorrow's session. The agenda for tomorrow is that we will be completing the balance portions part. I'll tell you what are the balance portions we have. The registration remaining sections, payment process, returns, then we have time of supply, invoice and time of supply, then taxable event under GST. So then we have this e-way bill and GST practitioner. So all these miscellaneous topics we are going to discuss and complete tomorrow. Okay.